Hello and welcome to all of you watching and listening to the SIX Virtual Spring Conference. I want to thank SIX for bringing together 50 mining companies over the next 4 days. They'll be here to tell you and sell you their stories. So don't forget their Q&A sessions on Thursday and Friday in the breakout rooms. Do take advantage of those. It's important that you do. Ask the questions which are important to you and your investing strategy, to your decision making. Hold their feet to the fire. Competent CEOs who are in control actually enjoy it. Believe me, they do tell me that afterwards when they've been interviewed by us at Crux Investor. So be bold with your questions. It is your money after all, I would say that, okay? I think yesterday you'll have heard Rick Rule and Gwen Preston share their thoughts as to where they see the opportunities in the market. In fact, during the week, you'll probably hear a lot of commentary about the Russia-Ukraine situation and the effects of sanctions on the movement and pricing of specific metals. I'm not going to try and be one of those experts. I think there'll be lots of people coming out of the woodwork with their opinions. Look, some of those effects will be temporary and some will not. Some markets and companies will be the beneficiaries of all of that change. In fact, some investors will also be the beneficiary of this change. So if you want to be one of those beneficiaries, I suggest that you get a better understanding of the macro, think about what your plan is, what your strategy is, and if in fact you've got an entry or exit strategy in place. Now remember, paper gains don't mean anything until you check out with more than you put in. Some people forget that and join in with the personality of the cult. Don't be one of those people. And of course, it would be remiss of me not to mention that we do share some of these ideas and strategies and exits on various shows on cruxinvestor.com app. Do go and have a look. But we're here today because 6 virtual conferences have put on a wonderful show for you. I want to ask you to, don't just look at the companies that you're invested in. Go and listen to some of the other companies as well. Broaden your reach, broaden your horizon, and the opportunities will open up. Okay, so few words from me to perhaps to some of the newer investors. We've seen lots of people coming from the tech space into the mining arena, trying to work out and make sense of it all. It's difficult for sure. In fact, this could equally apply to some of the people who got a little bit lazy, a little bit casual, a little bit overconfident to I'd ask you to make a real effort to understand this sector. So, this week is a fantastic opportunity to see the breadth of the stories available to you, to hear the different ways that the companies and the CEOs tell their narrative and how they're going to insert themselves into the coming halcyon days of mining and how they're going to make you money. Little note, if there are some of you who can't be bothered to do your homework, please let someone else manage your money. We saw Sprott on show yesterday. I think they'd be glad to help you. ETFs are fine, the S&P is fine. In fact, on average, over time, they will outperform most retail investors. But however, if you're looking for the fun and the sex and the violence of the equities market is in your portfolio or as a part of your portfolio, I want to give you the following 6 thoughts. See what I did there, folks? So my 6 tips to you are: 1, know yourself. Be honest. Have an honest conversation with yourself about the type of investor that you are and that you are not, and then invest accordingly. That's a big one. Most people don't start there. They believe they are something else or want to believe that they're something else. They're not. Have a portfolio strategy. Spread your risk. Have non-correlated investments in different sectors. I can't tell you the amount of emails I get on a weekly basis from the wives of gentlemen who have invested their life savings on 1 or maybe 2 projects that haven't quite worked out. It's incredible. It's very, very sad, but all too often, I think, pride, it's definitely taken a fall in those cases, but you've got to use brains, start thinking about how you are going to create your portfolio, write it down. Third point, I would say, greater fool theory. And I apologize to people who think this is all simple stuff, but there's a lot of beginners on here who would just trying to work a way forward, trying to understand how they invest. Young investors, perhaps people haven't got it quite right to date. So the Greater Fool Theory, do it your way. Don't blindly follow others. Don't listen to what other people say. Do your work. Other retail investors have got a different path to follow. Their entry point is different. Their exit timing will be different. They've got different needs and demands to you. And they're not on your side. They'll be great friends, but they've got a different path to follow from you. So think about what's right for you, okay? Point 4, have a strategy. When you're entering and exiting investments, write it down, look at it often. None of us as good as we think. We forget, we get casual, we get lazy. Bull markets don't make smart investors, they make lucky investors. So understand the macro, so that your micro strategy is more efficient. Take time to understand the bigger picture, okay? Over half the people listening to this won't have an exit plan, but instead will leave it to gut feel. It doesn't usually work out that well. Point 5 is confirmation bias. There will be good companies and bad companies that you'll meet along the way. In fact, here's an interesting one. An Australian fund manager once said to me that only 1 out of 3,500 mining companies would actually become a producer. It's a scary thought, isn't it? Well, what does that mean? That means that there's going to be a lot of losses and a lot of false starts along the way. And it also means not all of your investments are going to be winners. So you've got to be prepared, as to when you get off that train. Only listening to what you want to hear is not a way of making money. And I see that a lot in chat rooms, people just listening to what they want to hear. It makes me think they're not actually here to make money. In fact, in the immortal words of Kenny Rogers, you've got to know when to hold them, you've got to know when to fold them, and know when to walk away, and know, this is a good one, and know when to run. And sometimes you just need to run. Don't get caught up in the story and the personality of the cult. You're going to see a lot of great stories, a lot of great big narratives this week. I think, as I say, I think we're coming into a halcyon period for investing in the mining space. You've got to pick the right stories. You've got to think about, what's right for you, what's right for your family. You're here to make money, protect your own wealth, create wealth for the future generations, because they are going to have a tough time if all of the economists are to be believed. We've just come off of a huge period of printing money for fun. The geopolitical situation is not going to help at all. So be smart, be brave, remember to make money. Just don't come along for a ride. And most of all, enjoy this week at the 6 virtual conference. Thank you very much.
Hi, everybody. Thank you for joining us here at Silver Hammer. My name is Morgan Lekstrom. I'm the president and CEO of the company. And I want to talk to you today about the exciting opportunity that is Silver Hammer Mining Corp. We're going to have a couple forward-looking statements and we'll get right into it. So the idea of Silver Hammer is we want to go after past producing silver mines in the Western United States. So we started the company in May and we brought our first asset in June, our flagship asset, Silver Strand. That is in Idaho in the Coeur d'Alene district. Past producing mine down to only 90 meters. And when I say that, I don't mean down in depth. I mean, it went up in the mountains. So you walk in the portal and they only ever mined up. High grade results all the way up to like 15, 16 grams a ton gold and 800 grams a ton silver. So that multi-kilo silver equivalent grades. We got that asset in late June. We brought it online. We'll talk more about that. We brought it online with exploration. One of the key features to this is no one had ever consolidated a land package like we're able to do. So we'll talk about that when we talk about Silver Strand, but pretty interesting asset there. Then in September, we were approached by a gentleman about 2 assets in Nevada, both past producing silver mines, both extremely high grade, and both of them haven't been gone back to in about 100 years, one of them in 150 years. So Eliza, the past producing Hamilton district, for anyone that doesn't know where that is, that was the largest silver rush in the United States at the time from 1860 to 1870. That area produced 40 million ounces of silver. We have the property on the south side, and off of our claim, it dips right down underneath the shell, and no one's followed it. There was grades out of the mine, the one mine on our claim, the California mine, 18,500 grams a ton silver equivalent, and no one has gone back there since 1870. So very interesting and exciting opportunity there. We have a lot of chip samples. We'll talk about that when we talk about Nevada. And then our last asset we brought in was Silverton. Silverton is about an hour 20 from Tonopah, another past producing silver mine in the 1930s, 900 grams a ton silver or 30 ounces, and had only ever gone down about 50, 60 meters maximum and stopped. Obviously, metal prices at the time were what they were, and the whole area has not been gone back to. There's been exploration on the north side of the property, way up in the mountains, but not on the flat portion. So we think, based on the exploration we've been doing, boom, it dips down. There's also a chance for a large size round mountain style gold deposit on one half of the property, and we'll talk about that as well. Want to also discuss our team. It's a very interesting management team that has a lot of experience, not only in exploration, but in mine building and capital markets. So want to talk quickly about our where we sit on the Lassonde development curve. You know, this curve is very impactful on where junior miners sit, and we firmly believe that based on the work we've done last year, how we accelerated our plans, we sit right at the potential large exponential growth portion of that curve. So a lot of value, we see a lot of value to be gained for our shareholders. Our capital, this is always the important part, capital structure. We have 38.1 million shares outstanding. We have about 2.5 million options, 7.2 million warrants. Just keep that in mind. We did have a fair number of warrants start to come in November. And fully diluted, we're about 47.9 million shares. So still a very tightly held vehicle and still very much able to execute with the capital that we raised of $3.5 million in May. Let's talk about the Silver Strand and Burnt Cabin asset. So this was the asset in Idaho, in Coeur d'Alene District. This is the district that has mines like Lucky Friday, Sunshine, Bunker Hill, Galena, all these mines. 1,800, not all, but a lot of them, 1,800 plus meter deep mines, and are continuing today. Lucky Friday is still running, still one of the flagships of Hecla. High grade silver. Also, what a lot of people don't know is during the startup days of Lucky Friday, it produced gold, very similar to what we're seeing at Silver Strand. Gold and silver on surface. We expect it to get very high grade going down. So we picked up this package. It was a small land package, and we were able to extend that 5.5 kilometers on strike. This has never been done with this land package before. The parties that had owned it before didn't quite agree. Now they do, and we picked up that whole package. So we started exploring it in the summer. Then we started seeing outcrops. We started seeing sampling. We started getting results from sampling, you know, anywhere up to almost 12 grams a ton gold, 255 grams a ton silver. And we went down there in the summer and we looked at the existing underground and made the call that we're gonna have a kind of a two-pronged approach with this. We're gonna look at doing surface exploration drilling, but we're also gonna rehabilitate the underground. We're gonna drive a new drift, step out from the existing, what they considered the non-historic ore body, or the historic ore body, and we're gonna drill it. And so we were able to do that. Remember, we picked it up in late June. We were drilling by November. Pretty impressive, and we had our results. We have multi-kilo hits. So multi-kilo over multiple meters from this drilling program. And we were able to, and from this drilling program, we were able to find up to 570 to 700 grams a ton gold and silver equivalent, or silver equivalent, sorry. So the really interesting thing here is that we were able to go back and get the old core and the old assay results from the last company that had this property, and bring them up to modern times. So now we have a very clear picture of what this ore body is potentially doing, and it is getting exciting going down. Now that we have potential going down, we hit mineralization in every single hole that we drilled on this property. Every hole had gold and silver grades plus 500 grams a ton silver equivalent. And that is just at surface. They were 13 meters down from what we consider the surface level. Walk in the portal, drill, it's right there. This year, we will be drilling up, we'll be drilling down, and we'll be extending that down to depth and proving that concept even further, that silver is getting richer as we go down. There's gold carrying it, they're carrying with it as well. So not only is it silver, it also exposes to gold. You know, I like the old adage of mining through gold to get to silver, and that's hopefully what we'll be doing here one day, as it was a past producing mine, and there is a potential to turn it back on once we have enough resource and exploration finished. The assay highlights from our last program, we discussed this. This is not including what we released in January, which were up to 2.5 kilos, 2,500 plus grams a ton silver equivalent, a multiple meter hit of 1,250 grams a ton silver equivalent. That's 3.3 meters, I believe it was. So exciting. What we're doing there, and what we're going to be drilling on surface this year to extend that, to test the surface and the lateral extensions of this mine and the depth extensions. This year for Silver Strand, for our flagship mine, it has the potential to be big very quick. So we'll transition down to our other two assets, Nevada. So Western US focused. This is that past producing Hamilton area. The area produced 40 million ounces and about a mile long by half a mile wide. Just to put that in context, that is a very small area to produce a lot of silver in a very short time in the 1860s to 1870s. So no geochemistry, no geophysics. They were doing this hand to mouth. They walked away. No one has gone back since to do exploration there. We picked up the land package. We started doing chip sampling. We not only found that we had about we're getting up to 1,500 grams a ton silver, which is extremely high grade. We were also getting 6.8% copper, 13% zinc, multiple percentage of lead. So we thought, wow, that's really interesting. This whole system dips right below the shale and has never been looked at before since the 1870s. So we not only think there's a large silver potential system there, we think there's also potential for a copper porphyry. When you consistently get numbers like multiple percentages of copper in almost every chip sample that read above 120 grams a ton silver. So again, another very interesting but also exciting project in Nevada. That is between Eureka and Ely. Great road access, Forest Service land, patents around us. Very much ripe for the exploration this year. We do have an exploration plan we're executing in the next week, and we're going to be drill targeting for summer. Now, one thing I do have to add about Eliza is back in the 1965, the gentleman that owned the property took a chip sample from the California land area, 25,000 grams a ton chip sample. I mean, if that tells you anything of what the potential of this is and how they just scrape the surface by going in these little underground pods, it's exponential for us. We're really looking forward to getting out there, exploring it. We've doubled the land claim package just because we needed to. There were samples all the way down through the land claim package. You can see there in the gray with up to 50, 60 grams a ton silver all the way along. So we decided we're going to expand it and give us a lot more exploration targets for this year. Now we'll reach down to Silverton. Silverton is about an hour 20 from Tonopah. It is a past producing mine. And as you can see in this drawing here, and I don't like to go into drawings a whole bunch because it loses people, but a lot of high, very good grades, chip samples. And these are from new outcrops. We're finding 692 grams a ton silver, but also this mine had produced 900 grams a ton silver. So we started doing the exploration program. We just finished it up, just did the announcement. We think, and there's a strong evidence that the silver trend actually dips under the shale and dips under these young volcanics. So a huge part of what we're going to be doing this year is proving that out. We're going to be drilling it. We're going to be using existing roads. We're going to be drilling all along those nice red arrows that we have there. But also we're going to be going to the east side of the property where we talked about that potential gold target. We were down there sampling and we started pulling things like 6.1 grams a ton gold, anywhere between 0.06 to 6.1 grams a ton gold consistently in this like volcanic hosted area. So poorly welded tuffs, poorly welded to unwelded tuffs. very similar to the geology that Round Mountain hosts. So there is not only potential for a large silver system on here, but also that gold system, giving us two unique targets to drill and target this year. So our milestones last year, it was a year of acceleration, from getting the project, Silver Strand project, in very late June, to having surface permits in record time, to having underground permits and drilling done, and results by December. I'd say we're on a pretty fast and accelerated curve to make this company big quick, and we're going to continue that this year by extending this drilling at Silver Strand underground, by drilling on surface and exploring those potential veins all the way along surface, all the way up to what was called the Burnt Cabin. So that's a 5.5 kilometer strike where we're seeing consistent chip samples of gold and silver. So we're looking forward to drilling those out this year in very short order. And then we go down to our Nevada assets. We're going to be drilling those out in late or second half of 2022. So a lot of potential catalysts coming out of Silver Hammer. And that large exploration potential really, truly is there, as we're still a very young company. So a little bit about myself. I'm Morgan Lexham, the president and CEO. My background is mine building. I worked for companies like Freeport-McMoRan at the Grasberg project in Indonesia, one of the largest mines in the world. I worked on the Oyu Tolgoi mine in Mongolia with the Rio Tinto team there for a number of years. I spent time in West Africa with Golden Star Resources in Ghana for a number of years, bringing back an old mine back to life, similar story here, and putting it back into production and meaningfully. And they were able to sell that company for $680 million. So it just shows you that having that mine builder experience really gives us kind of an outside the box thinking. Phil Mulholland, our chief geologist, Phil's worked for companies like Barrick at the Buckhorn mine. He's spent a plethora of time in the Coeur d'Alene district working at a lot of the major mines in the area. Phil is an exceptional geologist with a very keen eye for 3D modeling of ore bodies, which is exactly what we need at Silver Strand. And he is our lead geologist on that project, has been very focused on expanding that resource, but also expanding along surface like we talked about. Alnish Mohan is our CFO. He's a CFO for multiple other publicly traded companies. And let's get into our directors. Lawrence Ralston. Lawrence is a staple in the industry. He has 35 years experience. We are very lucky to have Lawrence on our board. Lawrence is currently, I think, the founder of West Bay Capital Advisors. He's also the chairman of Metallo Royalties, a very large and successful royalty company. He was the founder and editor of Resource Opportunities, a very successful newsletter writer and geologist. Having Lawrence on the board and the team only expands and enhances our exploration and geology knowledge. And we brought on Ron Burke in October. And for people that don't know who Ron Burke is, Ron was the previous vice president of exploration for Silver Standard, now SSR, and the vice president of exploration for Centerra. Two very large mining companies. SSR, a very predominant large silver mining company, has also been a part of finding many very large deposits, including the Pitallara project and the Brucejack project in Mexico and in British Columbia. Ron started his career with Teck Resources and has had an exceptionally gifted career, as well as that geology knowledge that complements Lawrence, that complements Phil, and complements myself. And then we have Jonas Lang. Jonas is Executive Vice President of Maple Gold Corporate Development. Jonas has that capital markets and IR background. Having Jonas in there with the exploration, with myself as a mine builder, really rounds out that triple-pronged approach of what we're trying to do here, bringing past producing assets to that large exploration play and large exploration payoff, but also potentially into production in short order. Warwick Smith, one of our advisors, the CEO of American Pacific, a very successful junior mining company that has a very bright future ahead of it, has taken that company from a $10 million valuation to, I think they hit a $140 million valuation, capital markets expert, and really ties in with Jonas really well on how we are executing our tightly held share structure in capital markets. Christina Pilon is our head of IR, and Christina is an expert in the IR area. And definitely keeps me in check. Thank you very much for logging in and listening to my rambling about Silver Hammer. And I hopefully was able to bring you up to speed with what we're doing and the excitement that we have here for that large exploration payoff and the potential exponential growth of Silver Hammer. Thank you very much.
Hi, my name is Peter Espig. I'm the CEO of Nicola Mining. We are a unique mining company based in British Columbia. And hopefully after this presentation, you'll see what makes us unique amongst our peers. And we're very excited about what's going to be happening in 2022 and 2023 with the company. The executive summary is very simple. So we are a junior mining company that has operating revenues and those revenues are generated from our milling operations. We have a gold and silver milling facility. We also have exploration assets, and we have a fully permitted silver project. When I say fully permitted silver project, it's a silver mine that is in care and maintenance. We provide shareholders exposure to copper, gold, and silver. And we recently signed, in 2021, we signed an agreement that gave us a 75% economic interest in Dominion Gold project. And this year we've been quite busy. We are a partner. We work with Trans Mountain, and the contractor, the relationship that we have with Trans Mountain has a twofold purpose. One is that it provides us a soil cover for our reclamation obligation. And again, for a company, even though we're a mining company, we certainly value ESG initiatives and principles. And this allows us to facilitate our ESG obligations, but at the same time, it brings in revenue. So it's a win-win for both sides. Again, we have the 4 key assets. The 4 key assets are the new Craigmont Copper Project. The new Craigmont Copper Project is the location of the historic Craigmont Copper Mine, which was the highest grade copper mine in the history of North America. We have 100% ownership of Treasure Mountain. Treasure Mountain is a high grade, fully permitted silver mine. And we always look at whether or not to reopen it. We believe that the real upside of Treasure Mountain is not the in situ mine, but it's the upside of the exploration. We have our Merit Gold Silver milling facility. That is a $30 million facility that we've invested. We are the only such facility in British Columbia that is permitted to receive material from anywhere in the province without having to apply for additional permitting, and we're able to produce gold and silver concentrate. And as I mentioned in the first slide, we have the Dominion Creek project. That is a very high grade gold project. You can see in the slide here that the 23 grab samples at surface average 63 grams gold at surface per ton. And we've applied to the Ministry of Mining for a bulk sample permit, and that's going through the review process right now. Our assets are located all in British Columbia, and we believe that in order to really extract synergies, you're required to have the assets, especially for a junior mining company, in close vicinity. So, it doesn't make sense for us to invest in projects in Quebec or South America, because really we have a mill. We'd like to utilize the mill. The mill is located on a historic copper producing property, and as we all know that if you want to find new mines, the easiest or the best place to look is near old ones. Treasure Mountain is 90 minutes from the new Craigmont project, where we have the mill, and Dominion is we're able to truck high grade material to our mill site. This slide is very, very indicative of a picture tells 1,000 words. You can see where our mill site is located, and all those dots represent gold projects. And remember that gold projects, when gold projects apply for a bulk sample permit, it doesn't justify building a mill. And so I like to think of our mill site in Merritt, which is located on infrastructure. We're right off the highway. As a matter of fact, Highway 8 was essentially built to take the concentrate from the historic Craigmont mine to the coast for export to offshore buyers. So the infrastructure is there. The properties are able to bring the material to us on highways, and we're able to process it and ship it to foreign countries. And so we're kind of like an airport, and all these other projects are like airplanes, and they need a place to land. Merritt Mill is a 200-ton per day milling facility. As I mentioned, we had invested, since 2011, we've invested $30 million. We have a fully lined tailings facility. We own the land freehold, which is also very unique. We purchased the land in 2011. We've got a crushing, grinding, flotation circuits, and we're in talks right now to enter into an agreement with First Nations to help us with running the site. And I think that, and I just want to emphasize that, the importance of having First Nations and Indigenous partnerships are very, very important, because it's a mutually beneficial agreement, or it provides mutually beneficial opportunities for both local community as well as the company, and it allows the company to receive guidance from the local community and local First Nations as to what the expectations that are expected from them. The new Craigmont Copper project is, as you can see here, it's based on a skarn. There was approximately close to 1 billion pounds of copper taken from the site historically. That average grade for the entire life of mine was 1.38% copper for the open pit, and it was closer to 2.5% for the underground. You can see several drill intercepts here that are greater than 1% over extended meters. And I would like to emphasize that one of the reasons why we are very excited about the new Craigmont project is because there's a cover of which is the Kingsville layer above the historic where the copper mine was, and that made it very difficult historically to do IP survey. Now there are new technologies such as ZTEM that will allow you to penetrate deeper than 100 meters to which is often the depth of the Kingsville, and it allows us to see what's below, and then we're able to dictate our drilling programs based on that. And we have in 2020 and 21, we really the focus was applying for a 5-year what's called a MIAP, so a 5-year exploration permit, and we expect to receive that permit this year. And once we receive the permit, this will allow us to really put together a robust drill program, exploration program, after we complete the ZTEM. Our silver project, Treasure Mountain, is located just off the Coquihalla. There are 4 portals. The grades, the historic grades are greater, close to 30 ounces per ton. The mill, the $30 million mill, was actually built to process the material from Treasure Mountain. So again, our mill is capable of producing concentrate for both silver ore or silver material, silver mill feed, and also for gold mill feed. We had the opportunity or the option. There's level 1 stope 2, as you can see here in this diagram, and we can extract that. So historically, that we did a bulk sample permit and at Treasure Mountain, but we never commenced mining. And this predates current management, because the company went into CCAA. Current management took the company out of CCAA, and we've now put it into a position where we are now. And the valuation, I think this is kind of like a secret treasure that we have, and therefore the name itself, Treasure Mountain, is very indicative of what it really is to us, in that we're valued really basically on the copper project and the mill site, but not. I don't think we get a lot of recognition for the value of having a fully permitted silver asset. And even with our mill facility and our copper project, remember that these are both fully permitted. So to garner a fully permitted mill or a fully permitted mine in British Columbia is years and years of consultation, environmental impact studies, economic impact studies, applications, engineering. So we have the ability to provide shareholders an expedited cash flow opportunity based on the fact that we are permitted. So if we were to find silver or copper in our exploration projects, the length of time to bring those into fruition or to bring those into operation are much shorter than if we didn't. In summary, before I talk about what makes us a very unique investment opportunity, I want to take a moment here to talk about the importance that we also place on ESG initiatives. And so we are, Nicola, and please stay tuned, follow our news, and go to our website. We are in the process, because ESG, the importance of valuing environmental, social, or sustainability and governance goes beyond the balance sheet. It goes beyond the opportunity of the mineral that you're extracting. It goes to the morality of who you are as a company. And so, as some of the investors may or may not know, in 2021, British Columbia had historic flooding. That flooding shut down Highway 8, Highway 5, Trans-Canada Highway, and severely damaged a lot of infrastructure that we have. It isolated communities. It had the city of Merritt, which is located near us, had to be fully evacuated. And we pride ourselves, we're part of that rebuilding. So we recently applied to a permit to the Ministry of Mining that is getting reviewed right now, and that is to provide riprap. Riprap is the rock that is placed along the rivers to provide stability so that bridges don't get washed out. And we are in the process of working closely with First Nations, and we hope to enter into a partnership with a leading local First Nation band to help facilitate the reconstruction of these highways and the infrastructure. And we are also working with First Nations to help us with the operations on our site. So this is something that we are very excited about. And although it's not in this presentation, we're in the process of making a new presentation. So I encourage you to continue to follow the story and to go to the website and look for updates. So getting to the summary, or the investment summary. So we have a fully permitted mine, M68, which allows us to, if we were to find an economic value or resource of copper, that we are able to expedite the stage to get into production. We plan to do robust exploration in 2022, and this will be based on a ZTEM survey that will be conducted in May, and then after that we'll review where our main targets are. We may do an IP survey on those targets, but we'll put together a drill program that will be able to drill for the next 5 years. We have a fully permitted gold and silver modern processing facility. This is very unique in British Columbia. Again, we are the only mill facility in the entire province that is fully permitted to receive third-party material from throughout the province. And this is important because, cash flow is king. And I come from a background, as a former Wall Street investment banker, where, when you look at companies, the less dilution that you can have, the better it is. And so we're at a point now where we are generating cash flow. We're generating cash flow. We're in the process of applying for a riprap permit, but we work very closely with Trans Mountain to receive material that is actually utilized towards reclamation, but we're able to receive remuneration for that, and that provides us economic and financial stability. The site is a hub for other small gold projects, because if you're, unless you're a very large scale project, it doesn't justify putting, $50 to $100 million into developing a small mill, which is really what the cost is in British Columbia. We have the Treasure Mountain Silver Mine, which we can review and open if we decide. We're going to apply for a multi-year permit application, a 5-year permit application, the MYAB, in 2022. We're working on that now. And we also have the Dominion Gold property. So we are in essence a hybrid company where we provide shareholders exposure to gold, silver, and copper on the exploration side. We also provide those shareholders who value cash flow, that the company is generating cash flow. We can expect to continue generating cash flow throughout 2022 and 2023. So that gives us balance sheet stability, and we are a company that is very progressive when it comes to ESG initiatives. And I emphasize that investors increasingly value ESG policies and implementation of those policies into a company, not just a statement on the website, but in actions. And this is something that you will see that Nicola will be a leader when it comes to actions with regards to ESG initiatives, and in implementing those initiatives. In the long run, it actually helps your production, it helps your profitability, and it helps the company grow in general. Well, thank you for your time today. Hopefully this was informative. Please continue to follow the company, because we are excited about news that we hope to announce in the near future. And I think you will continue to see Nicola Mining as a company that is unique amongst its peers, and provides investors the upside when it comes to exposure to certain metals, and that includes precious metals and green metals such as copper. And it also provides the shareholders that are investors that value cash flow, that exposure to cash flow, and which risks or mitigates the risk of dilution. And we also provide shareholders that really embrace ESG initiatives, that they're investing in a company that embraces those policies or values just as the investors do. Thank you very much for your time today.
Good afternoon. My name is Anthony Morrow, and I'm the CEO of American Eagle Gold. We trade under the symbol AE on the TSX Venture. I'm here right now to provide a webinar and explain to you an amazing opportunity that American Eagle has in a property called NAC. It's located in the interior of BC. It's a copper gold porphyry exploration target that we believe hosts a very large underground high-grade block cave mine. Currently at surface, we already have a large non-compliant historical resource of over 270 million tons of over 0.2% copper equivalent. Copper is currently around $5. We are very excited about the potential. We're currently in the permitting process, and we're ready to drilling once our permits get approved in the summer. Now, I want to take a little bit of time to explain why we're so excited about it and why I believe it's a great opportunity for the investment public. So right off the bat, here's a picture of some of the historical core at our property. Now look at the visible gold, look at the copper in this core. It can show you the type of high grade that exists on our property. Historically, there's only been 4 drill holes that have gone over 300 meters in vertical depth. Now, if you look at the historical discoveries that have been made recently, all these porphyry discoveries like Alpala that's owned by Sol Gold, like GT Gold's discovery at Tataga, all those copper porphyry ore bodies started at over 400 to 600 meters in depth. Now, again, 4 of those drill holes went over 300 meters on our property, and look at the core it came out. We're very excited about it. We think the investment public should be too. So this is our forward-looking statements. I probably should have said this before I started off the webinar, but I got too excited about NAC, which I know you will be too. So this is where NAC is located, right in the interior of BC. There's not many places better in the world to look for copper gold porphyry deposits than right slap dab where NAC is located. We're surrounded by historical copper mines that are currently producing copper. And as I mentioned earlier, we have over 270 million tons of over 0.2% copper equivalent. Copper's around $5 right now. We are very excited about the potential. We have our targets currently defined, and we'll be ready to drill once permitting has been accepted. So these are just some of the historical drill holes that have made up our historical resource, which again is not NI 43-101 compliant. But just take a look at some of these drill holes. DHB4, 316 meters of 0.11% copper equivalent and 0.25 grams per ton gold. That is huge. Another great one, DD9515, 168 meters of 0.35% copper, 0.645 grams per ton gold. These are just some of the hits. Now, if we drill deep, unlike our predecessors, we have a very good potential of mimicking some of these results and getting even higher grade if we go in depth and we follow our thesis that a high grade underground copper gold porphyry deposit exists below the low grade mineralization that's at surface. So So now I want to compare our mine, NAC, to the Red Chris mine in BC. A lot of people have heard of Red Chris. It's one of the largest copper gold porphyry deposits in the entire world. Now, if you look at it, majority of that mine is underground. At surface, Red Chris has what NAC has. It has disseminated low-grade copper ore at surface. That is not exactly economical. It's not until they made the deep discovery underground that made that whole deposit economical. Now, if you look at NAC, NAC's resource is at surface. It's non-compliant again. It's about 0.2% copper equivalent. There's over 18,500 meters of drilling on our property. Only 4 holes went over 300 meters. Now, if you see that giant pink blob there with the arrow, that's where we believe the copper gold porphyry is coming from. They're intrusive dikes coming out of the ground, and they host that mineral that is higher grade. We're looking for grades of copper equivalent of over 1%. We're very excited about it. We have the historical drilling to prove our thesis, and now we want to drill deep, average around 500 to 700 meters to show there's something giant looming underground. Now, why do we think a giant deposit exists underneath our ground? 2 things. We have really smart geologists that worked on this property, 4 of them exactly, and all 4 of them made large historical resource discoveries. I'm talking Kamoa, I'm talking Grasberg, GT Gold's Tataga/Saddle discovery. Now, what they did, they looked at all the historical work. There's a lot of historical work on this project. Over 18,500 meters were drilled. Over 150 drill holes were put into the ground. There's a lot of geophysics work. There's IP, magnetics, ZTEM. There's geochem as well, and as well, the drilling that I told you about. Every person that came in there, they looked at what they did. It wasn't compelling enough for them to do deep underground drilling, mostly because the copper price was never high enough. And then they walked away. Another main reason why they didn't drill or believe what they saw from their one piece of information is because they only looked at the one piece of information and not stuff that happened before. Now, what our team did was they came in there, they digitized all of the previous data, and they looked at all the data sets. Now, when you compare the historical data sets, and there's 5 of them, one piece of information that shows something, you can maybe drill on that. If you have 3 that show an anomaly that are coincidental, you'll for sure drill on that. All 5 pieces of historical data that we had, that we digitized, all show that a large anomaly potentially exists underneath the giant halo, the huge mineralization of low-grade copper that exists at surface. That's why we're going to be drilling there, because of the work and because of the people. We make data-driven decisions at American Eagle Gold, and that's why we purchased NAC. We believe it can provide us near-term news release and hopefully a giant discovery down the road. Well, that's NAC. We're American Eagle Gold. We're traded on AE on the TSX Venture. I believe we have one of the best risk profiles of any junior exploration company out there. We're looking for copper, which is on fire. We have drill targets. We already have a non-compliant historical resource, and we believe a very large underground high-grade copper gold porphyry deposit exists. We have a smart team of geologists. We'll be ready to drill once permitting is in place, and we're already funded. We expect drilling to start in the summer 2022. Please follow us. We're going to continue to provide information on NAC. Again, American Eagle, trade on the TSX Venture under the symbol AE. Feel free to contact me anytime should you have any questions.
Good morning, everybody. I'm the CEO of a new company working in Newfoundland, Gold Island, and I'm privileged to have this opportunity just to give you a very quick overview of our company. Our goal is pretty straightforward. We just want to make a gold discovery, but not just any old discovery. We want to make one that is demonstrably viable. So it's got to be rich enough, big enough to have the potential to be mined and make money. So let's just quickly give you a corporate snapshot. Got about $7 million in the bank at the moment, 62 million shares outstanding. There's some warrants. We're still private. We're not listed yet. And one of our founding shareholders is Eric Sprott, who many of you will know. And so as a consequence of being private, about 53% of our shareholders are currently insiders or strategic investors. And We've raised almost $9 million so far privately, so we have more than enough money to conduct 2 full years of exploration in Newfoundland. Newfoundland's a great jurisdiction to be working in, and I'm puzzled by why Newfoundland wasn't recognised as the interesting gold province that it clearly is, and it's in Canada, and Canada is a great place to do exploration. Mining's been an important part of Labrador's history for many years, not so much gold mining, but base metals. It's been an important contributor to the economy. Because it's Canada and it's developed, there's access and there's roads and there's power and water and facilities and towns, so it makes it very easy to do exploration. The permitting system with the Natural Resources Ministry is very straightforward. They're still pretty quick, notwithstanding that there's been a rush to the island chasing gold. And I think importantly, the Newfoundland Geological Survey has this enviable treasure of data from all the past work that's been done on the island by the Canadian Geological Survey, the Newfoundland Geological Survey, private companies. And so an important part of us developing these projects that we have is being able to tap into that inventory of precious information. So we have 7 separate projects, and you can see them here on the slide in the yellow outline. Notre Dame and Mings are our 2 listing properties. We hope and plan to list probably in May of this year. And so each of these properties is quite early stage. Other than the Burton claims, which is in the Notre property, all of these properties were staked by my colleague Sean Ryan on the back of his very careful research and his analysis of all the past work and the geological controls to mineralization. Newfoundland has a very interesting geological package of rocks. And on this slide, you can see these big black lines running down. They are major fault structures deep into the Earth's crust, along which there's been repeated movement, and they are conduits for fluids coming up, gold-bearing fluids, which get emplaced often where there's a cross structure. So it doesn't always mean you get the gold on the main structure, but often on the cross structure. And so a number of our properties have never been staked before. We have over 7,000 claims, something like 1,700 square kilometres of territory. So we're one of the larger landholders on the island. And then I just want to mention those blue boxes, which are some of the more advanced projects you know about Newfound Gold, Marathon and Matador, who are well advanced down the track to be defining a resource, and in the case of Marathon, developing a gold mine. Just quickly to talk about one of the projects we have. This is within the Notre Dame project. It's the Burton prospects. There's been previous work done here. They represent a target that we've done quite a bit of work on last year, geological mapping, traversing the ground, looking at the core, doing additional soil geochemistry and magnetics. But what's interesting about these 3 showings is there's been a couple of drill holes done on Isaiah. That's the one out to the left-hand side of the page. There are a lot of grab samples have been collected on the surface here, grading up to 10 gram per tonne. There's a channel sample that ran 56 gram per tonne over 2 metres, and there's only been 2 drill holes, and one of those returned 29 metres at about 0.7 gram per tonne. Not quite economic, but very interesting. And the distance between Jonah and Burton is several kilometres. So this is a target that we plan to move quickly on in the summer of this year. And I anticipate that we'll have a core drill turning on this probably in the 3rd quarter of this year. So our other properties, as I said, are greenfields projects. Just to look at one other of our projects, this is Annie Upsquatch, which is down in the middle part of the island. So the reason that Sean staked this is that it's got the key characteristics that say it's prospective. It's got these major faults. You can see them in the red lines, the RIL, the Victoria Lake Shear Zone, part of the structure that runs down into the Marathon project. You've got ophiolites in green, gabbros in purple on a major break. The rheology of the strength of those rocks is different. So as you get this breaking, you get fractures in the rock. Fluids can migrate up those fractures. And importantly, There are historic till samples and historic lake sediment samples collected here, which are anomalous in gold. And this area had never been staked. So it's one of our priority targets. And we're looking forward to getting on the ground here in the summer when the snow's melted and having a good look, because we've done soil geochemistry here already last year. Let me talk quickly about our team. Any captain of a team wants to surround himself with the best people you can find. And let me talk first about Sean Ryan. Everybody knows Sean. He's a well-known prospector, does very careful research. I worked with Sean first in 2008 in the Yukon. Sean had undertaken a lot of very systematic gold geochemistry, soil sampling. My colleagues and I looked at that. We were very excited. We optioned the property from Sean. On the back of his soil sampling, with 2 years of drilling at Golden Saddle, we defined 1 million ounces of gold at better than 2 grams per tonne. Kinross came along and took us out, and Sean made more money out of that than I did, but good on him, because our drilling would not have succeeded without his pioneering work. So I'm very pleased to be working with Sean again. Paul Robinson, a very experienced geologist, is our VP Exploration. He's going to be moving to live in St. John's shortly, and he will lead the charge of our exploration going forward in Newfoundland. I'm an old geologist. I've been in this business about almost 4 decades, and I've had the very good fortune to have been part of or led teams that have made some pretty nice discoveries in different parts of the world: Porgera in Papua New Guinea, Gross Rosabelle in South America, Big Bell in Western Australia, and others that I could talk about. But once you've had some success, and if you've made some money from it, which I've been fortunate enough to do, you get the addiction, and the next one's going to really make it. So I have the addiction, and I'm very pleased to be able to pursue my addiction with exploration in Newfoundland. Our company's strategy is nothing very unusual or different from what everybody else is doing. So the phases are, we're searching. Hopefully we find something. Then once we've found something, we define it with a lot of drilling. And then the last point, of course, is to try and monetize that discovery. So just to talk quickly about search, and this is a map of Notre Dame and Mings Bight. There are 2 listing properties up in the north part of the island, and all those lines that you see on this figure are lines of soil geochemistry. We've collected some 6,000 samples here last year. There's samples on each of those lines at 25-metre centres. Those lines have been very carefully placed on the basis of past work, structural corridors, faults, geology, etc., etc. We have all those assays back already, and we're very happy with those assays, and we're going to be jumping into looking at these. You'll see in the middle, just under the name Notre Dame, some little symbols there, and that's the Burton property. And then out to the right-hand side, to the east, there's some very interesting stuff that's been picked up by last year's soil geochemistry. So the plan is fairly straightforward. Undertaking systematic iterative exploration, and iterative means lots of little steps. You do some work, you look at what those results are, and that tells you what to do next. We obviously want to use, and will use, the best technologies. We want to do cost-effective exploration. We're using other people's money, so I'm very conscious of that, and every dollar counts. We continually rank the different targets that we're working on, and the ones that fall lower in the list of priorities, we abandon those and we focus on the most prospective targets. A couple of phases of drilling. Early drilling with a rotary air blast drill, a bit quick and dirty, but it gets you bedrock samples and tells you whether you're onto something from the soils. And then the next phase, of course, is reverse circulation or core drilling. And I fully expect that this year we will conduct core drilling on at least 2 of our projects, Burton probably being the first one. So what is the deliverable that we as a junior exploration company want to make? Of course, a gold deposit with indicated and inferred resources. And when you define those as indicated and inferred, that clearly means that there's the potential for viability, economic viability of that deposit that you have found. And then, of course, a corporate transaction that rewards all shareholders, and I'm a shareholder as well. I want to be rewarded in the long term for our efforts, and that could be building a mine or a merger with another entity, or perhaps somebody comes along and takes us over, as happened with Sean and I with the Golden Saddle deposit back in 2010 when Kinross acquired Underworld Resources. So, as I said, I've been doing this business for quite a while in a number of different places around the world, and I've always found it to be a lot of fun. But there are some key criteria for success. You've got to have great properties, and I'm very confident that on the back of Sean's pioneering work, we have great properties. We are a team with a track record of success, and that counts for a lot. You have to have sufficient capital. And Power One, who we're working with very closely out of Toronto, have already raised a bunch of money for us. And when we go public, I expect we'll be able to top up the treasury. Iterative exploration, I've mentioned already. And the last point, I think, and it's a very important one, is you have to retain focus. You've got to be responsive to the results that are coming in from big machines like this drill rig you can see there in the background. But you need to be agile, because not every target that you work on is going to deliver a home run. And you've got to quickly make up your mind that it is or isn't going to make it and move on to the next one. So thank you very much for taking the time to listen to us at Gold Island Inc. And we would like to think that you would join us with this interesting and exciting journey in Newfoundland.
Hello, everyone, and thank you for taking the time to attend Vior's corporate conference. Just so you know, Laurent, my partner, and I believe that Vior represents an excellent investment opportunity in the junior resource space, and we look forward to telling you why here today. So just a cautionary note, there will be some forward-looking statements in our presentation. Just take a moment to review our disclaimer policies. So I'll begin with Vior's corporate profile. Why Vior? Our junior exploration company is based on some very solid fundamentals. Our strategy is straightforward, exploration on multiple high potential gold projects. Clearly, our focus is on our flagship Belter gold project that we've recently consolidated and we're currently drilling on. However, we do have upside potential on 8 other promising precious metals projects. All our projects are located in safe jurisdictions, either Quebec or Nevada. Expertise, a very highly committed management team with strong leadership skills and experience, and management has skin in the game. Collectively, management and the board owns in excess of 16% of the equity in Vior. We enjoy strong financial and technical support from some excellent partners, including Osisko Mining, some of the Quebec-based institutions, Luca Resources out of Australia, and Junior Ridgeline Minerals out of Nevada. Our diversification is simple, explore, and we have the opportunity to invest in private companies if we so choose. A little bit about who we are, corporate profile, board of directors, 5 individuals, 3 independent, very nimble, adaptable, streamlined management team who's 100% committed to Vior. Everyone in our management is 100% focused on Vior. There's no, we're not members of other boards. We don't allocate part of our time to other junior explorers. We have an excellent technical team comprised of a couple long tenured geos with excellent field experience and technical skills. And then it's complemented by a couple technical advisors and consultants. So by the numbers, working capital just under 3.2 million as of December 31st. We also enjoy the benefit of investments in public companies, about 1.5 million on our books. Shares outstanding, market cap, as you can see. Major shareholders include Osisko Mining, undiluted at 6.7%. Management at 16, Quebec institutions at 16, and close strategic holders about 30%. That would comprise about 15 high net worth individuals and family offices. A little bit about Vior's asset allocation and diversification policy. So our exposure is to major exploration projects in North America. We have a very strict project generation criteria. Number 1, mining friendly jurisdictions in North America. Number 2, close to an existing or past producing mine or an advanced project. 3, good infrastructure nearby with easy accessibility year round. All of our projects enjoy the benefit of year round exploration and drilling. And lastly, potential to advance our project fairly rapidly. So disciplined focus, and as you will see, we have a discipline in our capital and human resource allocation. At the moment, the bulk of these two resources are allocated to our flagship Belter Gold project. Laurent will go into our recent accomplishments and where we sit with respect to advancement of this project shortly. In terms of our diversification strategy, we also have several other fairly advanced gold projects in Quebec. Clearly, we cannot move everything forward at the same time. However, we are seeking strategic partners on some of the more advanced projects, and we look forward to sharing some positive news on this front over the next 6 to 12 months. We also have a passive strategy within our portfolio. We do own a strategic investment in a publicly traded Nevada-based junior gold explorer called Ridgeline Minerals. It sits on our books as a mid to long-term investment. And now a little bit about our corporate growth opportunity. Clearly, our focus today will be on our Belter flagship high-grade gold project. It has significant near-term potential. We are using a systematic exploration process to try to advance a recently consolidated, it's never been consolidated in the past 60 years to the extent we have just been able to do. It has lower risk in terms of exploration opportunities because we know there's some existing high-grade gold still there, and we've recently validated that there's significant high-grade gold at surface, all in the brownfield areas of the project. It's pretty much a proven valuation strategy that we're trying to replicate. That's been where other companies have had some success, notably Osisko with their Canadian Malartic mine, Detour with the Detour mine, and Integra with their Lamaque mine, which were all smaller scale, high grade producers in the past. New management came in, a new technical team with a different vision to try to unlock significant value. So just a little bit about where the project is located and what the opportunity is. So it's a unique location in the Quebec Greenstone Belt in the heart of Quebec's mining industry, excellent access and infrastructure, high-grade gold potential. It's a proven mining belt. We also own the option to acquire 100% of the former past-producing Belter gold mine that produced over 750,000 ounces at a very high grade of 10.7 grams per ton. We also know that there's approximately 20 known high-grade gold veins in the brownfield areas of our project. So it's a unique size, district-scale mining camp, 37 kilometers of favorable strike, 300 kilometers square. We completed over 10 acquisition, option, and JV agreements in the process of consolidating this huge land package. So the unique opportunity is multi-deposit potential. There's really only been shallow drilling to date in the past. It's never been consolidated in the last 60 years, and it's never been systematically explored using modern mining techniques.
Hi, everyone. I'm pleased to share with you today. Like Mark mentioned, what about our exciting Belter Gold project? And we've been excited for various reasons at the beginning. First of all, the location, allowing us with a really low cost of exploration, and we experienced $160 per meter, all included in drilling. So it's really in the lower range of the drilling cost these days, and allowing us to do more with less, basically. It lowers the stakes of economical potential. We do not need to find a standalone 3 million ounces in James Bay to generate interest from producer, basically. And the year-round access with excellent infrastructures and close to qualified workforce in Quebec, which is really strategic these days. So part of that great location, we've been even more attracted by the geology, with the high-grade component of the belt and the large footprint of the historic mining camp of up to 12 kilometer strikes, which suggests the existence of an important metallogenic system underneath the high-grade mineralization at surface that you see now on the slide, 300 square kilometers with 37 kilometers strikes of favorable geology, which comprise 2 greenfield areas up north and down south, and the historic mining camp being consolidated for under the same, just only one entity for the first time. So a little bit on the geological context at Belter, demonstrating that even if we're not located in the major renowned deformation zone in the Greenstone Belt, we have the potential for major world-class deposits. And for example, the Boddington mine in the Australia, the Yilgarn Craton, was discovered in the 80s in an area that was for a long time underexplored by the explorers. So by comparison, it's too early to reveal the full potential of Belter. But given its location in the heart of the mining industry in Quebec, just replacing what has been produced in the past, which is about 750,000 ounces of gold, it will be of interest for a producer and will reward greatly our shareholders. So that's the reason we think Belter provided an advantageous risk-reward opportunity for our shareholders. So here is a simplified step-by-step district scale strategy approach that we've executed these last 15 months, which start with land package consolidation, completion of a high resolution map survey, providing lots of information on the structure which are associated with the gold systems in the area, 2 months of prospection, field validation in various areas of the property, including 1,300 samples collected, compilation and 3D modeling with the help of a well-renowned structural geologist, namely Ken Williamson. So as you can see, with that approach, we've been able to discriminate quickly the main geological domains and structures of the belt, leading to a global understanding of the geological continuities of the main mineralized zones on the historic mine trend, comprising the Belter mine and the Obel deposits, on which we've recently completed the phase 1 drilling campaign of 4,000 meters. And we just started another phase 2 with another 4,000 meters. So here is the brownfield area of the property, about 12 kilometers from bottom left to top right corners of the map. The best values we've got at surface, and you see that we have pretty high-grade gold mineralization associated with major structures on the brownfield area, with up to 274.9 gram per ton, 175 gram per ton. I mean, we've got up to 30 high-grade gold mineralization over the whole brownfield area. So various type of targets, the historic mine trend and its extension to the northwest, some folded area to the west, some large shear zone to the southwest associated with a silver component as well, and some major magnetic breaks never been tested associated with a contact between the volcanosedimentary sequence and some ultramafic package, still untested. So we have no shortage of high potential exploration targets and drill potential over the entire brownfield area of the project. So as I said, we recently completed phase 1 drilling campaign with the first 4,000 meters on 5 holes on the historic mine trend, a continuous structures extending laterally on up to 5.5 kilometers. On the long view in gold, the interpreted projection of the known mineralized zones along the historic mine trend from west to east, Conaway, Obel, Paquin zones, and the past producing Belter mine. In blue, you see the historic drilling that are shallow holes investigating not much below 200 and 250 meters, which is just surface in today's standard. In orange, you have the drill holes that the drill hole traces of the phase 1 drilling campaign, designed to better understand the general structural framework of the historic mine trend, targeting large step out from known mineralized zones. So the results of these 5 holes are expected at the end of Q1 2022. We've been able to recognize the geology, various type of lithology and structures on which we will get results to vectorize next phases. Finally, in red is the location of phase 2 drill holes, recently started and aiming the identification at depths and along strike of some underexplored structures in the surrounding of the old mine. So here is, as you can see, the interpretation of the down deep projection of 12 west mineralized structure system, which are the evidence of historic high-grade gold intercepts. And the structures show a good potential for lateral continuity on a trend of more than 500 meters. So quickly to wrap up, consolidation, validation at surface with high-grade gold mineralization associated with various type of structures, First drilling campaign started. Results are coming at the moment, and we will be able to release some results at the end of Q1 2022. And the idea is to vectorize for a generation of potential economical results. A quick overview on the portfolio. La Flamme volcanic corridor, where we have our Ligneris project in the geological continuity of the Normetal area, where Amex is highlighting and discovering pretty high-grade mineralization. Skyfold Mosso in the Urban Barry corridor, where Osisko Mining and Bonterra are successfully creating value for their shareholders these last 5 years. High-grade gold mineralization, where we see a great potential for other deposits along strike.
To summarize the VR investment opportunity, so solid foundation. We have a low-cost corporate structure, large insider share ownership. We provide investors with exposure to 9 promising precious metals projects, all in safe jurisdictions, all with significant new discovery potential. Solid proven strategy, Belter project potential, and corporate execution has been recently validated by Osisko Mining's strategic investment last March. We should see continuous news flow throughout 2022 as we continue drilling at our flagship Belter Gold project. As Laurent alluded to, we have results pending late Q1, very early Q2. We've embarked on a second drill campaign. We just started this past week, another 4,000 meters plus. So stay tuned, hopefully, for some excellent upside potential in VR this year. So thank you all for your time, and we look forward to answering any questions you may have. You can contact us directly. Appreciate it.
Okay. Hi, everyone. Welcome to our E2 Gold presentation. Thank you for joining us today. It's a pleasure for us to be here at the SIX conference to give you an overview of our company. We're a fairly new company, started a year and a half ago, began trading on the TSXV a little over a year ago, December 2020. So we're a fairly new story. What we are trying to do, our general thesis business model, is we are trying to build a resource to 1 to 2 million ounces of gold with room to grow, and then send that on its way to a miner. We are explorers first. We're not looking to become miners ourselves. So we're going to start off with showing you the regional setting of our property package. This is our main flagship property, the Hawkins property in orange right there, orange outline. In the center, you can see the red star. That is our McKinnon resource. That is a 43101 compliant resource, and that is really the focus of our activities to date. It is 6.2 million tons, grading 1.65 grams per ton for 328,000 ounces of gold. It is from surface down to about 150 meters on average, so it's fairly shallow. And before we did work on it, was open all around. So the property you can see is in Ontario, the province of Ontario. In this little inset map, you can see the orange square representing this rectangle that is the area that we're looking at. We've got to the west of us is Hemlo, and to the east of us are the Timmins gold camps over here in Kirkland Lake. And the Hawkins project sits right in between them. And it sits in an area that we consider to be an emerging gold mining district, because you can see the Sugar Zone mine, Island, Magino, Borden, Cote, all in orange. Those mines are all mines that were either discovered or rediscovered in the past 15 years. And why that's important for us is because our McKinnon resource was drilled in the 1980s. So long before these discoveries or rediscoveries were made, which means that we have the opportunity to explore this resource and the surrounding area of the resource with new geologic understanding, new investor interest, and lots of infrastructure in the area. The other thing we like about it is that it regionally sits in a belt. You can see those two belts here in the dotted black lines. Those belts are regional shear zones that host, as you can see, all of the major gold mining camps in the area, including notably Hemlo. And so that is shared by the Hawkins project, which is important because the mineralization at McKinnon is the same style of mineralization at Hemlo. So that's the regional setting, why we like the project. I'll tell you a little bit about the share structure right now. So we've got 95 million shares outstanding, fairly tightly held, with 15% held by insiders, 27% held by funds. We're quite proud of that investment by funds. That's 9 separate funds led by Crescat, who is our largest shareholder at 11%. So for such an early stage company, that's quite a strong investment by institutional investors. We're very proud about that. Okay, so zooming in on the property itself a bit more, we can see the Hawkins project outlined in black here. Those are the claims outlines. This is on top of our bedrock geology map. And right in the center there, you can see the McKinnon zone right here. So that's 3.5 kilometers is the McKinnon zone. You can see the entire property package is about 80 kilometers long, 240 square kilometers. So it's very large. And it contains a number of interesting prospects outside of even the McKinnon zone. That's these orange dots here in the central area. Those are high-grade historic prospects. And so these are some of the prospects that we're assessing, as well as the McKinnon zone. But it is true that the majority of our work really is on that McKinnon resource. And that's where we did our drill program this past year. So we just completed a 10,000 meter drilling program. We're going to zoom in onto the McKinnon resource there, and Eric's going to tell you about the results from that program.
Yes, thanks, Ellie. Because we're such a new company, we're fairly new at this whole process, the exploration process on the McKinnon zone. So we just completed, as Ellie mentioned, a 10,000 meter drill program. It's the first step out program on the McKinnon zone, pretty much ever done on this since Falconbridge drilled. And you can see from this diagram, this is a longitudinal section or a vertical slice in the earth along the trend of the McKinnon zone, shown in purple here. And we've sort of flown it 140 kilometers westward and superimposed it on the Hemlo mine, just to give the reader and the onlooker here a sense of scale of what we're trying to do. The similarities to Hemlo are that the style of mineralization at McKinnon actually mimics that at Hemlo, that you have both a disseminated component to that mineralization, to that golden mineralization, as well as local high grade. And our job is to try and find more of the high grade as we go deeper. In order to make this deposit much bigger, we have 2 choices, either drilling along trend and or drilling at depth. This first step out program was principally aimed at drilling at depth, because most gold deposits in this part of the world are elongated in the vertical dimension. I'm satisfied to say, so we had two principal targets actually in this last drill program, and that is a shallow step out shown by these red ovals here immediately underneath the McKinnon zone, and then a deep step out program or step down program shown by the deeper oval well below. And that the latter one consisted of 12 holes at about aiming to target the zone at about 500 meters depth. And the rationale for that is that if there's some sort of planarity to the style of mineralization, we should be able to try and hit it and define the footprint. We're just trying to see if the McKinnon zone has a potential to grow bigger. And suffice it to say, and I'm happy to say, in fact, that we hit the McKinnon zone in all holes that we've drilled below the McKinnon zone, other than these 2 black ones here, which are the last ones we've drilled, and we had to cut them short because they didn't. But we've hit the target zone in all the remainder of the holes. The shallow level step outs here, shown in green, and the deep level step downs shown in red. We've hit at least anomalous gold mineralization in all of the holes. Some over quite extensive lengths of drill core, up to 30 or 35 meters of anomalous gold. And we've hit local high-grade gold in hole number 28, as you see from this location here, 14.7 grams per ton over a meter. So we view this as a success. We are still waiting for assays for most of the holes yet, and they are coming in now, and we'll be analyzing and interpreting those assays shortly. And getting them out to the public in the next while. Basically, the only assays we've released to date are the 5 numbered holes here. So we're pleased with this, and we no doubt will be following up with more drilling as time goes on. Our goal is if we're going to find something at depth, it's going to have to be that sort of 3 meters of 10-gram style of material, and the more of that we find, the better it will be for us. So that takes us to where we're going to next. We envision a very robust exploration program this summer. It's going to be focused on developing new drill targets, not only within the McKinnon zone itself and at depth and along trend, but elsewhere on the property, and that'll be more distant. We're more distal from the McKinnon zone as well. We have already been operating on multiple levels throughout the last year and a half since we became public, to try to identify other targets elsewhere on the property while we test the McKinnon zone. And we are starting to see the fruits of our labor to do that. And we're using all sorts of efforts and tools to do that, from geophysics, IP, mag, and so forth, geochemistry, soil samples, and so forth. Basically, we're in the process of doing all this on a very large property package. So here's the western 25 kilometers of our property package. We show the central Hawkins corridor, where we've been focused around the McKinnon zone, shown right here in the red line, along on this part of the central Hawkins portion of our property. We have delineated 3 red boxes here to the west and to the east of McKinnon. We also note the location of these orange dots on this diagram, which are high-grade prospects, some of which have not been drill tested. And off to the west and to the east, these are all targets in the coming 12 months. So where we're going with this is our focus for the next 12 months will mostly be the central Hawkins portion from the aim of geophysics and developing near-term drill targets, that is within the next 6 to 12 months time frame. And then beyond that, as we move to the west, we show you the Western KB claims over here on the west. Big block of claims, which we've just completed recently a big airborne magnetic survey, and that's what you see here on this map. Is this map shows the airborne magnetic survey results, and we've reinterpreted that. We've had that magnetic survey reprocessed and filtered. And we've come up with 3 principal target areas shown in the yellow ovals here, in which we will be conducting further work in order to develop drill targets in the future. That'll be not until 2023 that we see drill targets. And if we step back even further and look at the whole property package, which we show you in this diagram here, we note the location of the central Hawkins corridor, which we've already spoken to you of, as well as the Western KB claims. We envision a serious prospecting and mapping endeavor in those 3 target areas in the Western KB claims, but we also envision early stage prospecting and mapping, very robust and vigorous effort this summer in Eastern block of claims. These are claims we staked just last fall, so we haven't had a serious look at these claims, this group of claims yet. But in a nutshell, we know that we have some McKinnon-like rocks over here in this region as well. So we'll need to be evaluating all of those as well. So these are all for future or development of future drill targets as well. So we have a lot of activities planned for the next 12 to 24 months. And we look forward to getting out there and doing the work. Thank you.
Hi there, and welcome to Cordis Metals. I'm Sean Major, the CEO, and I'd like to present an opportunity to you for investment in Nevada. You can tell from our lead sheet that we're proud of our abilities. Cordis Metals is a part of the Metals Group, which the principals have 20 plus years of experience together, running junior companies in locations around the world. We've learned a lot in those places, lots of challenging jurisdictions and settings, and we brought that back to North America to work in a stable jurisdiction. In 2019, our group went down to Nevada to look for some good projects. We looked at several of them all around, and most of them were in the ranges of Nevada. That's historically where exploration and mining has taken place. About 200 million ounces have been produced over a 200-year time frame. But what we saw was a lot of projects that were rehashing old discoveries, and we wanted to be involved in new discoveries in Nevada, which is a tall order. Fortunately, we found a local expert as a partner, and the rest of this presentation is about the opportunity to invest in new discoveries in Nevada. Just the cautionary statement, of course, mandatory. This is a summary statement about Cordis Metals and our approach. In a nutshell, we're looking for projects or discoveries of deposits beneath shallow cover in the basins of Nevada. It's a significant opportunity. Very few companies are looking in the basins, and we have a methodology for making discoveries there. The methodology itself is done on a large scale, and we're looking for significant deposits. So our company has approximately 15 to 20 at any given time projects. Any one of these could result in a very significant discovery. We've said in this write-up, we're looking for deposits greater than 1 million ounces. Of course, in Nevada, it's a target-rich environment, both in terms of projects and in terms of producers. Producers there are looking to replace production that they've been doing for the last 10 years. And it's our plan to work over the next couple of years to have product available for them. Our team is quite accomplished. We've worked together, as I said, for about 20 years in various iterations. This summary slide talks about some of the principles. Myself and John Williamson have worked together for that time frame, the 20 years. Jim Gregg has been with us since our days in Africa, which was the last 10 years or so. Jeremy Senyek has been around for the last 5 years or so. All four of us are very experienced in capital markets, juniors, and opportunities. The remainder of the team are the experts, of course. We have our CFO, Jesse, who's been around nearly 10 years. And we have a crack team of geologists, Nicole Riseco, Ewan Webster, Clay Newton, and our consultant, Mike Dufresne. Clay Newton is the resident geological expert. He was the vendor of the projects that we acquired, the portfolio. He's PhD in structural geology, and his methods form the basis for our initiative. As I mentioned, Nevada we consider to be a target-rich environment. There's many mid-tier and senior producers there. There are some recognized major gold trends. Our projects are in amongst these, but they are also in some newer areas of Nevada. Cordis-style gold mineralization is our primary target, and this style exists outside of the Carlin Trend, and we are primarily looking in those areas outside of the Carlin Trend. The Carlin Trend itself was discovered in the 70s, and there are many producers. It's very difficult to find ground in that area. We are going to move to the next slide. Nevada has been in the mining game since the early mid-1800s. It's very dependent on the revenue there. That's what drew us to the jurisdiction. They still run by the mining law of 1872, and outside of the major gambling centers, the economy is really driven by mining and the counties and towns rely on it. So it's a very mining-friendly jurisdiction. All of our projects are road accessible as well. This graphic shows part of our story here, outlining the range and basin. Nevada is roughly half range and half basin. These areas were formed around the same time with the same strata, and over time the basins have dropped, the ranges have risen up. You find outcropping rock, jasperoid, and so on in the range, which has been the main indicator for companies. They're able to take rock samples and hone in on the deposits. In the basin, we're not so lucky. It's covered by gravel, deep in the middle, shallow on the edges. And we're looking for areas where the mineralization continues, or the structures at least continue from the range into the basin. So many of our projects are near existing mines and deposits. This basin area makes up roughly half of Nevada as well. So it has the same potential for gold and other metals as the range does. When we go about our work, first we start with the desktop work of our partner, Clay Newton, where his structural work has developed 250 prospects. And over time, he has built up a project portfolio of about 25 projects. We've narrowed that down to about 18. So it's done by, he goes out and stakes the ground after identifying structures called pull-apart basins, which we believe are the origin of many of the deposits in Nevada. He then looks at the hillside and sees what kind of plants are growing there. It gives him an idea of what elements are in the soil. So it's a poor man's geochemistry. We acquired his portfolio of claims that he had staked, and then we perform rock and soil geochemistry, geological mapping, geophysics, including mag and gravity. That gives us a clue about the depth of the bedrock and lights up the highs and lows so that we can do some effective drill targeting. We try to advance all the projects to the drilling stage, either on our own or with joint venture partners. At this point, we have 3 drill-ready projects. The rest of the portfolio is moving toward that stage. It takes about $100,000 to do that per project, and we're looking for joint venture partners to invest $1 million to $2 million in a drill program. This graphic shows locations and categories of the opportunities. Green is, we use that color to identify the very early stage grassroots type projects. You can see that are spread around. This is an image of northern Nevada. These ones are in the process of building up land positions and performing early stage field work. The red indicates projects where we've got geophysical and geochemical results to support the desktop work. And blue represents where we have identified drill targets and are ready with bonding and permitting to proceed to the drill stage. We find joint venture candidates are interested in projects at all levels. Typically, they would take on several small ones, invest a bit, and then pick from the results that they find 1 or 2 projects. Others look at the more advanced projects and take them on. We feel these are ideal for new companies and startups to make lots of news as they move toward discovery. This graphic shows our project pipeline, the early stage, mid, and advanced. It is showing some of the highlights and the analogs. We've got a very good portfolio with some clear analogs that people should be excited about. We plan to release more news about our project profiles and joint ventures that we're forming to complete drill programs. This slide covers a lot of the points that I've made already. It's a summary of the value proposition. We're a very experienced management group that has the full gamut from technical to corporate marketing capability, lots of experience, and we're motivated. We've got succession planning within our organization, which works for us so that we'll have a long-term leadership in our group, but it also gives us opportunities for projects in Nevada where the proponents are have been around a long time and aren't necessarily interested in continuing, although they have excellent projects and would like to see those advance. So we are candidates to take over for existing management groups in Nevada. We use what we're doing as a way to get a foothold there. We believe there's significant upside, and with 15 to 20 projects in the works, that's a lot of opportunities or chances at making a big discovery. We have validated the methodology. We're very pleasantly surprised how well the desktop models hold up in terms of structure when we get to the geophysics stage. And we're very excited about what the outcomes will be. Drilling will commence within the next 2 months, and we expect to see results working through 2-year joint ventures. This is the capital structure. Our market cap is about $5 million, which is very low. Our price in the market is 10 cents. And that means that you can get into this opportunity for the price of the IPO. It's very early stage with a lot of upside. We're completing a current financing, raising about $1.5 million with 10-cent units that include a half warrant at 15 cents. And I encourage as many of you as possible to take a piece of that. A significant number of warrants through financings completed to date. Those all have triggers at 20 cents and are exercisable at 15 cents as well. So it's a very fair entry point right now. Once we get to 20 cents, this is an indication we'll have just under 100 million shares out if all of these warrants and options are exercised in a very healthy treasury. This is the contact information for me, Sean Major, at Cordis Metals. Our head office is in Edmonton. We also have offices in Vancouver and field offices in Nevada, in Reno. We're happy to take calls from investors and joint venture candidates alike. Thanks very much for your time.
Good morning, ladies and gentlemen, and welcome to Arizona Sonora Copper Company. The title of our presentation today is Copper Invest in Sustainability. We do make some forward-looking statements, so I'll draw your attention to the cautionary language. Why ASCU? Well, first of all, it's a brownfield site located in a Tier 1 mining jurisdiction in Arizona. Today, we have a compliant resource of 1.6 billion pounds of copper in the indicated category and 1.9 billion pounds of copper in the inferred category. Last year, we released a PEA, which showed a low capital intensity. The life of mine was 18 years with 56 million pounds of copper cathode production annually. We ran the financial and economic model at $3.35 copper price, and it gave us a post-tax NPV of $312 million US and an IRR after tax of 33%. Key thing to note about this project is it's all on private land, therefore there is no federal nexus, and the company already has significant permits already in place, including the ability to take water for the next 50 years. This year, we're embarking on approximately a 38,000 meter drilling program, which consists of both infill drilling to move indicated resource up into the measured category ahead of a bankable feasibility study in about a year's time. And we also have drilling going on at our exploration property known as Park Salia, which I'll talk to shortly. And of course, we believe the demand for copper is going to be significant in the future decades as we drive towards renewable energy. Obviously, there's going to be significant demand for copper. A little bit about the share capital structure, 71 million shares issued fully diluted 81 million. The options and warrants are in the money. Today we're trading at $2.25 Canadian, which means we currently have a market cap of approximately 160 million Canadian dollars. You can see we have a good distribution of our share capital. Our largest shareholder, Tembo Capital, has been extremely supportive of the company. And since joining the company myself, I've put in close to 3 million Canadian dollars of my own money at a weighted average price of $2.48. We have analyst coverage ranging from $2.95 to $4 Canadian, with a consensus around $3.15. And you can see there as well on the debt side, very little debt, only 1 million Canadian dollars. What have we actually completed over the course of the last year? Well, the infill drilling for the pre-feasibility study has been done. We're waiting on the final assays for that. We've identified a new target at Park Salyer, which is a 100% owned property 2 kilometers to the southwest of the main Cactus mine. We've received rezoning for some of the land we picked up last year that went from residential to commercial property. So now we can actually put mining buildings up on that. We've strengthened the Arizona Sonora management team by bringing in Nick Nikolakakis as a VP of Finance. Nick has 28 years of experience in the industry and has raised over $2 billion US. And of course, we've strengthened the board as well with Sarah Strunk, who runs a very successful legal law practice out of Arizona, is very well connected within the state and understands the state legislature and the regulators. We also have a very strong ESG framework. We've completed a life cycle analysis of the mine, and we're now currently working on various action plans that should provide us with a pathway to net zero carbon emissions. We've also started an application for an OTCQX listing, which we would expect to occur sometime in early April. The pre-feasibility study is on track for the summer of this year, and the bankable feasibility will follow in 6 to 9 months later. Remember, the PEA showed that once project financing was in place, it was an 18-month construction and development period. We would expect construction and development to begin in the first half of 2023, meaning that first production should be realized before the end of 2024. This is a plan view of our land package. A year ago, we had 2,100 acres. We increased that to 4,700 acres last year. And just recently, in the last couple of months, we picked up an additional 158 acres from Bronco Creek. We're in the process of having the title deeds transferred over into the company's name. We do believe the mineralization that we're seeing at Park Salyer will extend onto the Bronco Creek property. So that's going to provide some exciting exploration results in the second half of this year. A little bit on the permitting. As I said earlier, we have a permit to take water for the next 50 years. There is sufficient water in a very strong aquifer that runs 2,000 feet below surface, or about 1,000 feet below the bottom of the current pit. We have an aquifer protection permit, but only for the surface stockpile. The amendment application went in October, and I'm happy to say that currently right now we're in the public review process. That should conclude on the 19th of March, and we would expect shortly thereafter to be awarded our amended aquifer protection permit, not just for the surface stockpile, but it would also include the pit layback and the underground component. The other key projects, construction and development and mine land reclamation permit, will only be applied for in the second quarter of this year, and we would anticipate at the end of this year, early next year, we'd be in possession of those permits, project financing in place, and therefore we can begin construction and development, as I mentioned earlier, in the first half of 2023. A little bit on the global resource. So you can see the total leachable material in the indicated category. We've got close to 1 billion pounds there at 0.7 total soluble % copper. In the inferred resource, there's another 980 million pounds of copper there at a 0.42 total soluble copper. So that's really what we're going after, with this heap leach SXEW plan that we've presented as far as the PEA is concerned, and will be further developed in the pre-feasibility study coming out in the summer of this year. So on the high level economics and the outputs from the financial and economic plan, you can see there on a cost per ton basis processed just over $9 US. Our C1 cash costs were $1.55, all-in sustaining $1.88, which includes a 3.18% NSR royalty due to Tembo Capital and RCF. When you run the economics at today's spot prices, which actually is off the chart at $4.65, a pound of copper, you can see there the NPV 8 after tax is in excess of would be in excess of $700 million US dollars, and the IR after tax would be approaching 58 to 60% IRR. So very robust numbers when you start to look at today's spot prices. And importantly, at $3.35, the project throws off on an unlevered, undiscounted basis close to $1 million US dollars in free cash. Of course, if we were to run those numbers at $4.35 a pound, we'd be looking at close to $2 billion US dollars in free cash. Comparing ourselves to our peer group, you can see we're currently trading at about 0.48 times price to NAV. When we compare that to our peer average, where they're trading in and around about a 0.62 times price to NAV. So that's about a 30% discount to our peer group. We believe over the course of this year, as we continually to drill out Cactus, the project, and obviously with Park Salyer, we complete the pre-feasibility study with maiden reserves. As we continue to de-risk the project, we believe the valuation for the company will increase, and therefore we would expect the share price to increase substantially from today's current levels. We tried to compare ourselves in a couple of years' time once we're in production, where potentially the valuation for the company could sit. We've seen in the PEA that there's a peak production of about 40,000 tons or 80 million pounds of copper annually. We're trying to shoot above that for the pre-feasibility study. If we were able to achieve that, then obviously our production would be in line with a copper mountain, which you can see there on the left-hand side of this slide. Our current enterprise value is in and around 100 million US dollars. And you can see there copper mountains in and around 900 million US. With only 80 million shares issued and outstanding on a fully diluted basis, we would expect post-financing to have no more than 120 million shares issued and outstanding. So that gives you some idea of where potentially the valuation of the company could sit from a share price perspective over the course of the next 2 to 3 years as management continues to execute on this project. And now we get into the really exciting stuff. Here on the left-hand side, you can see the untested target for Park Salyer. We have conducted geophysics on this property, including the historical holes and what we've drilled over the course of the last 18 months. We now have 6 holes publicly documented on this property, and we're seeing extremely strong mineralization, particularly with the enriched chalcocite material. We've estimated that there's anywhere from 40 million to 90 million tons of leachable material that would grade anywhere between 1 to 1.3 total percent soluble copper, which would therefore mean that there's between 1 billion and 2.3 billion pounds of additional leachable copper in the ground. If in the future we were able to either process the primary material through a leaching process, technology still to be developed there, or go back to some form of copper concentrator, you can see that there's even primary material that could add an additional 150 to 750 million pounds of copper. So, over the course of this year, the company is going to be continuing to drill this out, adding to its global resources. We would envisage having a maiden resource on Park Salyer at the time of the bankable feasibility study for the main Cactus project. And that concludes our formal part of the presentation. You can see both Alison and my own contact details there. If you have any further questions for us, please don't hesitate to reach out, and we'd be more than welcome to answer those questions for you. Thank you for tuning in, and thank you for following Arizona Sonora Copper Company.
Very exciting time for our industry for sure. So I think great to take this type of opportunities to get out there and tell the world about the White Gold Corp story. It's a relatively new company, having been formed with Sean Ryan in 2017. And, it's pretty tightly held between ourselves at the Power One Group, Sean Ryan, Agnico Eagle, Kinross, and Eric Sprott. But I think that it's such a very unique opportunity and a company that I think hopefully it should resonate well with the listeners here today, and glad to take this opportunity to tell you about it. And as you mentioned, so I am with the Power One Group. We've been investing and helping finance resource companies for 20 years now. And over that time, I think we've really been able to develop a sense of what it takes to lead to success in this industry. It's unfortunately a very tough and risky business. So to the extent you can mitigate your risks, I think that's always something you should be looking for. And that's really part of what drew us to White Gold, to help, obviously Sean Ryan, the notorious prospector, credited with, millions and millions of ounces of gold discovery. It led to a very exciting time in this area of the Yukon, around 2010. And just to take a step back, our property portfolio is in what's known as the Klondike District. And this was the area that was made infamous, obviously 120 years ago at the Great Klondike Gold Rush. And from that time, people were able to very easily identify the existence of abundant mineralization, and incredibly, there's been over 20 million ounces of gold that's been found in the Placer Creeks, early days by the prospectors. That the process has been modernized throughout the years, and it's continuing today. You probably see the shows like everyone on Discovery Network. But what hasn't happened, and this is just unbelievable, and this is our opportunity, is that there really hadn't been any modern day exploration done in this district up until about 10 or 12 years ago when Sean Ryan got there. And the reason is that this area was not glaciated, no outcrop, and the outcrop is the typical tool used by most prospectors. So most guys didn't know how to work there. Sean Ryan showed up, he had a thesis, listen, with 20 million ounces of gold that surfaced, there's a very high probability to be more gold beneath that in the hard rock. And he was determined to crack the code and figure out how to find it, right? And what he was able to do, which looking back, in fact did crack the code, was use soil geochemistry to identify these mineralized systems. And once he identified the mineralized systems, he then would invest himself or along with other companies to do more advanced exploration. And incredibly, almost immediately when that work started in 2010, they made some very major, like multi-million ounce type discovery. The first was with Underworld Resources when they made the Golden Saddle deposit. And, that was immediately taken out by Kinross. The next was a little bit south of that, Kaminak, which Goldcorp bought for $500 million. So his thesis was proved correct, right? And what he then did on the back of that, very smartly so, and got us so excited and wanted to be involved, he basically tied up the entire district, came to us and said, guys, what I have here is a true district scale opportunity. It's 1 million acres. It's in this great district of Canada. It's got this prolific history. It's extremely underexplored. The little bit of work we've done has led to these amazing discoveries. What do you think about partnering and advancing this camp? Immediately, from our perspective, we really truly felt that was like a once in a lifetime type opportunity. We were thrilled to be able to participate with Sean. We've known him from the past and, really respected his abilities. And, we were also of the belief that, although this was earlier stage, the majors would want to get involved because it's just such a unique type of an opportunity. And that is exactly what happened. We spoke to a bunch of the major mining companies we've known through doing other transactions with different other juniors. And from that group, we chose Agnico to be our partner. So they invested in the company from the very beginning to become a 19.9% shareholder. We also then approached Kinross, who owned the Underworld assets, to join forces with us. Basically, we have known, we have the guys who made their discovery. We figured, listen, like their assets in our hands would probably have the best chance of being advanced, and they were really encouraged by the idea. So now here we are today. We have this huge district scale land package, which we think is like owning 1 million acres of of the Abitibi or Timmins or Nevada Goldfield. We're literally just scratching the surface, and we've been tremendously successful in growing the size of our deposits that we have and also making new discoveries. And that's what I really love about this company. You have the best of both worlds. You have a lot of value. Our defined resources now are almost about 1.8 million ounces in all categories. These are open in all directions. We've continued to grow them by identifying new zones of mineralization in a close proximity. We've been really successful in doing that in the last couple of years. And then we think the ability to continue to grow our deposits north of here 2.5, 3 million ounces is there's a high probability of that by doing the work, and I can show you a little bit of how that's going to happen. But also on the other side of the business, we have this massive sort of greenfield portfolio with tons of blue sky opportunity, and we've been very successful in making a number of high profile discoveries there. The best example of that probably is on our Betty property, which is contiguous to Newmont's coffee deposit. It's right along the same fault. They have several million ounces of gold there. We were able to drill in our maiden program 3.5 grams per ton over 50 meters from surface. And to be able to have this type of opportunity in this day and age is, it's like a dream come true. So we're obviously limited on time here. Just to give you a little bit more background. So these are our flagship deposits. They're 1 million ounces when we first acquired them. We're getting closer to 2 million ounces, 2+ grams, open pit. This is remarkable to be able to have this in a junior company in a great place like Canada. Obviously, we have great partners that, we look to move this forward, but this is now on people's radar. There just aren't that many high quality assets in great jurisdictions like this around. And we think this will continue to grow. Very excitingly, these new zones of mineralization like this Ryan Surprise and Movies Ridge are on a 6.5 kilometer trend just to the west of our flagship deposit. Number of targets there have not been tested at all until just recently. You see some of the highlight drill holes there. Since we've been working on them, we tapped into a number of big results starting to come together here. We think we'll be able to add a number of ounces. These are the 2 zones we've tested so far. Very productive. We think they could connect. So this year's drill program will look to continue to grow these and see if they connect and look at it through the other zones. And here, as I mentioned, is our Betty project. You see where it is. It's right beside Newmont. It's right beside Casino. Like, this is true elephant country, great geology here. We're right along that trend. That's one target. We also have our Mascot target, which has seen some preliminary work as well. It's the biggest target actually on that property. There's been some great high-grade holes there, and we're going to be performing a first-time ever diamond drill campaign there this year. So, here's some more results. We followed up some of our earlier drilling, big, broad zones of high-grade mineralization. This is the kind of stuff you sort of dream for as a junior. These were some of our highlights from last year. Going into 2022, we are fully funded on the backs of this discovery. Our partner Agnico wanted to increase their interest in our company. I think this further validates the opportunity here. They've gone to 19.9%. We're fully financed now for 2022. And in 2022, what you can look forward to with our drill starting to turn in the coming months is continue to sort of demonstrate the ability to significantly grow our resource size around our flagship deposits, particularly some of the new discoveries up there, as well as follow up on these maiden drill programs. This Betty Ford, I think we're really, excited by what we've tapped into there and want to continue to demonstrate the robustness of that system, as well as some diamond drilling on a couple of the other targets on that property. So, like I mentioned, pretty exciting opportunity for us. We just got to work to get the name out there. The analysts that do cover us have like 270 and over target type prices. We're trading about 70 cents here. So clearly a disconnect, but now, hopefully we can continue to sort of get a re-rating by doing, more good jobs in the field with what we've done out there and getting out and telling the story with opportunities like this.
Welcome to the Invest Yukon site tour. My name's Sean Ryan, and I'm a technical advisor for White Gold, and we're sitting on the White Gold project, our flagship property. This season's work, we're trying to follow up on the Ryan Surprise. Last year we drilled some interesting holes. We had some nice intersections. So this year we're coming in and we're hitting it again at a little bit bigger spread pattern, a little bit deeper drilling. The Golden Saddle's got roughly 1.5 million ounces in it. And what we'd like to do is see if we could find these other satellite pods and hopefully find another 500,000 ounces here and maybe another 500,000 ounces in another spot. So that's what the goal is. So right now, the Ryan Surprise is up on the next ridge, about 2 kilometers from the Golden Saddle. So that one looks like it's got some legs in it because we're hitting some nice intersections. And then the Rab is actually working just about 500 meters away on another place called Uli's Ridge. And the interesting part about Uli's Ridge was that was one of the original areas I was back in 2003 when I was working this project. And we know we had some nice sniffs of gold, and now we're actually starting to find that source that I was sniffing out way back when. And really what it is we soil sample, start with ridges and spurs, so all the ridges you see behind us, we've actually sampled. And once we toe into a gold hit on those ridges, then we go into gridding. And what we're trying to do is figure out how that gold is sitting or what's the pattern of the gold. Once we locate that, then we go into this GT probe, and that's just piercing the ground every 5 meters to tighten up these anomalies that we call it. Then we bring in either a diamond drill or a Rab drill. And right now we're using Rab drills to poke a quick 60-meter hole. We put a downhole televiewer down the hole. We XRF the powder coming out. So then if we make a good hit, after we've assayed them rocks from the Rab system, then what we do is follow it up with a diamond drill program. And that's what we're doing right now with White Gold. We have both of those kind of programs going on. The White Gold District represents an area that was virtually unprospected back in 2003 and 4. Like, we knew we had all these placer creeks in here, but nobody's actually ever found the source. So what was this Golden Saddle specifically represented the first major ounces of gold found in quartz vein systems in this Klondike area. So that represents, like I say, a little over 1.5 million ounces. But there's got to be more of these pods going on. And so this is what, now with our initial big regional soils, we figured out where the haystacks were. And those are called mineralized systems. We don't know where the needles are in there, but that's our job now. And now we're moving into the drill stage. The last 10 years, 12 years, I call it the recon stage. That's the soil phase, just getting to understand your district. And now we're applying new techniques like LiDAR and stuff like that to actually, so it could take away the trees, so we could see the substructure. And then we incorporate that with the soils. And then now we're into this drilling phase with the Rab and the diamond drill, and we should be making a few more discoveries. How many, we're not sure. The idea is that I think we're gonna make a bunch more discoveries. And so this is just kind of the beginning stages, because where I come from, the Timmins camp, they've been looking for gold for 100 years, and they're still finding more gold. So this is kind of the beginning stages, and I hope to see this go for the next 30 to 40 years.
Hi, I'm Luke Alexander, President and CEO of Nucor Gold. Today, I'm going to talk to you about our Enchi project in Ghana. It's a district scale exploration project with a PEA that fundamentally underpins the value of the company for our shareholders and prospective shareholders. First thing I'm going to highlight is that I will be making some forward-looking statements, so I would encourage you to go to our website and read through this in a bit more detail. Maybe I'll start here on the things that ultimately set Nucor apart from a number of other companies at our stage. First of all, the management team and board have a proven track record of making shareholders money. The other thing is that as a management and board, we're extremely well aligned with shareholders through our 27% ownership in the business. So we ultimately think as shareholders first. We are also very well supported by deep-pocketed, mining-focused institutional investors with a current 40% ownership of Nucor. Ghana is a Tier 1 jurisdiction, and I'll talk about that in a bit more detail. We currently sit on a 1.4 million ounce inferred resource, so a very good resource for us to be building off of. As I mentioned, we do have a very robust PEA, which we put out last year, June of last year, which fundamentally underpins the value of the company. But where we're going to create value for our shareholders from here is through the additional 70,000 meters of drilling that did not get included in that PEA and historical drilling. The management team and board, again, a number of you will be familiar with these individuals involved in a number of these companies listed here, all success stories in the past 5 years. My background is I spent 15 years on the investment banking side of the business, advising ASX, TSX, London-listed companies and investors on different mining transactions around the world. That's where I got to know the team involved in Nucor today. ESG is something that's very important to us. Our fundamental view is that all stakeholders should benefit from a project, and that's ultimately the best way to push it forward. From a capital markets perspective, as I mentioned, we are very well supported by deep-pocketed, long-term focused institutional investors. It's rare that you'll see a company at our stage with such a Tier 1 shareholder list, and I think that really speaks to the quality of the project as well as the team involved. We're also very well covered from a number of Tier 1 investment banks out of Toronto. These are groups that see the upside that there is within our project, as well as keen to get behind the story and present that to their clients. As I mentioned, Ghana is a Tier 1 jurisdiction to be operating in, and we're very fortunate to have amassed such a large land package when we did. Ghana is Africa's largest gold producer, and it's the 6th largest gold producer globally. With that, you get a very well aligned government. It's important for the economy. It's important for the tax base. But for us, it also means there's a huge amount of skilled labor in country, as well as mining service companies for us to draw upon. But ultimately, don't listen to me as a single asset company in Ghana. Look at who's operating in the country. You've currently got 4 of the top 10 largest gold producers on the planet operating in Ghana. Newmont being the largest gold producer, currently 14% of their global production comes from Ghana. They're investing another $800 million or 750 to 850, which will take their global production coming from Ghana to 20%. I think that speaks for itself in terms of what a safe and stable jurisdiction Ghana is to be operating in. We're physically located in the southwest corner of Ghana. If I now zoom in, there's 2 prolific gold belts that run through Ghana. You've got the Ashanti belt, and then we're situated on the Sefwi Bibiani belt. To the north of us, you've got Kinross's Chirano mine, historical endowment of 5.5 million ounces. Bibiani to the north of that at 6.5 million ounces. And then one of Newmont's 2 producing mines, the Ahafo mine, which I talked about from an investment perspective, sitting at 15.5 million ounces. So very large deposits along trend from us. One of the things we also really benefit from is great infrastructure. We've currently got a paved road and highway that runs right through our project to the town of Enchi. Our core shack sits about 5 kilometers outside of town. Again, you can drive 100 kilometers an hour along this paved road, power, gas stations, cell phone towers. So great infrastructure for us to ultimately leverage off of. It is a very large land package, 216 square kilometers in size. We've identified 25 targets to date, of which we've only drilled on 8 of them. We did put out a PEA in June of 2021. This was an updated PEA from a historical one that existed, and it outlines a very simple open pit heap leach project. At an $1,850 gold price, you're looking at an after-tax NPV of $302 million, after-tax IRR of 54%. But where we're really going to create the value for shareholders from here is through the additional 70,000 meters of drilling that did not get included in that PEA or in our resource update. If you're investing in an advanced stage exploration project, you're probably looking for leverage to the gold price, and our Enchi project definitely provides that. At a $1,950 gold price, you're adding about $50 million of NPV, so very good leverage to the gold price. The other thing we put out as part of our PEA was a resource update. We currently sit at about 1.4 million ounces. If you look at all the historical kind of work that's been done, you're looking at about 110,000 meters of work, which ultimately feeds this 1.4 million ounces. So needless to say, our view is that the additional 70,000 meters, of which about 40,000 will get used for future updates, will start to push this resource, in our view, to 2 million ounces. Which is a very nice place to be. In terms of the grade, sits at about 0.62 grams per ton. If you compare that to other heap leach projects globally, you're looking at about 0.4 to 0.5 grams per ton. So that's one of the things that really drives the economics of this project is the grade. Looking at our current 90,000 meter drill program, it has been focused on our existing resource areas. All of them remain open along strike, so we have been stepping out at all of those areas. We're also going back to previously drill tested areas like Arati, Kojina Hill, that have had very good past drill success, and following up on that. And then we're very excited to be drilling some greenfield targets for the first time ever. And we, at the beginning of March, put out some of those results with some maiden discoveries, and excited to get back there and do some further drilling given the success that we've had. In terms of the project itself, as I mentioned, there's 4 current resource areas: Sium, Boeing, Nyam, and Quachikrum. I'll now take you in and highlight these areas in a little bit more detail and show you the upside that we think we've got with a bunch of the drilling that we've done. Starting here with Sium, it is our largest deposit, 725,000 ounces. As I take you through these 3D models, what you're going to be seeing here is these are the pits that at Sium constrain the 725,000 ounces, and across our project, the 1.4 million ounces. You're then going to see a bunch of the drilling that we've done in 2020 and 2021 that sits outside of the current resource. And this is where we think we will start to add ounces as we look to include those in future resource updates. Sitting only 4 kilometers away from our Sium deposit is our Boeing deposit. It sits at 500,000 ounces. And this one, I think, is a very good example of a bunch of that drilling that we've done that sits outside of our current pit constrained resource. At Boeing, we're looking at a 2.8 kilometer pit constrained resource. You can now clearly see that we've expanded meaningfully to the north as well as the south of that pit constrained resource. We've added about 1.4 kilometers of mineralized material in total. We've also focused on drilling up dip and down dip at all of our existing resource areas with the goal of widening and deepening the overall pits to capture more gold. I'll now take you over to, or actually maybe I'll just show you this first. This hole number 236 would be a good example of the drilling that we've done that's currently not included within our existing resource. This hole did not exist when we put out our resource update or when this pit was designed. So adding 1.24 over 5 meters and 0.9 over 69 meters, we think will, ultimately deepen and widen the overall size of those pits. When I now pull you back ever so slightly, it's pretty clear to see where a bunch of these holes currently sit that are up dip and down dip from our existing resource area. Our last two resource areas are Nyam and Quachikroom. Again, Nyam is a pit-constrained resource as well as Quachikroom. We have stepped out to the north, to the south of both of these areas, and we've now actually drilled right through this entire gap and proven up mineralization throughout that area, as well as areas like this, Kojina Hill, which with additional drilling, we think we will be able to bring into the resource category. So all of these things will add to our 1.4 million ounces. In terms of some of the targets that we've been focused on from an earlier stage perspective and greenfield perspective, Tokasea and Sium South, we put maiden discoveries out at both of those areas at the beginning of March, and I would encourage you to go have a look at those results. These are very large anomalies, 6 kilometers by 2 to 3 kilometers in size, so very prospective areas for us to do follow-up drilling. The last thing I'll just touch on, and this is something we're extremely excited about as part of this 90,000 meter program, is the opportunity at depth. What we're looking at here is a long section of our Enchi project. We're then comparing that to Kinross's Chirano mine. What we've done is we've superimposed the depth of the oxides at our Enchi project and compared that to Kinross's Chirano mine. As I mentioned, our current resource, about 85% of it sits within the oxides, and the average depth of those pits that I was just showing you within the 3D models is only down to 63 meters. As part of this drill program, for the first time ever, we're starting to drill below 150 meters. And if you compare that and look at other greenstone hosted deposits along the Sefwi-Bibiani belt, where you really see them grow in size and increase in grade is as you start to drill deeper. We've been very encouraged by some of the deeper results that we've been getting to date. Taking you back now to our Nyam deposit, as you can see here, really nice oxide material, pit constrained near surface. But as we started to drill down to kind of 175 meters below surface, which is the deepest ever drilled at Nyam, we've hit 5.4 grams over 9 meters. Sitting about 500 meters to the south of hole number 45, again, as we started to drill down to kind of 175, 200 meters below surface, we've hit 4.5 grams over 13 meters. Included in that, 7.4 grams over almost 8 meters. So these are the kind of results that will then go in and do additional follow-up drilling, looking to chase them to depth. When I now pull back from that and show you from a long perspective, you can see that we've had a number of higher grade intercepts with this deeper drilling. 5.8 grams over 7, 5.6 over 8, 5.4 over 9, almost 5 grams over 8 meters. As I mentioned, sitting 500 meters away, 6.25 over 6 meters, 3.5 over 9. There's that 4.5 grams over 13 meters. We think what we've done here is ultimately tapped into a couple of these feeder zones that show the high grade potential that we've got on our project. And this remains completely open in between those two feeder zones, as well as to both the north and the south. So will warrant significant follow-up drilling, with future programs. Just to recap, top tier management team who are truly aligned through our 27% ownership in the business, very well supported by the capital markets and deep pocketed institutional investors. But where we're going to create the value from here is through the additional 70,000 meters of drilling that will go into future resource updates as well as economic studies. I'd encourage you to get in touch. We're always keen to engage with existing and prospective shareholders. Thank you very much.
Welcome, everybody, to the presentation of Generation Mining. We're going to be talking about the Marathon Palladium Copper mine that we're developing in northwestern Ontario today. And I think you're going to find it interesting. So we are mainly a palladium company. We've got over 4 million ounces of measured and indicated resources on the property, and over 1 billion pounds of copper, and not a small amount of platinum as well. And we're going to be mining these all together. They're all mixed up in one deposit. And we are getting ready to start building a mine probably early next year. So we've got the team of people to do this. Jamie Levy and myself have been partners for several years. We had a previous company called Pine Point Mining, which we sold to one of the Osisko Group in 2018, and we spun this company out. Previous to that, I started 5 other mining companies. 4 of them made it into production, and one of them we sold at the feasibility stage. So pretty good track record on that. Drew Anwell is our chief operating officer. He was one of the guys that built the big Detour mine. I believe it's the largest mine, gold mine in Canada. And previous to that, he was with companies like Barrick and Placer Dome, and for his entire career. And Brian Jennings, our CFO, has been involved in mining for several years. And previous to that, he was involved in some of the largest restructurings in Canadian corporate history. And I won't get into all the different people, but we do, just suffice to say, we have a team here. And we also have a pretty good independent board of directors. It kind of rounds out the mining sectors. Cashel Meager, for example, is an engineer who's the president of Capstone Mining. Paul Murphy is an accountant who's the chairman of Alamos Gold, and he used to run the mining group for PricewaterhouseCoopers. On the other side there, on the left there, Phil Walford is a reserve geologist who won the Bill Dennis Award for the discovery of the Valentine Gold Project. Jen Wagner is a lawyer who is a senior vice president at Kirkland Gold until its recent merger with Agnico, and she's moving over to Agnico. And then Steve Reeford's a world-class geophysicist. So pretty good group of independent directors. There's a location map here. This is just showing kind of not only where we are, but where we are in proximity to a lot of other projects. There's several operating mines in this area, including Hemlo, just down the highway from us. And a couple of mines here under construction, Magino and the Hard Rock mine to the north of us, and a bunch of other operating mines on both sides of the border. So pretty good geological territory. Drilling a little closer to the property, the blue area is our property. And the Marathon deposit on the right there is the one that we're looking at bringing into production. But this slide shows you the kind of infrastructure we're blessed with. Got Trans-Canada Highway coming through here. There's an airport right on the property. Marathon, the town of Marathon is just south of us. The CPR main line goes through Marathon. And that power line coming up from the bottom right there is really important to us. It's one of those mega power lines. It's called the East-West Tie, just under construction now. Will be finished this summer. And what that's going to allow us to do is go on the grid. The other 2 mines in this region that are under construction both have to generate their own power from natural gas. That's going to cost a lot of money, and it's also going to not be as green as being on the Ontario grid. So we've got a real benefit here. We have to, infrastructure-wise, we literally have to build 2 kilometers of power line, and then we're hooked up to our substation. So pretty sweet deal. So we did a feasibility study last year. Some of you may have seen seen this. It showed a 13-year mine life, producing 245,000 ounces of palladium equivalent a year. If you did a gold equivalent on that at the base case prices, it would be about 300,000 ounces of gold. So pretty good size mine. Upfront capex pretty reasonable at 665 million Canadian dollars. That's about 520 US. And the all-in sustaining cost to produce an ounce of palladium is just over $800. At the base case numbers we used for the feasibility study were 1725 palladium and 320 gold, copper. And if you look at those numbers, they're substantially below where both of those commodities are today. But even at those low prices, this project has an internal rate of return of 30%. Which is probably in the top 15 or 20% of feasibility studies in the mining industry. And it has a net present value of Canadian dollars a billion, which is pretty substantial for a company our size. If you'd looked at spot prices when we released the study, the numbers were even more compelling, 47% IRR and a $2 billion net present value. And, just for fun, we did one recently the other day and ran it at current numbers, and it was almost $3 billion net present value. And that shows a base case payback of 2.3 years, and at spot just a year and a half. So again, pretty special numbers. And this just shows you the distribution of revenue on the property. If you look on the top right-hand column there, as you can see, it's 58% palladium and 26% copper. And the other metals don't look as important. The platinum is substantial, but the gold and silver look small. But, those are the ones that we were able to stream to Wheaton Precious. We've streamed the gold and a small portion of the platinum to Wheaton Precious Metals, and that's going to give us a big leg up on the capex. So we're looking at $240 million from Wheaton, 40 of it coming up front, and then the rest of it coming during construction. And that 40 million is going to allow us to do all the detailed engineering and start putting down payments on equipment, so we can get ready to go once our permits are issued. So it's all coming together here. The next step for us to do is a debt package, and we're looking at $400 to $500 million Canadian in debt, and then we'll see what kind of equity we need after that happens. And again, pretty compelling. The first 3 years, the net cash flow after tax is over $1 billion. Pretty special. And here's the profile of metal production, at least of copper and palladium. Palladium, we've jigged the mine to get as much palladium out as we can in the earlier years, and then having it transition over time into a co-producer of palladium and copper. And the sensitivities on here, if you look along that top line there, all the way to the right there, $2,500 an ounce. As you can see, that's where it adds $800 million to the net present value. But, if you cut that in half and go all the way down to $1,250 an ounce, you've still got a 20% internal rate of return, which is kind of the threshold where you really need to have to build a mine. I don't think there's too many projects out there where you can cut the main commodity price in half and still have a 20% IRR. On the copper side, same sort of thing happens at $450 copper. Copper pays all of the operating costs in this mine. That again, you don't see a byproduct paying at current, and that's at a little below current spot prices. And then down along the bottom there on the capex, there's been some inflation, and we're expecting a little bit of inflation in this project with things like diesel, etc. But even if you went 20% higher in terms of inflation in the capex, you've still got a 24% internal rate of return. So again, very, very special numbers. And just a quick lesson on palladium itself. Palladium is in deficit. It's one of the few metals required by law to be in every single car that is sold, and every single gasoline car. And as a result, it's been in shortage. And the loadings of palladium per automobile have been increasing in China and Europe now for the last 5 or 6 years. And China will continue to increase for the next 2 years. After that, India is talking about doing the same thing, Brazil, Mexico, and other countries as well, trying to clean up their air in their capital cities. So it's not going away anytime soon, the demand for palladium. At some point it will, because electric cars don't use it, but that will be a while, because certainly hybrid cars, which have been vastly outselling electric cars, use even more palladium than a regular car. And this just shows you the last 20 years and the fact that it's been in deficit over that period of time. This shows you, this is a comparison of all the copper mines in the world. And this is a chart prepared by a company called Skarn out of London, England. And they put us in the bottom 4% in terms of carbon footprint on a copper equivalent basis in the whole world. So it's one of the cleanest mines in terms of carbon footprint in the world. It's pretty special. So where are we in the permitting? The first step we need to do is get our environmental assessment improved. That's going through something called the Joint Panel Review. Next week, the hearings start, and those hearings will be going on for about a month. And at that point, the Joint Review Panel then has 90 days to give their recommendation to the government. So we should have a pretty good idea on this in July. We're expecting approval. You never know when it comes to a government, but we're pretty confident in it based on the series of questions that they've been asking us. I think we're expecting this to go ahead. At that point, the government itself has 4 months to make to accept the recommendations, and at that point, our permits can be issued. We're applying for those permits now. Also, a couple of other things. We started detailed engineering last October, and that should be done this coming October, November, and that is expected to be. That will give us the ability to start building the mine. We're also negotiating with the First Nations. We've got some letters of intent, etc., with them, and we're just trying to get those finalized as well over the coming months. I've got a lot of exploration potential here. There's many showings on the property that have not been followed up, and we've even got 2 other deposits which are not part of the feasibility study. So we expect this mine to go a lot longer than 13 years. And we will be exploring from time to time some of these other showings. So comparing is one way to look at it. We're a precious metals company. These are mostly gold companies, but we're trading at around 15 to 17% of our net present value. Whereas the average in this industry is about 90%. And even if we were just to get into the middle of this chart, around 45-50%, then that would be a multiple of the current share price. And that's where we think we belong. We think once this mine is financed and the permits are issued, that we will get that re-rating. And you might have seen the Lassonde curve before. We're in a really great spot on this curve, which is development. We are actually spending the money we're spending on engineering right now as part of the CapEx. So that is going ahead. So yes, it's happening. And that wraps up the presentation. We've got about 180 million shares outstanding. We have no more warrants. They all got exercised, or a few of them expired last month. And we've got some pretty smart shareholders. Sibanye-Stillwater, which is the largest platinum company and the second largest palladium company in the world, is a 19% shareholder. Eric Sprott, the mining billionaire, is another 9%. Lucas Lundin, yet another big success story in the mining business, at 6%. And Osisko Mining owns a good chunk. And directors and officers who've been buying out of the market for months now own about 7%. So very strong ownership of about 45% of the company, and the rest is kind of out there. There's a few funds that own us, but most of the rest of that is retail. So thank you for listening. Please don't hesitate to come to the other sessions and ask any questions that you might have. And I hope you like the story, and I think it's a good one, and it's certainly one that's going to be a very successful mine one day.
At this year's 6th Virtual Spring Conference, We're taking a short break now, but in just about 20 minutes at the top of the hour at 2 p.m. Eastern, join us for part 2 right here in the same webinar room. So sit tight. Maybe in the meantime, take a short walk, grab a bite to eat, some water. We'll see you shortly. Thanks.
Good day, everyone. It's Terry Lynch coming to you from Save Canadian Mining. You probably have seen me a lot on Power Nickel lately, but today I want to talk to you about Save Canadian Mining, which is something that's near and dear to my heart. It's basically a movement to stop predatory short selling. And I'm going to, explain to you in this presentation why that would be such a, compelling thing for all mining securities in Canada and for the mining communities that our mines service and are a part of. So let's start to understand a bit about what is the problem and what are we trying to solve here. And I think the theme I chose to speak on this keynote was, does Canada have the courage to stop predatory short selling? And it's an important question, and I'm hoping we get the right answer, but I'm not sure that we will. But it's important to address it. So let's learn a bit more. So this slide here is what I would call the money slide. It basically explains what the problem is. So back in 2012, they eliminated something called the tick test. What was the tick test? Well, the tick test was, up until then, from the start of stock exchanges to that period in time in history, in order to short a stock, the stock had to be going up. And that made a ton of sense because basically stock markets were formed to do two things. One, to enable investors, both individual and mutual funds and pension funds, to access more investment opportunities. That was number one reason. Second, they were incorporated to allow companies to access growth capital. So that really proliferated the modern world that we're into, and that was a great thing. So that rule on the short selling was basically to encourage investors and to encourage capital formation. Now, since they put that in, it's really been about the traders that have been making the money, and those guys generally are parasites. I'm just going to flat out call them that. The predatory short sellers are parasites. They basically suck the lifeblood out of companies and out of individual and pension and mutual fund investors. Period. They have no constructive value. Now, that's harsh, but I've come to this, from experience. This math on the screen is why. Since that change, the trading has basically pushed. Historically, mining companies traded at or around the commodity price index, which makes a ton of sense, right? We're a commodity business. We should trade in line with the commodities. Well, since the tick test was eliminated and the predatory short sellers were sort of given the green light, you can see on the screen, this is something from a third-party independent research firm called Muir & Beale, a very respected research house, not from Terry's envelope. It basically showed that the metals and mining index now is trading at 35% versus what it was back in 2012, and the commodities index was trading around 93%. So, in other words, the math would be stocks would almost have to triple to get back to normal. Think about that. And what's more important, what's that cost? Well, let's do the math. Let's understand what the significance is of this problem I'm telling you about today. So I just quick and dirty did the TSXV market cap of the index. Okay, that's not everyone in junior mining, but that's a big chunk of it. 26.4 billion as of yesterday. That's March 8th. So what does this value cap cost? Well, just to refresh you on the numbers, 35.27 and 93.07%. So you do the math, okay, assuming that I'm, my high school math and university math is okay, and it was good. I did good in math. There's a $46 billion loss. $46 billion in lost capitalization for companies relative to normal. So you think about the jobs, think about the loss of taxes, think about the loss of productivity, the loss of growth, all for naught, thanks to this loss, 46 billion. And mining jobs are amongst the best jobs in the world. Pays a lot of money. And not only do they pay a lot of money, but they also employ, a ton of Indigenous people. In this country, we need to be supporting our Indigenous people. And this is one of the most constructive ways that we can do that. And they make, really great money doing it. And it's in their backyard. They don't have to move out of their community. And it's fantastic. So when we're destroying mining companies' ability to access the capital markets, we're destroying communities, we're destroying people, and it's bad, it's got to stop. So this is just a summary slide that we developed. Since tick test has been removed, the prices are down almost 2.5 times from historic norms. It's not linked to the decline in commodities. As a result, the number of issuers has declined dramatically. equity capital raised is a fraction of previous levels, and a 62.5% spending drop in local economic activity in Canadian mining companies. Those are scary numbers. And the stats on the screen just sort of substantiate, what I've talked about earlier. So where are we now? Well, predatory short selling is rampant. Okay, it's not hidden anymore. We can see this headlines, right? We've got GameStop and Wall Street Bets. So it's front page news. It's not like what is predatory short selling. I think when I first started this before Wall Street Bets, nobody even knew what predatory short selling was, or very few people outside of the securities industry. And I would have to explain, hey, are you against short selling? No, not against short selling. You want to bet against the company? Good, bet against the company. But, predatory short selling, what the definition is, in my mind, is when you short sell a stock, you don't put up the security. You basically don't even market as a short sale, and you don't disclose it. And that's what happens, and unfortunately, our systems do not catch that, despite what regulators say. It's not accurate. They just do not catch predatory short selling. As an example, in Canada, they have a settlement system where when you sell a stock, you're supposed to pay up in 2 days. So either you pay for your stock that you bought or you deliver your stock. Well, they've got this great thing called plus 10. So you can actually not deliver your stock for 10 days before it's declared a failed trade. Okay. And then what happens right now is on the 9th day, these hedge funds that are located offshore, don't pay Canadian taxes, they flip it to their next numbered company. And they never actually declare it as a short. They never cover their trades. And, it's just ridiculous. This is what's led to this destruction in value. And occasionally they get caught, but not a lot. This is an example. Cormark Securities got caught and had to pay a penalty to the SEC, who actually was the one who caught them. And, if you think Cormark, a very small investment bank in Canada, is the sole perpetrator, I got a bridge I want to sell you in Brooklyn, because, it's everyone in that sector is doing this. And, we've spoken to the Star, we've spoken to, many media outlets to try and bring this to the attention of the politicians to make changes to this. And, we haven't been successful. At the end of the day, we've gotten audiences and they say, hey, we support you guys. We think you got something good here. But at the end of the day, it's the rubber hits the road when legislation gets enacted and we make rule changes. And that has not happened. So to that extent, we've been a failure. We've brought it to the brink, but it hasn't happened yet. In the US, it's starting to happen. The Department of Justice is rolling. They're in the last, these are headlines from the last sort of 3 months. And they have, the short sellers in the US are I think, living in fear right now, because there's likely to be major indictments handed down. It's going to be people doing jail time, and well-deserved, and hopefully they'll lose a lot of money. And because this thing basically threatens capitalism, and that's why it's so important that we fight it back. In Canada, haven't had nearly as much activity. Canada has just, but on the securities level, it's this is what we're doing. Crickets, nothing. And we had in Ontario a Royal Commission that talked about doing some good things. They didn't go far enough in my view, but they did make they did suggest many positive things that we endorsed and were supportive of, including banning short covering in a private placement, which happens all the time in the capital markets and basically leads to the destruction in capital value that we saw on the screen. The other thing they were going to do is they're going to change the transaction settlement from T plus 2 plus 10, which is the criminal one we talked about up front, to T plus 2 plus 4. And at the end of the fourth day, if you didn't deliver the stock or a contract to borrow, not a promise to borrow, not I think I can borrow, but an actual contract to borrow, then they would force a buy-in. Now, those would be healthy things that would stop and make predatory short sellers think twice about selling. I still think we need to reinstate the tick test. That's the best way. But those steps would have been a step in the right direction, but it hasn't happened yet. And now, while we were making progress with the Ford government, they at the end dragged their feet and they didn't deliver the goods. Will they deliver it in the next election if they win? I don't know. I hope so. But I'm going to make this a campaign issue and talk to the people that are running for office and ask them point blank, are you going to support these changes? If you're not going to support these changes, then Save Canadian Mining will be coming out and saying, do not vote for these guys because they will not do anything to support our capitalist system, which has given us our great way of life. So it's going to, that's our view going forward. We want to pound this now. So what can government do? Ideally, they reinstate the tick test. We've seen the destruction that it's caused. At worst, they should definitely do a review of it. The tick test hasn't been reviewed in 10 years. When it was put in place, it was not well reviewed before they put it in place, and hence the problems they've created. In the interim, the major task force recommendations that, to their credit, that they did come forward with, which we talked about, the covering in the private placement, and basically transaction settlement being reduced from T plus 2 plus 10 to T plus 2 plus 4. Those would be very good. So that would be very positive. But, it remains to be seen if they lack the political will to do this. I don't know why they wouldn't do it. It's like offshore hedge funds don't vote. Basically, the only possible reason I can see is the banks make a lot of money on this. There's no question about it. And they're, while they don't, aren't the ones doing the short selling, their systems enable it to happen, and they make a lot of money providing those systems. I don't know if that's part of the process, but that needs to be stopped because it's overall super negative for our Canadian economy. What can you do to help? You can donate your time or your capital. Small companies like Power Nickel, which is what I run. This is a volunteer organization for me. We give between 5 and 10,000. That's just about all we can do. Bigger companies like Cisco have given 15 to 20K. Eric Sprott has given over 50K. He's been our number one supporter. Many individuals has given sort of $20 to $100. Money is used to fund media and lobbying efforts. No staff is being, I'm not getting paid. There's no remuneration here. We're just doing this to try and do something constructive for our sector, for our industry. And we expect it to go beyond mining. This is something that should be in, for, biotech or tech or, industrials, oil and gas. It needs to go across the board. But we need to raise money to basically pay for our media and lobbying efforts. The guys at like SICX, who, one of our core founding parties, has, been working for a long time without any compensation. We need to sort of take care of these people. And so that we'll need to raise some funds. We also need people to help out. I've been at this for 3 years. I'm now busy, with my day job, running Power Nickel. And frankly, if there's somebody who would like to become the new champion for Save Canadian Mining, then I'm ready to, help them pass the baton. But I'm also ready to stay with it. But I mean, at the end of the day, we definitely need to keep the heat on. We're close, but we're not at the finish line. So if you can help us, please reach out and contact me at Terry@Save Canadian Mining. And let's try and get this done. This would be really good for the mining sector overall, and for our mining communities, and for our country, and it needs to be done. So with that, I want to wish you a great day and hope everything's going well for you. Cheers for now.
Hello, good day. I'm Ali Haji, Chief Executive and Director of Ion Energy. Ion Energy is Mongolia's first lithium brine explorer and developer. We currently control 2 assets in country, and the company was co-founded by myself as well as my executive chairman back in 2017. That's your typical disclaimer, which I think most of you are familiar with. And I'd like to speak about the team. My name, as I mentioned, Ali Haji, Chief Executive and Director. I've had 13 years of international asset management experience, working in multiple capacities from a program management perspective to mergers and acquisitions for a major global asset manager. I joined this group around 5 years ago as an advisor to a company by the name of Atma Capital Markets, along with Step Gold, a gold producer currently in Mongolia as well. My father's been in mining since 1998, so you could say it runs in my blood. Matthew Wood, my chairman, is also the chairman of Orangian Resources. He's in fact the chairman of Step Gold as well. And he is a serial mining entrepreneur by trade. He is a Rio Tinto Gold Scholar, so understands geology very well, but has also had a number of successful exits around the world, including the sale of Avanco Resources in Brazil to Oz Minerals in March 2018 for about $440 million Australian. One of my more recent additions as a advisor and director for business development in China is Miss Wendy Li. She's worked in that region for quite some time, having worked with Noble from a sort of offtake and commodity trading perspective. She brings a significant amount of strength being based in Shenzhen. Bata Tumarochir is my Mongolian director. We have 2 Mongolian directors. We believe it's important to operate a company with local presence, and Bata and Enki both fill that remit. Bata is currently the chief executive and director of Step Gold. He is an advisor to the Ministry of Mines. He was with the prior government. He was reappointed with the new government. So we are really politically agnostic in country, irrespective of which government is in power. We're still able to get things done. Neil Varach is my investment banking professional, an ex-Dundee Goodman banker, also the founder of Atma Corp, and he brings together a lot of capital markets experience for the team. And Tushin Keshiksurin is my local Mongolian director that leads exploration. He's had a number of years of experience exploring in that region, but importantly ensures that we have the necessary access to equipment and manpower for our exploration programs, which did commence shortly after we went public. John McVicker is my CFO and ex-partner from EY. So happy to have him on board. And then the next 4 folks are really where I would hope that the lithium experience comes across. Paul Fornazzari was the original chairman at Lithium Americas. He was one of the original directors at Neo Lithium as well. He's a partner at Fastcan, where he leads the LATAM Global Mining Group. And he was the lawyer on file that, as recently as last quarter, sold Neo Lithium to Zijin of China. So an individual that's very much considered a pioneer in the brine space in the Americas and has also had some successes with exits as well. Don Haynes is my technical advisor. He's a gentleman that's worked with the OSC and the TSX to define what a 43-101 should be for a brine company to go public. He's worked on essentially every brine asset around the world. He continues to be our chief technical advisor. He designs our exploration programs, reviews the results of those exploration programs, and ultimately provides us with next steps as far as de-risking is concerned. Dr. Hashbat Dashtatsern is my PhD lithium hydrogeologist on the ground in Mongolia. He studied at Akita University in Japan, but importantly ensures that Don's instructions are carried out and reports back to Don as to exploration and any sort of future transactions that we would be doing on the ground there. Dr. David Deeks is a more recent advisory board member that was added. He is, or was rather, I beg your pardon, SVP, CTO of Lithium Americas, now valued at over $4.5 billion. But importantly for us, he was at Tesla prior to Lithium Americas, where he helped build Gigafactory 1 in Nevada. So we think we've assembled a pretty significant team with a good amount of experience to help us sort of take this company to the next level. For most of our viewers, I would assume that, why lithium, that story is sort of very evident. The world is moving to a cleaner, greener future. The electrification of our transportation hubs and infrastructure is really sort of pressing on the back of the pandemic, and the governments around the world having spent $1 trillion to incentivize that very sort of feat. We're seeing more and more adoption rates as far as electric vehicles are concerned, and the price of lithium, for those of you that are following it, you're probably aware that it's up about 400% in the last 18 months. So coming from $8,000 to $9,000 per ton to now well over $44,000 per ton for lithium carbonate equivalent. Mongolia, a nation that most are not very familiar with, tends to be one that is very seldom known, and that's for a number of reasons. One, it's a few quick facts around Mongolia. It's 1.5 million square kilometers, so it's about 1.5 times the size of Ontario for our Canadian listeners. A population of 3.5 million, of which the vast majority are centered around 2 major cities. And the rural areas of Mongolia are extremely sparsely populated. So it is the most sparsely populated country on the planet. That means you could drive for miles and not encounter anybody, but it also means that only 3% of the country has been explored, allowing you to see a big potential for prospective miners and resource operators in country. We believe that there is a rather untapped potential for lithium in country, and that's why we set up ION. We've been operating as a management team for over 100 years in Mongolia collectively. The GDP of Mongolia, 20% comes from mining, so you have enough skilled labor in country that would otherwise complement bringing in expats that would be ultimately very expensive. So having that skilled labor in country is a big plus for the country. The government, we've seen it change on multiple occasions since we've been operating in country, and we've met with both sides of government, which is the two political parties, the Democratic Party and the People's Party, each of which have sort of sang the same song in the last 6 years, which is the country is open for investment. The country is one that is ensuring that they prioritize investment from foreign entities such as ourselves. And they have worked with us quite well to ensure that that is in fact reality. Our proximity to China, as far as lithium and ultimately any commodity is concerned, it cannot be beat. We are, our largest asset is 20 kilometers from the Chinese border. China consumes 53% of the world's lithium. They refine 75% of the world's lithium that ends up in EVs. And so our proximity, again, to that market is very important to note. My chairman's first foray into Mongolia was a company called Honu Coal. He did a $20 million IPO on the ASX with no assets, so essentially a vehicle with no assets. Went into Mongolia being a Rio Tinto gold scholar, looked for gold assets, but it happened to be in the midst of a coal boom. So he acquired a number of coal-bearing assets. He de-risked them through exploration and then exited to Banpu of Thailand for $500 million in cash 18 months later. So that helped build a foundation for our success in country and has ultimately allowed us to do a significant number of other things, including Step Gold, a company that I was advising prior to it going public and having founded Ion Energy. Fully permitted project acquired from Centerra Gold. We did so using a streaming agreement from Triple Flag Mining Finance. That's run by Sean Usmar, the ex-CFO of Barrick, but also overseen by the Elliott Group. It was the only gold IPO on the main board of 2018 of the TSX. So a testament to the team's ability to raise funds in a tough resource market. March 2020, when the pandemic was declared, Step was able to achieve first gold pour using 100% Mongolian staff. So again, going back to that skilled labor set in country. Beyond that, in June 2020, Step declared commercial production, again, 100% Mongolian staff. So we've shown that we can have successful exits where we put resource estimates in place, but we can also bring mines to production as a team, which I think in itself is quite the feat. Ion Energy's remit is one that will mirror very much what we did with Honu, which is acquire as many lithium licenses as possible, de-risk them through exploration, or arrive at an early resource estimate, and then bring in a potential partner for either a JV type scenario where they control, sub 10% at a higher equity price than today, or ultimately an exit in its entirety in the near term. We went public on the back of Babayul, our flagship license. This was awarded to us in 2019. We went public in August 2020. It's 81,000 hectares, roughly 5 times the size of Vancouver for again, our Canadian listeners. So a significant piece of land located only 20 kilometers from the Chinese border. The results from that asset historically were a number of holes drilled by the Russian government when Mongolia was part of the USSR. And then following that, some joint exercises between not only the government of Mongolia, but also the University of Science and Technology in Mongolia, where an average grade of 426 ppm was found, a maximum grade of 811 ppm was found. The terrain is rather flat, so you're looking at Gobi Desert environment, 250 days of sunshine, very high winds, lends itself well to evaporation, but obviously with environmental concerns, direct lithium extraction can be used there as well. So early days, that was what we had seen on the asset. We then went public in August 2020, as I mentioned. We completed our geophysics program. We did some microseismic to identify where we would put the drills down onto the ground. And we had a bit of a hiatus between sort of November and May, where the government was, much like everywhere else in the world, experiencing increased rates of COVID. And so we didn't have access to the asset until May. We were able to complete 21 holes, 832 meters total. Importantly, we struck brine at these 2 targets that were identified as the sort of spots where work in the early days were done in 2016 and the 1950s. That's our rig on the ground there. You can see the Diamond RC rig being used. To the right of that, you'll see an image of the brine being pumped up to surface. Importantly, if you look around where the pump is, there's a number of sort of evaporites, so very high mineral content there. And that in itself was rather exciting for us as a team to prove the hypothesis that, in fact, those aquifers exist there. We took things a step further in the fall of last year, where we began an extensive 222-hole program across the vast majority of the license. This was a way for us to really scratch the surface and determine where the hotspots are for us to do a more detailed hydrogeological sampling program, which we'll be kicking off in April when Don Haynes and myself are over in country. But an important thing to note here is the maximum grade that we received was 1,502 ppm, so almost double that of the program that was done in 2016 that showed 811 ppm. At 1,502 ppm, this is a significant find. We've called this discovery the White Wolf Prospect, and a lot of the hydrogeological sampling that we'll be doing over the course of this summer will be focused in and around this area. Beyond that, we also found some copper and nickel. As we know, commodity prices are increasing quite significantly, and this has allowed us to have another opportunity to monetize essentially what is being found on this massive 81,000 hectare license. In order to check off the boxes of acquiring all lithium-bearing licenses in country, in February of last year, we acquired Urgaknaran through a government tender process. Urgaknaran is 29,000 hectares. It's located in Dorngovi province. That's of importance because it is where the major artery into China, or the border crossing of Erlian, exists. And it is still early days, but in terms of what we're expecting, again, that exploration program will kick off in April while we are in country. The early sort of results of what we're seeing as far as the hydrogeology of the region, we expect this to be quite significant as well. The exploration program that we kicked off includes 73 shallow holes. They would commence in April when we're there. The basin is only about 6 kilometers wide and 20 kilometers long. So, I say only, but that is a significant basin in itself. And if you look at the yellow area, that's where the Salar exists, and that's where the maiden drilling program will commence. I mentioned that we found some copper and nickel anomalies, and why that's of importance given today's commodities prices. We signed a joint venture with a sister yet independent company in Mongolia by the name of Aranjin Resources. Aranjin controls about 30,000 hectares and has a seasoned team that will allow us to sort of advance exploration, but also allow ION to monetize on these assets. From a cap table perspective, 60 million shares outstanding, so quite a tight cap table. We have 25% held by management and insiders. Some of the key funds there are family offices, Delbert Capital, Spartan Funds, Alpha North, Maxit Capital, US Global. We did a bought deal last spring where we raised 5.75, and we now have about, at the end of last year, close to 4 million in the bank. So we're not looking for equity here. We're purely telling our story. And now that we have access to country, we're ready to spend those funds and get some work into the ground. So what you can expect from us, as I mentioned, exploration ongoing, and we began talks with strategics that we will also be sharing with the market. We have some paid coverage. I think we're trading about 39 cents today. Some of the targets there are $1, $1.04, and $1.13 if you do the numbers. One of the comps that we'd like to highlight to our potential investors is a company named Wealth Minerals. So happy for you to take a look at this slide at a later time or come back to me with any questions that you may have. And in summary, we're funded. We don't require capital. Our location is rather strategic. Hopefully, we've shown that we are experienced. The rise in demand is evident with the prices. Margins can be kept quite low given Mongolia is a cheap place to do business. And we believe we're well positioned to provide shareholder value. So with that, I thank you for your time, and I'm happy to take any questions. My contact details are there if you'd like to have a chat. But again, thank you very much for your time.
Hi, everyone. Thanks for joining. Really excited to go through today a bit about the story for EV Nickel and what we're trying to do. Start off with the typical, I'm going to make some forward-looking statements, so an important disclaimer here to review. So to start off, what is our company? EV Nickel is addressing the new demand for nickel driven by the electric vehicle boom. As we understand more about the electric vehicles, we know that they want to source the cleanest possible metals. And we think that our assets up in Northern Ontario are a wonderful fit with that new demand. There's hydropower there, plus we have high-grade sulfide on our land. Last year, our company acquired the Langmuir Nickel Project from Rogue Resources. They're another publicly traded junior. I run that company as well. What EVNI got with Langmuir was a starter resource at what we call the W4. That resource at 1% has 15 million pounds of class 1 sulfide nickel. So what we love about Langmuir and the Shaw Dome are a few things. One is its location. It's easy access to Timmins. It draws on hydropower, which is wonderful. Our starter resource is at 1%. I'll show you how there's been better grade than that production. And the grade is really the type of grade that gets turned into mines. So that's the sort of stuff we're targeting. And then there's such huge potential. We have a 9,100 hectare package. We have 30 kilometers of strike to explore along. And then just recently, we announced a transaction to get us up over 30,000 hectares. So there's three things we're going to do with our company. One is find more nickel at Langmuir. Two is put our hands on more land, and this recent announcement was part of that. And then third is beginning to put together the clean nickel story. So if we talk a bit about the EVs, I think everybody watching this is likely positive on the nickel story. But from my perspective, the most exciting thing about nickel is really all these other announcements coming from beyond Tesla, which is when all the other car manufacturers, if you stack those up, it's very much a revolution. And if you look at, and I don't spend a lot of time on the macro of nickel, I'm positive on its future curve. The recent trading noise, both with the tragedy going on in Ukraine, plus the excitement most recently with covering the short positions, I think that's all short-term noise. But long-term, if you look at the new demand coming onto the market from the battery metal, it's really neat to look at this being a global base metal and it going to have as big a gap as is forecast between demand and supply looking out. So a Nickel Jr. can't not have a slide covering Elon Musk. What's really interesting for me about what he has said about nickel is not just that he needs more supply, yes, but he has also touched on, as we have in the comments on the right there, the complexity of how the supply chain has evolved. This idea that nickel goes around the world to reach a state in which the buyers need it. So I think that has developed over time, primarily because of the demand out of China and stainless steel. But as we look forward, I think there's going to be a fundamental change where supply chains are focused closer to where the demand is. And I think that really is going to push suppliers to focus on having a carbon neutral or as close as they can get nickel product. And that's really where we step in. So our Shaw Dome, we love where it is. It's right near Timmins. So we're within 50K of the town of Timmins. That's a population of over 85,000, many mining projects. And very importantly, it's served by clean hydropower. Our enormous land package, which I'll talk a bit about our transaction we just announced, of the 9,100 hectares. Across that, as I mentioned, we have 30 kilometers of favorable strike. And what's really neat is if I look at the Shaw Dome more broadly, there is historic production, as we have noted on here, and that production is up around the grades that get turned into mines. And that's a recurring theme with us. It's one of the main things we're after. We've got a starter resource at 1%, and we think the Shaw Dome has more mineralization in the ground, which we're going to find, and it's shown by historic production. So that's really what we're focused in on. So our announcement that we made on the 28th, we're acquiring over 21,000 hectares of land. And again, in comparison, we have 9,100 hectares as part of Langmuir. That's across three different groups of claims. I'll show that to you in a minute. We're paying a bit of cash, 2.5 million shares, and then there's a royalty looking out, which we can buy half back on. Here's the land. One of those three groups is south of this chart, of this map, but really we're buying up big chunks of the Shaw Dome, which is exciting. So again, this is the sort of land that has hosted historical production in the past. We think it has the mineralization that gets turned into mines. And we're very excited to start figuring out what more we can find here. So jumping to the Langmuir project, running you through a bit of the history on that one. In 2007, it was discovered, the W4 deposit was. In 2010, they came out with an initial report with a resource on that. That's the historical resource we talk about. Last year, when EV Nickel acquired the project, we put out a new technical report. We ran a bunch of geophysics, which I'll talk a bit about. And then we did our phase 1 drilling last summer, very successful. That confirmed, as we note here, that the deposit likely extends up and down trend, and it's open at depth. This year, we've got 10,000 meters in our phase 2 drilling, plus we're going to do our met work, and then we're working towards a future resource. So the W4 and this historic work. So 22,000 meters of drilling was done, as I mentioned, and I'll show you 4,200 meters was done last year. We've got a big amount of drilling that's been completed on the W4. It's a really neat deposit. The majority of it is open pittable. It subcrops up to surface. Our resource at 1%, as I mentioned, 15 million pounds of indicated nickel, and the majority of that is in open pit. So last year, when we acquired this asset, we immediately reran all of the geophysical data. So there had been many surveys that have been done in the past on Langmuir. We took all of that data, sent it off, reran it with the new technology. From that work, we came back with 16 identified trends, 6 high priority targets. One of them happened to be the one we had the resource on already, W4, but then they identified 5 more targets, and those are still to be tested. I'll talk a bit about those in terms of how they're driving this year's drilling. So last summer, we did almost 4,200 meters around and inside W4. So that was to update the research, the work we've done since the 2010 historical resource. And it's really neat. We had some great hits in there, over 8.6 on a short interval. And we confirmed, as I'd mentioned, that the mineralization likely extends up and down the trend and is open at depth. But it also confirmed we have very high nickel tenors. So that's the estimated content of nickel and 100% sulfide. And that's a really good indication of how the met work will work out, and an indication of us potentially having a very high grade con from this deposit. So we're really excited about W4 and what it potentially has. This year, our phase 2, we've announced that we have 10,000 meters of drilling budgeted. We've got the money in the bank for that, and that's what we're underway with right now. We've partnered with a local drilling firm, First Nations owned and operated, and we're working through those targets that I'd mentioned. So we're right now on the W4 again, pulling our holes for the metallurgical testing. We'll go back to TZ3, which is a really attractive anomaly that came up through the geophysics. That's to the west of the W4. And we're going to find out what else is possible there. So that's 10,000 meters of drilling that we're financed for and we're doing this year. Shaw Dome is really neat. This is when I compare sort of what it could possibly be. These ultramafics that we're down in, the komatiates, komatiate associated deposits, like we have at Shaw Dome, are very similar to what they have in Western Australia on the Kambalda Dome. So the Kambalda Dome, and on this slide, we have the geology map on the left of the Shaw Dome, and that dotted area is the same surface area as the map of the Kambalda on the right. That area on the right, since the late 60s, has produced over 50 million tons of nickel. So it's really neat. You don't need much area, surface area, to get a significant amount of nickel production. Our lenses primarily go east-west. Theirs were north-south, but it's a very similar geology to the Kambalda, and we're looking forward to chasing these deposits. Once you find something in the komatiates, it is likely followed, and you see that in Australia, it's likely followed by subsequent deposits. And that's why we're really excited about the prospectivity of the Shaw Dome. So to sum up why we're excited, we love its location. We're right near an established mining camp. This is the sort of place where we see it now with drilling, but more importantly, if we get into operations, people can sleep at home. It's a great location, and it's supplied by hydropower. Grade, you've heard me talk about that. It has hosted with historical production the type of grade that traditionally gets turned into mines. And we have a huge amount of potential. We had that with 9,100 hectares. Now we're going to have 30,000, and it's really exciting. The team. So my background is I'm focused on the commercial stuff. I've been in mining for about 15 years. Started out my career. I went to school in the States at Harvard. Then I worked in financial markets and private equity, was at Bain & Company for many years, and then dropped into mining. I used to be a part of the group that was running Kinross Gold, one of the majors. Left that to be in the juniors, and I've been in nickel for about the last 10 years. I'm joined by a seasoned CFO based out west. The real skill, the real expertise on our management team is Paul Davis, who's my partner with the VP of Exploration. He is an expert on the Komatiates. This is what he did his master's on. He spent over 25 years living and working up in Timmins. He's an expert on the Shaw Dome. He knows all of this area inside and out, and he's probably the best in the world for us to be finding more nickel in the ground. Phil Vicker is running our program up in Timmins, worked with him for many years. His background is that he's been a guy who chases deposits like this, and he is the one managing the drill contractor. Then our board, we have a broad expertise. I'm really excited that both Linda and Michael are from Northern Ontario. So we're very well set up from the community perspective. So our cap structure, very quickly, is we have about 30 million shares outstanding. This is a snapshot from late February. We did a transaction last year on the spin out of this asset from Rogue. Almost 7 million shares went to Rogue and about 10 million went to the Founders Group. Those shares are locked up in escrow out over 3 years. Last year, we did a financing for 7 million shares, went out the door at 30 cents. And then we did our IPO at 75 cents. So roughly 7 million and 7 million from those groups. That's how I get up to the 30 million. I mentioned before, we have the money in the bank to pay for this year's drilling, and we're in good shape. That said, our valuation is so incredibly low at this point. We've traded down into the teens. We're up into the 20s this week. With all the excitement and noise around the trading space, no matter how you cut it, this was done at 16 cents. Let's say we're up to 1.5 times that. We're still deeply, deeply undervalued. If you compare us, and I've got my eyes open, then I'm showing you a slide where there's a comparable that has 100 times our market value. But I think that really speaks to the potential of our asset. We have a high-grade deposit. And when you stack us up against the other high-grade names, I think we stand up very well. So against our immediate peer, Alexo Dundonald, we have a much larger land package, and I'm just getting started on the nickel I'm going to find. And if you look at our 9,100 hectares going up to 30,000 hectares, it's a pretty staggering comparison, us against Class 1. If you look more broadly, there's a number of nickel juniors, some of which are presenting today, that have much lower grade. And I come back to, what has been the grade that gets turned into mines around the world? And I'm very excited as to where we are. Because I do believe, we're on the left side of this chart, but I could make the case, and with some exploration success, that we should be moving much further to the right. So just to round up here, I think EV Nickel is a great opportunity to participate in this EV boom. I think of it as a pick and shovel type investment. And that's what I'm hearing from investors as well. If you think about the California gold boom, the people who made the money on that were the people with the supplies for the prospectors. EV boom now, maybe you've missed the mark on the run on the EV makers, play it through clean nickel. So our mission is that we're going to accelerate the transition to clean energy. We know the world needs more nickel, and we think that within that nickel, there's going to be a focus on the high grade clean nickel, and that's what we're building our business around. So we're doing 3 things. 1, we're going to find as much nickel as we can on our property. 2, we're going to get our hands on more property. And 3, we're going to start putting together this clean nickel business. Thanks a lot for your time. There's more information on our website, and I'm always available to talk.
Graphite. I'm the CEO, and I'm here to talk about our unique vein graphite, and look forward to talking about the project and batteries, and why the world is interested in what we're doing and where we're going with all this. So first slide, of course, we're looking at 90% high-grade graphite in the ground. Sri Lanka is the only place in the world where this exists. I've heard other claims to vein graphite, but they're not exactly correct. Main application is coatings and carbon brushes and pretty unique requirements. But the interesting graphite and the interest in all graphite is batteries. So we're going to focus a little more on the battery side of things, and I think we're going to look at is going through what we've done, where our properties are, and some of our really interesting battery tests. So typical board, very, very qualified board. We just added non-executive chair Rita Thiel to the board, and she's bringing a lot of corporate governance and experience to the board. She sits on several boards and some high-profile ones as well too. So we're looking quite beefing up the board as well as we move forward on our development here. Quite a very environmentally friendly mining process. One of the key things with this and what we're doing, and I'll get into talking about conversations with OEMs, is that ESG is extremely important in everything we're doing these days, and we feel we've got quite a interesting project that's going to give it, and multiple potential mines where, because the grade in the ground is so high, we don't need to do primary processing. So with primary processing, you've got your typical energy output for crushing, grinding, flotation, whatever you need to do, which results in tailings. So tailings, impoundments, effluents to deal with, reagents in your flotation process, waste rock areas, especially for the large flake mines and the waste rock areas for open pit mines. We're small scale underground mining, which means being small scale, we don't have the big footprint on the surface. Secondly, with the high grade graphite in the ground, we don't have to have tailings, none of that stuff. So that goes a long way in our ecological impact. Even the trees you see on the surface there are all rubber trees. So we have a local landowner who taps them all and makes rubber. So that's another use for that. The pictures here is basically our explosives magazines and the head frame of the mine, K1 mine. Next, we're looking at resources and mining methods. So the key thing is we're K1 mine is a past producer. We've done a lot of work on that, and right now we're sinking the shaft down deeper into the unmined areas. K1 is a past producing mine. It probably produced graphite in the 1940s before it shut down. So we have significant underground workings, significant signs of veins mined out and backfilled. We're actually sunk. I was just there 2 weeks ago, and we're sinking the shaft through a vein, actually a meter-wide vein. So it's very visual. That's a good thing for us to see. Now, the numbers you're seeing here are measured, inferred 43101 resource numbers. They appear to be small, but it's difficult to chase the veins with the drills to the 43101 standard. We've decided to, without a feasibility study, go into production. We can see it. It is a past-producing mine. So we are, we cannot say certain things. We can't talk about certain economics. But looking at this, I'm seeing it climbing down the shaft. We're down to 180 feet. We're going into 220 where the bigger vein system is. And this does just go to depth. And that's what the surrounding geology tells us. The mine next door, Bogala, which is owned by GK Graphite Croft Mill. Again, structures are shared between the closology aspect of it too. So we're looking at ways to mechanize this to make it more efficient to mine and larger tonnages. These machines are made by Brock. They're electric, so we don't have ventilation underground. You can even see the cutters we can use to, as opposed to the historic manual ways here too. So I'm just going to the next slide. This is an obvious slide as far as the huge demand that's coming downstream to us. By 2030, we're looking at over 5 million tons, 4,000 gigawatt hours, and the red bar there is graphite, and that's exactly what we need to produce in a process, not just run of mine graphite, but the ability to process it into secondary anode graphite, and that's what we're doing extensively. And again, supply chain issues, COVID has really brought that to the forefront, and we're seeing a lot of the OEMs and the battery manufacturers are coming downstream, or I guess upstream, I should say, looking for supply, and they're not reliant on their battery supplier maker in order to find materials for them. And the critical supply materials Graphite has been overlooked. We're starting to see that is not, not necessarily the case much longer. In the last, I'd say, 8 months, we're really starting to see graphite mentioned a lot more within the supply critical materials of lithium and cobalt and nickel. But as you see in this slightly blurry chart, 100% of the graphite process for batteries is done in China right now. That hasn't changed. So we're in a tight position in the West. So one thing we're focused on is taking our graphite from the mine, purifying it, and basically transforming it into batteries, spheritizing, as you can see, the two graphite, vein graphite. Misnomer is that it's a solid chunk of graphite, and in fact it is, but when you crush and grind it, these flakes you see at the top, that's vein graphite. But it's a higher degree of crystallinity than flake. Flake will be the majority used for natural graphite, but flake vein is very, again, crystalline. It's known. Companies like Superior Graphite will say that it does have a higher thermal capacity and a higher electrical capacity, and that's what we're seeing. So when you spherinize it, it's all the same. The process to do this secondary is all the same. So we've come out actually with vein graphite in full cell lithium ion batteries, and you can see basically the numbers are quite comparably larger than standard synthetic graphite at 153 milliamp hours per gram, and we're seeing our numbers at 161 and 165, I should say. So again, we're showing that lithium works, or the lithium ion battery anode made with vein graphite works very well. It works better than synthetic. That's one thing that we're looking at from a CO2 perspective when you're filling out questionnaires or categorizing for your, when you're talking to an OEM, for example, they ask what's your CO2 footprint. So we're still working on that, but we know our CO2 footprint will be much smaller than synthetic graphite and or flake graphite. Nothing against flake, but it is, again, that will be the dominant natural anode, but vein, we're showing that it can be extremely beneficial. So even looking at, we just also announced our silicon enhanced half cell tests. So just for comparison, so we're looking at a synthetic anode or battery at 363 milliamp hours per gram. Our baseline is 393, which is phenomenal, but our silicon enhanced on our first try, let's say, without optimizing, is 446 milliamp hours per gram. I might point out that the theoretical limit for flake graphite is 372. So we're showing that this vein is quite unique in what we can do with it and how it behaves in a battery. So we're still working on this. We're based in the UK as far as our subsidiary company, Salon Graphite Technologies. And so we're in the hub of Battery Central UK. With the Brexit situation happening, the UK is really stepping up their battery baseline or battery work with Faraday Institute, with UBIC. We're working with UCL, University College London, and we're also working with Warwick University. They're working with the potential, the guys who are building factories in the UK are basically, we're all working with the same people. So it's kind of, we've positioned ourselves to take advantage of that situation. I'm going to quickly go through these. I'm going to start running out of time. My slides have picked up a little bit here, but again, just quickly, graphite, the anode is graphite. And we were able to optimize some of this with our silicon additives we've talked about just above here. And it's applicable to multiple chemistries. The one thing you'll see differences in lithium iron phosphate or lithium cobalt, higher levels of nickel. The baseline is the anode is graphite, and it will be graphite for the foreseeable decade or more. Any talk of silicon replacing it or full solid state batteries. I think we even had CATL come out and say that solid state batteries are maybe 2035 or later. And there's a lot of issues to work out there. So, we're moving ahead with our work, And let me just back up here again. So again, we're looking at when we add the silicon into the we have a few layer graphene license that we use in our process to make our batteries. If I say more than that, I'll probably get in trouble. But we're looking to maximize the benefit of the silicon, to enhance the graphite, and sort of make it, as I say, we're showing that we can make the battery performance much better. We're looking at taking this farther up to be fully integrated here. And I think ultimately, as we go up the value chain, when we start shipping this in thousands of tons, tens of thousands of tons, that will probably we will probably look at a slurry as well, higher value chain. But again, we're still working on the battery development and garnering the interest of several OEMs, I must say. Getting out of the technical stuff, share structure. I think most of you have looked at this from the share price. In my opinion, we are somewhat overlooked. I took the company over as CEO in June, so I've been transforming our strategies in order to look at maximizing shareholder value, focusing on a mine to battery approach. And I think that's what the world needs more battery processed graphite. So that's where we're at with Salon, and not just talking about batteries, but actually doing it, showing that we have the technical capability. Our learning curve is minimal. My background is mining engineering, but it's also graphite and processing graphite for batteries. I've been doing this since 2012. And we also have two PhDs working for us in the UK, Doctors Siva and Malika Baum, and they have extensive experience in working with these materials, nanomaterials, and graphite. And we have experience between the three of us. We've done this before, so our learning curve is pretty minimal. So again, Salon Graphite, take a look if you haven't before, or if you've looked at it before, take another look. I think we're transforming, and we're I think fulfilling a need that we have a meaningful production, a meaningful contribution to this whole battery revolution. And I'm quite excited by this, and I think we have a long future of mining and processing graphite as we progress the company here. So thanks for listening, and I understand we probably have some chance for some Q&As after this, and we can we can go from there. I look forward to chatting with anybody who has any more questions. Thank you very much. Appreciate that.
Good afternoon, everyone, or good morning, or good day, or good night. We're not sure where exactly you are in the world when you see this, but hopefully you're having a great one. My name is Kerry Lynch, and I'm the CEO of Power Nickel, and we're going to talk to you about what we think is going to become Canada's next nickel mine. It's an interesting collage on the front cover of our pitch deck. It's not exactly Picasso, but there's an interesting story here, and I want to share some of it with you. On the left-hand side, you'll see what northern Quebec looks like. This is sort of just, this is where you find nickel and copper and gold. In the middle of it is the core that we were getting from our current drill program that we've announced just one set of assays. So there's another 2 sets to come in the coming days and weeks ahead. The black rock you see down on the bottom, that's the target rock that we're looking for. That's where it's carrying the nickel grade. So you can see it's very visibly distinctive. And then on the right-hand side, you sort of see, our ATCO trailers where we sort of did the drill program. But in the foreground there, you can actually see the Hydro-Quebec installation that's literally across the road from our property. So you can actually drive to this place, which is unusual, and it's a great benefit from a exploration program, but also later in what we think will be a development future. Classic forward-looking statements. We'll get into that a lot. Obviously, people should do their own due diligence. We're going to tell you the truth, but it's always good to check your own sources as well. It's sort of what we call why invest now. I think that fundamentally the first and most important thing is we're trading at a huge discount to our peers, and we'll show you that. That's always should give one comfort. The commodity bull market is here. Well, obviously nickel has just literally shot through the roof. They've shut the program down at the London Stock Exchange, so London Metal Exchange. So that's pretty bizarre. But it just means that fundamentally the supply and demand for nickel is at a whack, and it's going to be a whack for a long period of time because it's not easy to put these projects into play. So that's going to be good for us. It's going to be a very strong, bull trend on the price curve. Luckily, we're not just a nickel project. We also have a lot of other, equivalents, shall we say, copper, cobalt, and the palladium platinum group. So NISC has got them all. We sort of, somebody said, well, what price are you using for nickel? I said, God, I think I ran the numbers at 1150 and, then it's like $40. I mean, it's so crazy, but nickel is the new gold. It's certainly hot, and it's obviously a great sector to be in. And we'd obviously, when we bought this project, I think nickel was $4 a pound. So it was certainly a good move for us. And the reason why we bought it wasn't that we didn't like our other projects. It was just that this would be the lowest risk way to make money for our shareholders, and that's why we stepped forward. In fact, the bonus spinout we talk about in the middle there is a very attractive set of copper gold properties that we're quite excited about as well, and we'll get that spun out, we think, in Q3 of this year. And then finally, we've released our first set of results on NISC. There'll be another couple sets coming out in the next week to 10 days, I would think. And then we're going to update our 43-101. So obviously from a timing perspective as an investor, that's a great time to get into a project. This is a comparable page that we talked about. And, there's many different ways to go at this. And we're not trying to sort of, bamboozle anybody here. We're just trying to sort of give you an approximation of value perception. And the way we looked at it was, what is a nickel in the ground worth? What are you paying for it per market cap? And on companies that actually have a resource. There's not a lot of them out there, especially if we're looking to be resources of, I think at the cutoff in this case was 0.8% nickel EQ and above. There's a whole other stage of nickel projects that are sort of 0.2 or thereabouts. That's the gigametals and Canada Nickel and these types of projects. And I'm not disparaging them. I think they're all fine projects and certainly interesting opportunities. But it's a different animal when you have to raise $1 billion or $1.5 billion to put something that low grade in production. That's not our game, and I don't see that as our competition. This is sort of more of our comparables. And if you run the math on this was, I think we ran the math last night, so it should be fairly accurate. This is March 8th. We ran the math, and just to sort of get a sense of where we're at. But I think we used 1150 nickel just as a number. I don't know what the nickel number is going to be. It's probably going to be north of that, but you can see that, you're basically paying about, 21 cents or so for nickel in the ground with us. Talon Metals, you're paying at $1.86. That's for stuff we've discovered, not for what we might discover in the future. This is just for what's been discovered. So, and everyone else is in the 31, 32 cent range. So we're trading at pretty serious discount to the market, quite a big discount relative to Talon Metals. And this is all on discovery stuff. As we discover more, that discrepancy is going to get, more and more, because it's all about the pound of nickel in the ground. So pretty interesting proposition there from just a comparable perspective. The commodity bull market. I mean, obviously it's in the headlines, so it probably doesn't have to be beaten over the head. But this was a good slide just to sort of give you a perspective. In the good old days back in 2006, the TSXV over the S&P, that multiple, would be between 2.5 and 3, and that's where I'm circling in this area. This is when the last bull cycle was. Right now, before the last week or so, this was around 0.25. So almost have to be a tenfold switch in that order of magnitude to get back in those heady levels. I think that's coming. So that's a good macro thing. So I always like to be sort of on a good macro boat, because a good tide will lift all the boats, and I think it's coming certainly for junior mining and in particular for nickel. And then another thing that should be very helpful, I think, is there's probably going to be some changes on the short rules. So predatory short selling has been a problem in our market in mining, and we started a thing called Save Canadian Mining. I partnered with people like Eric Sprott and Sean Roos and Keith Neumeyer and others. And the big purpose of that was to basically drive home this discrepancy of valuation destruction that's happened because of the predatory short selling. And government's starting to listen. Certainly in the U.S., they're listening a lot more, and I expect it to follow up here. And it should be interesting to see, but we'll probably get some significant rule changes that'll make it much more difficult to be a predatory short seller, and that'll be good for power nickel. The resource that we found at NISC, we acquired this historical resource. So it basically was around 3 million tons, a little over 3 million tons. The nickel EQ obviously depends on a lot of what pricing you're putting in there, but it's certainly in the sort of probably at this point about 1.7%. Obviously, these very high prices. But anyway, a very lucrative project and one we think can be grown substantively. Nickel, the dynamics are pretty amazing. Obviously, you're seeing it in the headlines with the prices shooting through the roof into the $100,000 a ton and beyond, and shutting down the London Metals Exchange. I mean, it's really quite stunning. But that's sort of more on a short squeeze, but a massive one. But there is actually a fundamental breakdown between supply and demand on the nickel side, and generally it's because nickel's demand side is growing, quite robustly. It's growing in two ways. Generally, from the stainless steel production, which is urbanization, as Africa and Asia and India and China have more urbanization, more civilization. They're buying more pots and pans and stoves and fridges. The stainless steel demand is shooting up, and that nickel that's its biggest use. The second biggest is going to be batteries, and battery use in nickels is going through the roof. It started off as sort of a third in terms of nickel, cobalt, and lithium, and probably it's going to end at 8, 1, and 1. So in automotive, you can see it's started at 38%. They're going to 58%. So all this demand is just going to really torque the futures curve for nickel. So that's very promising. The other big point to make here is that not all nickel's created equal for batteries. People want to have basically a class 1 nickel to make a battery. So luckily, Power Nickel's site, it would be very much a class 1 nickel site. So that's another plus for us as well. Where are we located? Well, we're located in James Bay, just south of James Bay, right off a major highway, right across from the major Hydro-Quebec station, which is awesome. And it basically is, well sort of positioned to, provide the infrastructure and supplies we need. This is what it looked like in terms of the geophysics. That small little black dot there represented the small size of where the deposit was coming from. So, probably less than 2% of our area has been explored. This is how we modeled it out in terms of our drilling program, and our drilling program was working with some very high grade intercepts, which you can see on the screen. So that's been pretty impressive. We've been able to add with that. We've released the first wave of results, which showed about 1.35% nickel EQ. The next wave we think will be that was from our lower grade section of the deposit. The next grade is going to be from where the higher grades are. So we'll expect to probably get higher grade results from there. So we're pretty positive about what's happening at NISC Main. We think we can get to 8 to 10 million tons just on the one deposit. And this will be what the next level of exploration will look like on NISC Main. As I said, this is NISC Main. There's really 3 other pod targets. Typically around the world, these types of projects have multiple pods. And, we expect that'll happen here as well. So we'll explore NISC West and the 2 wildcard targets east and west in the next round of drilling, which we'd expect to happen in June. So we're going to publish our balance of our results in March. We'll update our 43-101 and get that out in early Q2, and basically look to drill in late Q2, and look to do exploration drilling in Q3 in NISC West, Wildcat West, and East, and release those in late Q3, and then we'll update our exploration model and update our 43-101. The other part of the story is our SpinCo. We're basically going to spin out our copper and gold holdings. They're basically in BC and Chile. In BC, it's right in the heart of the Golden Triangle. Golden Triangle's very interesting. Many of you have probably heard of it. Several 100 million ounces of gold and silver and billions of pounds of copper. So we're right in the heart where this yellow section in here, Strike Point and Scotty Resources there, Strike Point here, and Ascot Resources is here, which is becoming a mine. And this was results from our summer where we had, sampling programs that delivering over a half ounce of gold material per ton. And we expect to get in there and start drilling, next May, June. What that might be worth in a spin out, we don't know, but our neighbors are worth sort of in the 25 to 40 million range. Certainly possible that our spin out would get something in that order of magnitude. So it's like when you look at Power Nickel, obviously it's slide, I think we're stock's up a bit since then, maybe we're around 20 million, but you're getting a significant bonus when you're getting this. Chile properties. Chile's obviously got its own set of issues right now with the talk of the expropriation and whatnot. We think that'll calm down, but we haven't put any money in Chile. We're keeping sort of operating team there, but not investing exploration-wise. We've got some great projects there. We'll see how that plays out, but at the end of the day, we're not putting additional capital at risk until they sort things out in August, which we hope will be beneficial. The team itself is, very lean. Myself, Jimena are the two employees. We've got a great board with Greg and Peter and Les. Greg was an ex-managing director at Haywood. Peter's an experienced retired lawyer, and Les a very successful businessman. So in terms of shares, capital structure, about 84 million shares outstanding, about 20 million warrants that we expect are already starting to come in now, which is interesting. So we know our capital is getting replenished at about $1 million in the till right now. We expect those warrants will top that up with another 3 or 4 million in a fairly short order. So to summarize, basically, why invest in Power Nickel? Well, Power Nickel is probably, in my view, the best nickel exploration project on the planet right now. That's got a resource, a high-grade resource, and in terms of risk reward, you want to buy these things when there's catalysts on the table. Catalysts are drill results. Catalysts are upgrades of the 43-101. Catalysts are more drilling. That's all happening here. The exploration modeling this suggests that it's great potential for expansion. We really think we can get to a mine-like massive material, which would be in that sort of 8 to 10 million ton, range. We think that can happen, and there's lots of possible growth beyond that. Battery metals are hot: nickel, copper, and cobalt, and palladium, and NISC has them all. And the spinoff, spinoff is, as I said, the stock traded higher before we had the NISC deal than we are right now. So that spinoff is going to be a great bonus. The leadership team is well connected. That's how we've got these assets. We're continuing to be sort of aggressive now and roll them out now that the facts are behind us. Obviously we're going to take advantage of nickel's being sort of the hottest thing on the planet right now, and to get out there and pound the table, make people take notice of us. And it's a great time as an investor. I remind people that we did our financing at 25 cents and 40 cents in May. So we're really just back to the financing level. So you haven't missed the ride. The ride's going to happen from here, and it's going to be, I think it's going to be an exciting one. So, and one of the benefits about, being in Quebec is you've got that super flow through that can make financing very, lucrative in terms of for the company being able to raise more money with less dilution. So lots to be excited about Power Nickel. Hope you take a look at us. Happy to talk to anyone that's interested, and can be contacted at terrypowernickel.com. And other than that, hope you're having a great day, and we'll talk to you again soon. Cheers.
Hi, thanks for joining me today. I'm Brandon McDonald, CEO of Fireweed Zinc. Happy to be here at the Sixth Spring Conference. So I'm talking to you today about McMillan Pass Project, our flagship and sole project located in Yukon Territory, Canada. Obligatory cautionary statements. First I want to, before I get into too much detail, I want to summarize what I'm going to say here. And first, let's talk about the elephant in the room. There's been some tremendous moves in base metals in the last sort of quarter or even kind of slightly predating that. All sorts of extenuating circumstances. But I think the critical thing to understand here is this has highlighted the absolute fragility of the base metal markets. There is clearly a bull market coming, but to understand the impact of that bull market, you have to look at how tenuously balanced the base metal markets already were. These are markets with low inventory, with tight supply-demand balances, and with just very little ability to ramp up production to meet either sudden demand growth or sudden changes in supply, as has happened quite recently. No base metal really is without this impending crisis coming, which is going to result in significant price increases. And certainly you can include zinc amongst that. And zinc specifically, the bull demand case for zinc really has to do with infrastructure spending. It is predominantly an infrastructure metal. So this is going into galvanizing wind turbines. This is going into, bridges, anything like that. And I've repeated constantly that if you're an infrastructure bull, if you think that China and the rest of the BRICS will continue to build new infrastructure as they bring more of their population into middle class and advance its economies, and if you think the Western economies, Canada, USA, Europe, etc., are going to need to refresh and improve and extend their own infrastructure, you're an infrastructure bull, and if you're an infrastructure bull, you're a zinc bull. So if you're thinking about, okay, well, so I think there's a real case for demand growth in zinc. What projects fill that gap is not just there's a growth in demand, but also there's fall off in supply as existing mines slowly approach end of life and tail off. McMillan Pass is our flagship project, is an absolutely clear standout amongst globally undeveloped projects, not just in terms of scale, it is very, very big, not just in terms of economics, it is a very robust project, but also in terms of the sort of blue sky, the upside potential. We've demonstrated very, very significant exploration upside there across a true district, and this makes it really the preeminent undeveloped zinc project in the world. And this has certainly caught a lot of people's attention, and our most significant shareholder is a very sophisticated private equity fund out of Australia called Ibera Capital. We have investment from Teck Resources, one of the largest zinc miners in the world, who have significant operations in Western Canada and US. This is a project that the sophisticated smart money understands and understands the rarity and significance of it. So, this past year, as we've been building and advancing the project, has really highlighted, particularly in the last couple of years, exactly how much it's been improving and changing. Just a bit about the company, without belaboring this very strong board led by Chairman John Robbins, who's had a tremendous amount of success, including exits with Kaminak and recently Great Bear. It's very veteran board with a lot of experience in Yukon in particular. Strong shareholder base, a lot of close shareholders, good institutional ownership, and significant ownership from Teck and Hudbay, and as well over 10% management ownership. The project itself, located in eastern Yukon Territory, near the border of NWT, road accessible, which is very important, certainly if you're tracking development stage projects in remote places. Existing road access is critical. We have access to deep sea ports at Skagway as well as in western BC. We can access railhead northern BC to head, for example, to Trail Smelter or Teck Smelter and Trail. And these, despite being a reasonably remote project, these are great things to have access to. And, that ability to get heavy equipment in now helps keep exploration costs low and helps ease the transition into development and construction. In 2018, we did a PEA on the project and a resource update. These really have to be viewed like anyone's PEA and resource update as a snapshot at a point in time. These were done on only the Tom and Jason deposits, which are 2 of the 4 known deposits of the project. Pretty meaningful resource and very robust economics, hitting the kind of big 3 that I want to see, which is a long multi-cycle mine life, a healthy after-tax NPV, and a manageable CapEx. But despite all that, we see significant improvements in Tom and Jason since 2018. Really can't undersell, or really can't oversell, I should say, how important those 2 remain, and how much they have improved since 2018. We've got significant government funding for the access road, which we had put into the capex of our project in the PEA, and now can be alleviated. So this is a snapshot at a point in time, but so much has changed, and nothing more than the project itself. The little red box you see in the southeast of this map that contains the Tom and Jason deposits. Those are the only 2 things considered in the PEA. When we did the PEA, we had a project that was about 54 square kilometers. Currently, it's 940 square kilometers. We've extended this what we call fertile corridor, which is a major structural feature that's a conduit for the fluids that produce these sorts of deposits. We've extended that significantly from Tom, Jason, Enzo boundary zone and beyond. Boundary zone in particular looking very sizable and very intriguing, both boundary main and boundary west. This is going to be a very different project when we update these studies. And to kind of get home, sort of hit home with what I mean by that, the 2019 drilling at boundary zone hit some very broad intersections with very healthy grades, sort of 230 meters of 4.5% zinc. The first 100 meters of that from surface, almost 9% zinc. Locally, 6 meters of 43.5% zinc, very, very crazy grades. 2020 in boundary main showed quite a bit of continuity there, 213 meters true width of 4.4% zinc. And 2021 most notably showed not just down dip continuity, but also showed at least one zone with significant copper, which we had not seen before in the system, and suggests, while we're not yet prepared to say it's economically significant, definitely shows that we're vectoring towards the hotter part of the system, which could result in meaningful step-ups in grade. And boundary zone mineralization, much, much different than Tom and Jason. This is coarse-grained, vein-hosted breccias, sort of matrix replacement or matrix infill and clast replacement that's very different from the classic stratiform shale-hosted zinc deposits of Tom and Jason. And the nature of those mineralization was not something I originally understood, but after quite a bit of research in sort of academia and technical studies from other companies, we noticed a great deal of similarities between what we were seeing in a sort of vein-hosted material boundary zone and what they consider vein ore at Teck's Red Dog deposit. And what you see there is not just the vein ore, but also very heavily mineralized material hosted in as a replacement of barite lenses. So we had this conceptual target that perhaps above the vein-style mineralization at boundary zone, we might see a massive zinc lead sulfide replacing barite. We went out looking for that, established a large, mostly east-west trending gravity anomaly, drilled the western edge of it, which had previously not been drilled, and discovered what we call Boundary West. Now, Boundary West, quite a bit different than Boundary Main. So that's really been the focus in 2021, as you can see from these drill holes here. And what we found there is, we hit the same vein-style mineralization that we saw in Boundary Main, but now the red horizon you see there is a very massive, absolutely massive sulfide, pyrite, sphalerite dominated, seems to be improving in grades at depth, down to 60.7 meters of 8% zinc at depth. But notably, what we discovered in 2021, this last year, was a second stratiform horizon, where we hit 10 and a half meters of almost 24% zinc and almost 3 ounces silver. So a pleasant surprise. And what we've established is there's multiple of these stratiform layers within Boundary West that are mineralized. And even below that, we did see sort of a Howard's Pass style mineralization, if you're familiar with Howard's Pass, in much older Ordovician rocks, and it's helped establish a model of boundary and boundary west that's quite a bit significant than what we thought when we were going in. So you can see there the three different forms of stratiform mineralization, something that's quite akin to the Tom and Jason style, this barite hosted, finely laminated. Then we get the more sort of what we consider red dog style. Below that in the red horizon, and then at the bottom in the much older rocks, the Howard's Pass style. So the conceptual model now, we see multiple horizons. When we originally picked up this project, we had Tom and Jason. The kind of conventional wisdom was that Tom and Jason were in the same horizon. That was the only mineralized horizon that mattered. What we understand now is that not only are Tom and Jason not in the same mineralized horizon, but there's probably no less than 5 meaningfully mineralized horizon, and then these vein style mineralized features that cross-cut the horizons. So it's really kind of blown open the search area for us, but we really remain focused on exploring along this fertile corridor, as you can see here. And this is tracing a major district, basin bounding fault, district scale, big crustal feature. And where that intersects second order faults seems to be a major locus for fluid flow and the creation of these deposits. So in addition to the known deposits of Tom, Jason, End Zone, Boundary, we see targets at Volcanic, Corvus, Kobuk, 11, et cetera, some of which have strong geophysical anomalies, some of which have strong geochemical anomalies, some of which have both, some of which even have little sniffs in the few drill holes that are there. So, this is, some companies like to talk about a district scale opportunity. This is a true district. It's not just in scale, but in terms of being able to having a repeatable thesis for discovering new deposits, is something that we've identified and been able to act on. So what does all this mean in terms of the value of the project and therefore the company? You take the 2018 PEA as a base case. You consider the reduction in CapEx from the government funding of the road. That can improve your NPV. You consider engineering optimizations at Tom and Jason. That can improve your NPV. Resource improvement and expansion at Tom and Jason is going to improve your NPV. Boundary zone, we're going to produce a maiden resource there. That will significantly improve the NPV. And blue sky exploration elsewhere also potential to improve the value of the project. So this all leads us to our plans for the next sort of 12 to 18 months. We'll have a very significant drill program this summer, probably our biggest ever yet. We're targeting a new global resource, Tom, Jason, End Zone, Boundary Zone, including both Boundary Main and Boundary West. We'll build on engineering that we've done already and engineer opportunities at Boundary, including metallurgy. We'll be engaging in pretty significant trade-off studies for a PEA. And ultimately, we want to deliver a PEA on these results. And why we do this without keeping our mind or taking our real mind off the prize here, continuing to expand our baseline programs, engage with First Nations and do our consultation work there, create the opportunities to earn and keep a social license with the eye to accelerate and eventually build this project. And, we think that this updated global resource could be targeted for Q1, probably late Q1 next year, maybe early Q2, depending on the timing of the labs. And some 3 to 4 months after that, the delivery of a PEA that I think really will knock everyone's socks off. I can't stress enough that I do not think the market is prepared for how good this is going to be. So that's it from me. Thank you very much for listening. Contact details are here. Please feel free to reach out. Thank you very much.
Hello, everybody. I'm Simon Clark. I'm the CEO of American Lithium. I'm just going to take you through our most up-to-date corporate presentation on American Lithium. So just moving quickly through the cautionary statements. So American Lithium is one of the largest lithium developers in the Americas. You can see from this map where our projects are. We have 2 advanced stage lithium projects, TLC in Nevada, which is a mid-grade Nevada claystone that sits at surface, and then a high-grade lithium hard rock asset in Peru called Felchani, which again is at high grade and at surface. And as well as those two lithium assets, which on a combined measured and indicated resource basis make us the world's third largest company from an M&I resource base. At the same time, we also have the world's fifth largest undeveloped uranium deposit, also in Peru, called Macasani. We acquired both Falciani and Macasani through an acquisition of Plateau Energy last year. So we have a very strong asset base, and I'll talk a little bit more about the assets as we move forward. We have a strong treasury, shows 50 million on this slide. It's actually around 55 million. A very sustainable business model with a strong focus on ESG. In terms of getting our projects moving forward in Peru, the first piece we have to do for any drilling or any work on the projects is community agreements, and so we enjoy very strong support from our communities, both in Peru and also in and around the town of Tonopah in Nevada. And as part of the commitment to ESG, we are actively working with a company called Onion, who is a group out of Canada that helps advise companies on where they meet their ESG commitments and provide a bench test and a score for the company. So it's something we take very seriously as we work on our projects and develop them and move them forward. We also have a very accomplished management team. The acquisition of Plateau not only brought us some excellent assets, but it really rounded out our management team and our technical teams. We have a team of 20 on the ground in Peru, and very strong technical expertise there that took a unique style of mineralization at Falciani to a situation where it has a strong PEA and have proven the ability to produce battery-grade lithium from Falciani. And we've taken that expertise and knowledge that's been gained and are leveraging that now as we move our TLC project into its maiden preliminary economic assessment. So moving forward here, I'll just won't dwell too long on this. Suffice to say, it was a very strong year last year. In fact, it's been a very strong couple of years, which has been reflected in some strong stock price performance. Obviously, we saw run-ups in the whole space in early 2021 and then particularly late 2021. But again, the currency in our stock price allowed us to make what we think was a very opportunist and great acquisition when we acquired Plateau, and then we did raise some significant capital in November of last year, which again really underpins a very strong balance sheet, which will allow us to move all of our projects forward as we move through this year. So just a quick snapshot of our stock price. We're a little below this right now with the market pullback on what's happening in Europe and concerns on the stock market. However, we've typically tended to trade in the last 3 or 4 months at 350 plus or minus 10%, which at those levels we have a market cap around 700 million, and again a very strong treasury. Historically, the company was a retail-focused company with strong support from over 50,000 US retail shareholders in particular, and also a strong European base. And that base has been strengthened further in recent times by a number of institutions starting to get into the company. And the last 2 financings have been mainly institutionally focused. And you can see that we have 3 banks currently writing research on us, and we are expecting more to follow shortly. So a strong position on the capital market side. From a team perspective, my background, I'm a lawyer by training. I spent time in the mid-cap investment banking world in London. And then since I came to Canada 22 years ago, I've been working on the resource side for many of those years with my friend and mentor, Andy Bowring, who's the chairman of our company and has founded such companies as Millennial Lithium. Andy also helped me found and fund a company called M2 Cobalt, which was my last main focus before I joined American Lithium. I was the CEO and founder of M2 Cobalt, which we sold to Jervois Mining in 2019. I stayed with them for a year on transition, and then came back and joined Andy and joined the board of American Lithium in mid to late 2020, and then stepped up to being the CEO in April of last year. A couple of other key people I would mention on our team. Dr. Lawrence Stefan and Ted O'Connor, who are both key members of the Plateau Energy team and have really helped us build out our team. They were both key in building the Makasani uranium district and also discovering the Falciani asset and in driving those projects forward. We also picked up Philip Gibbs through the acquisition of Plateau, who is our CFO. And again, as I mentioned, we have a very strong team of 20 in Peru, including a very strong technical team. And I would point out Alex Takumas and Ben Binninger, two very strong independent directors. Ben is a chemical engineer by background who spent significant time with Rio US Borax and was an early advisory board member at Millennial. So I talked a bit about ESG off the top. Here's just a little bit more detail. I won't dwell too much on it, again, other than to reiterate that, in Peru, community relations are critical to moving projects forward. And we have very strong relationships with all the communities around the Makasani Plateau. And, we focus on, from an environmental perspective, on how we manage water. Unfortunately, we're in an area of abundant rainfall and with lots of hydroelectric power and strong infrastructure from that perspective. So again, as I mentioned off the top, we will actually codify all of our environmental, social, and government initiatives into a peer comparison that Onion will pull together for us over the coming weeks and months. Very quickly, just looking at Nevada, you can see the main area of our resource. You can see the drilling that's been done to date. In Nevada, you're allowed a 5-acre disturbance before you actually have to apply for a plan of operations to do more widespread drilling. So you can see where we focused initially. This underpinned a very large measured and indicated resource that was published during 2020. And our real focus in Nevada is to produce our maiden preliminary economic assessment, which will be complete by the middle of this year. So very excited about the project down there. This map just shows the plan of operations that we did file a year ago and got approved recently, and is driving forward a much larger drilling operation that we now have launched in Nevada. We have 2 rigs running simultaneously and have the ability to drill up to 110 new sites. That drilling will form the focus for infill expansion drilling of the resource, and will provide all the drilling that we will need as we look to move this project beyond PEA into feasibility and beyond. So a big program. It took a year for us to get the approvals in place, but we got strong support from the local community. And in our public consultation phase, we had nothing but letters of support for the project. So we're very excited about how it's moving forward. I won't dwell too long on the characteristics of our claystone, other than to say one of the unique advantages that we have at TLC is our ability to leach the claystones in a very fast time frame. It takes us 10 minutes or less to leach lithium out of the claystones. You then have to deal with a number of impurities as you move from the process, but it lends the claystones to 3 very viable processing options, which we are refining right now: sulfuric acid leach, hydrochloric acid leach, and a roast. So having the optionality on these is a very positive thing, and something that we will optimize as we move forward and again finalize our PEA. I won't dwell too long on the critical minerals aspect in the US, but obviously it's a very big driver for the discovery and development of domestic sources of lithium, and we think will be a strong tailwind as we move the project forward. Looking quickly at Peru, this is Makasani. This is Falciani, I should say. Again, a very high purity at surface lithium asset. When we acquired when we acquired Plateau Energy, we were very excited about this asset. Large resource, again, sits at surface and lots of potential to expand it further. You can see from the economics of the project, very strong NPV. The PA that was run at 12,000 as as a price long term for the project. Obviously, the cost of LCE has moved up significantly from 12,000 a ton to north of 70,000 a ton on the spot market. So lots of scope for the economics to improve further. You can see where the project lies on the cost curve. So this is the global cost curve of brine and hard rock projects. So we are firmly in the first quartile and in a very strong position from an operating cost perspective. Really sets us up well against the peers. And this is the flow sheet. All flow sheets look pretty complex to me, but this is actually relatively straightforward. And the key point about Falciani is it precipitates battery-grade lithium. They actually got the project to battery-grade lithium on the second pass. And again, it's one of the key reasons why we really like this project. We think it was a hidden gem when we acquired Plateau, and we are in the process of the next phase of looking to move this forward into feasibility and beyond. Very quickly, I won't dwell on uranium, other than to reiterate again, this is the fifth largest undeveloped uranium project. Ultimately, it doesn't sit within a lithium developer, and it will never, to our mind, attract full value until we put it into its own vehicle with its own team. We will keep a strong shareholding in it, and we will have a number of board members and management in parallel. But this will ultimately go into its own vehicle at the right time in the company's development. There's some short-term drilling we can do, and again, the PEA is very robust. I think outside Kazakhstan, this is one of the lowest cost operations that would be put into development. So again, it attracts a lot of interest, and at the right time, we will move it into its own vehicle to maximize its value for the company and its shareholders. So just a little bit on the exploration we have upcoming. This is Falciani in the center there. You can see where we are looking to launch drilling. We have our community agreements in place, and we just await final drill programs. And then we will infill, expand, and extend the Falciani resource further to allow an updated resource, which again will assist us as we move the project into feasibility. We're also going to do some exploration and discovery drilling. There's a number of areas on the plateau that we've identified that have the potential to have deposits similar to Falciani, and we're going to also be launching some drilling in these areas in the near term. And then again, some additional extension drilling on the uranium before we look to update that PEA and put it into its own vehicle. So lots upcoming on all three of our projects in terms of news flow, drilling results, updated preliminary economic assessments, and then the move into feasibility. Just very quickly, finishing off here, you can see where we sit again on an M&I resource basis. On a combined basis, we are the third largest globally. And yet we remain very undervalued compared to most of our peer groups. Certainly on an enterprise value to M&I basis, we're one of the lowest. So again, we think there's a lot of room for a re-rating in this stock. And this just shows us where we place against our peer group. We think our asset mix is very comparable to Lithium Americas. In fact, we'd put ours up against them at any time. And clearly our goal is to reduce that gap. They are definitely a couple of years ahead of us. But again, we've lots of scope to move to where they are as we move through the milestones. And this final slide just confirms the strong fundamentals of the company. World-class scalable resources, enviable jurisdictions, lots of milestones and news flow coming. Lithium as a space obviously has increased tenfold over the last year or so, the price of lithium carbonate. And that seems poised to continue if you look at any of the analyst forecasts out there. And uranium provides us with lots of optionality. Again, our uranium asset ultimately should be in its own vehicle, but uranium as a commodity looks very well poised for a strong recovery here. And that's it. I thank you very much for listening, and look forward to a dialogue in the future with any of you that need to contact us for more details. Many thanks.
Well, good day, everyone, and thanks for joining us. I'm happy today to be presenting Minera Alamos. It's a new gold producer looking to build off our first mine with a series of mines over the next couple of years. And what I'll speak to today, apart from the projects themselves, is why I think we are particularly well insulated from the inflationary pressures that are going to be affecting our sector. I don't think just this year, but in years to come. I will be making a few forward-looking statements during the course of this presentation. So what I'd like to start with, and I've mentioned this in a few presentations in the last few months, where I've thought about what separates Minera from other junior producers. And I think the difference for Minera is we can achieve what I coined for this purpose, escape velocity. Actually be able to build out your first mine, and then by building a series of low capex mines sequentially and rapidly because of the permitting timelines in Mexico, we can achieve that escape velocity, leave the 100,000 ounce a year, which is a very respectable production level behind us, though, in the rearview mirror, and look to build off that initial starting base to build something much more suited as an intermediate gold producer in time. It's a marathon, not a sprint, but I think with the permitting and low capex builds that we're talking about in Mexico, where all our assets are focused, it's something that we can do in actually a pretty rapid time by industry standards. So we've been operating in Mexico under different companies for the best part of 13, 14 years now. Our team are proven mine builders. Every mine that they've built has been a success. And we like to specialize on minimizing upfront capital requirements. And that's not just about pushing capex into sustaining capital. These are low capex, typically open pit heap leach operations. And we do it with our experience in probably an industry leading low capital intensity way. Our first operation, Santana, and I'll go through each of these in a little bit of detail, is going through ramp up, commenced operations last year. Our second operation that we plan to build next year should be entering permitting in the coming couple of months. And we have a third project actually already waiting in the wings, fully permitted. We have a strong balance sheet, we're debt free. And this multi-mine strategy, I think, is a great way to provide organic growth. Regardless of where the gold price takes us, we're obviously in a position to capture it as a gold producer, but we don't need rising gold prices. With a rising production base that we're looking at over the coming years, we could do very well as a growth story in a flat or even declining gold price environment. And something to point out, we built this business model in a $1,250 gold environment to operate in a $1,250 gold environment. Everything else is gravy. I mentioned at the top that we're pretty insulated from inflation. We're not immune, but we are very protected with the nature of our low capex builds. The first mine that we completed last year in the middle of a pandemic cost us $10 million US to build. Our next two mines will be roughly 25 and 35 million capex numbers. So not the hundreds of millions of dollars, which can be very impacted by cost overruns. So we're debt free and sitting with a market cap that's actually a little higher than that. Something off on that slide, but debt free, covered by 5 analysts, largely retail, 60% retail, 40% management institutions. I think as we go into production, we will see this story becoming more in vogue with the institutions, both this year and next. As of our last financials in September of last year, we had a little over $12-13 million in cash. We're operated with a strong operating team. This team has been largely together for the last 12-13 years, building a number of these mines. Where we've needed to make additions to the team, we have done so, and we'll continue to look to increase our bandwidth as our operations increase in size and scale and number. And now I'll talk about the assets. And if you're wondering what a 10 million US gold mine looks like, that's what we built. That's the heap leach pad and the ponds and the small carbon facility that we have there for recovering the gold. And that, you know, in looking down from the actual open pit itself that we're developing right now. So yes, a 10 million US mine is possible. Our team have done it in the past. We're doing it again now with this one. I'm sure this will be no different in terms of its success and operations our team have built in the past. We like northern Mexico. Mexico has a very good permitting environment, but as a country goes, it's very different in different parts. Northern Mexico is certainly, you know, a favored part of the country for our operations. So Santana is in Sonora, our second mine that we'll look to build, hopefully after successful permitting over the course of this year. And Cerro de Oro is up in northern Zacatecas, and La Fortuna is in Durango. So our first operation, this is the mine that we built last summer, built actually in the middle of a pandemic, 10 million US, hard to believe, but is going through ramp up. We had about 4 mining months as mining rates scaled up at the back end of last year. Actually reached our year-end target for ounces of gold on the pad, roughly 9,000 ounces by year-end, and those operations continue right now as we head towards commercial production. We're using the ramp up. We don't have a gun to our head, being debt free. We don't have completion tests against debt covenants here. So we're taking our time during ramp up. I think it's important that once you've made that declaration of commercial production, really your quarter prior, you're actually seeing net cash generation at the company level. That's a good sign that your operation is working fine. So we're not in a rush. We're using this ramp up to ensure that it's not just a well-run operation, it's the best run operation we can have as we enter commercial production. And that was actually the first blast last summer, and actually the first very symbolic gold that was poured in November. Right now, leaching kinetics are very good. We're seeing in excess of 70% recoveries inside of 30 to 45 days, and those recoveries continue to increase. Our test pad that was done at the operation at the site a few years back indicated recovery should get into the low 80%, and we look like we're tracking very well there. So I mentioned earlier, you know, we're using this to optimize the operation as we shift from kind of a cash flow neutral situation to a cash flow positive as production rates continue to increase. We are very soon going to start drilling some of the other gold-bearing breccia pipes, which represent the upside on the project. And I'm happy for that because our business model is all about exploration alongside production as well. So stay tuned on announcements as we start moving to some of these other known gold-bearing pipes, which will represent the upside to the Santana mine there in terms of both resource growth and mine life. Our second operation, this one, I'm not going to underscore the significance. When we announce surface rights agreements, hopefully around the end of this month, it will represent a major step forward for this company. We will have it into permitting, you know, in the weeks and months that follow. We're expecting federal permits back, if we can keep that timeline, around Q1 of next year. And we will have lined up likely debt funding to build this operation so it can come on stream in the second half of next year. We were always delighted with this acquisition a few years ago. We basically picked up a 600,000-700,000 ounce resource for about $10 an ounce. It's going to represent a very significant mine for our shareholders. And we are actually going to do a PEA on this, which we hope to release probably Q3 of this year, which will show just how good those economics are. Cerro de Oro and Santana should drive us to being a plus 100,000 ounce a year producer coming out of 2023 with another project waiting in the wings. So really excited that this is a project that I think can allow us to achieve that escape velocity. Current gold prices, this resource is considerably bigger at very much similar grade. probably approaching a million ounces, and we know where we can add to that resource as well. So our team believe in time this will be a 100,000 ounce operation in its own right. And I'm very excited about the exploration upside surrounding both the core claims and elsewhere on a broader mineral claim that we have surrounding the area where we've already identified new exploration targets we'll look to be drilling in the second half of this year. Our final project right now is the La Fortuna project in Durango. We did a PEA on this in 2018. The economics of it were exceptional. Sub 500 AISC, 1250 gold price assumption, and a 93% after-tax IRR. The reality is this was based off a high-grade starter pit, 5-year life, 3.5, 4 grams, open pit, 6-to-1 strip. So the economics are fantastic, but if it's got a limitation, it's like no one really likes a 5-year mine life. So we'll be using cash generated from our first 2 operations to ensure that by the time we build Fortuna, it's a bigger operation. It's got more life to it, and it's probably got a bigger production base than just the 50,000 ounces. And we think it makes more sense to delay it and drill it than bring it on in this very, very good baseline economics for this project. But we know it can be a lot better than even these numbers suggest. And that's partly because there's brownfields extensions to that pit and exploration upside on the claims around. So it needs funding from Cerro de Oro and Santana. So what does this mean? Right now, we've got a Santana maiden resource coming out in the next couple of months. We're sitting on around 1.5 million probably ounces, close to it at conservative gold price modeling, which we think is a good base for all our operations to work off. And where do we see the growth? Well, over the course of this year, Santana will continue to show itself both as a pre-commercial and then commercial operation, looking to bring Cerro de Oro on next year, and then see expansions from both Santana and Cerro de Oro while we drill out La Fortuna. And we're not opposed to be looking for a 4th development asset to fuel the pipeline beyond these projects. In terms of news flow this year, you're going to see constant updates on obviously mining at Santana, but also exploration there, as well as this all-important kind of news, hopefully around month's end, early April, in terms of the surface rights at Cerro de Oro, which is a real major gating item for us to start talking about that project a lot more and showing it for what it can be in terms of that PEA that we plan to put together. So with that, I appreciate you taking the time today, and I hope you've had a very good conference. I'm sure there are lots of very interesting stories out there. Glad that you wanted to pay attention to us.
Hello, everyone. Happy to be back here with Six again to provide you with an update, and I'll keep it balanced. We'll certainly update everybody who is well up to speed in the story and some of our exploration initiatives this year, as well as our operational outlook, and then also make sure for those of you who are new to the story to provide a little context and background to help bring you up to speed. So let's get into it. So Karora Resources our assets are located in Western Australia. We have 3 primary mines or collections of mines, I should say, in Western Australia in the Kalgoorlie Belt. The Kalgoorlie Belt is the most prospective belt in all of Australia and has produced the most gold of any region in the country. And we are very proud owners of the largest land package, or the largest covering, which is 1,900 square kilometers of that area. So the Kalgoorlie Belt runs all the way from the Kalgoorlie Super Pit up here to the north, down through our property, and passes down to Norseman and near our Mount Henry deposit. Our 3 operations are the Beta Hunt underground mine, the Spargos high-grade open pit mine, which we've recently started mining, as well as our Higginsville Central collection of open pit mines and our mill in the middle there. All of those deposits are feeding that centralized mill, which is currently operating at 1.6 million tons per annum. And we are well on our way towards building our production level from approximately 120,000 ounces this year, if you choose the midpoint of our guidance, to 200,000 ounces by 2024. All of this gold production is self-financed. You'll hear me say that a couple times over the course of this presentation, between our operational cash flows and our liquidity, available liquidity, I should say. And we also have a very aggressive exploration program in that area right across the property that I'll be updating you on today. So stepping into the management of the company, for those of you that are new to the story, we are led by Paul Hewitt, who was the former chairman and CEO of Klondex Mines. He took that from shortly after inception all the way through to an eventual sale to Hecla Mining. A very similar story to what we've been building here at Karora over the past couple of years since Paul joined in late 2018 into early 2019. And that's a hub and spoke model. So he took Klondex Mines from a single asset that was toll milling all the way through to a multi-mine company feeding a centralized mill. Very similar to what we've done at Karora, where originally the company only had the Beta Hunt underground mine that was toll milling, and in mid-2019 added the Higginsville mine and mill, and fed both Beta Hunt and Higginsville into that mill. And then in 2020, we acquired the Spargos open pit mine, which is also feeding it today. So that hub and spoke model has been done before, and the track record of success from Klondex is certainly parlayed well into Karora. Graham Sloan, the gentleman on the right, is our Managing Director of Australian Operations. He's been the spearhead of the operational turnaround that we experienced over the last couple of years at Karora. He's the former CEO of Perseverance Corporation and was the gentleman behind the construction of the Fosterville mine. Certainly a mine that has worldwide recognition, and Kirkland Lake, of course, now Agnico, has been enjoying the success of that operation for a long time. So Graham has a very strong technical following in Australia. When he came into the story in early 2019, he brought a wave of new technical talent with him, which I've led the charge with respect to the operational turnaround. So very fortunate to have both of them leading the charge for us at Karora, and both are based in Perth, Australia, where our head office is. Rounding out the team at Karora is myself, the Executive Vice President of Corporate Development. Prior career was spent at GMP Securities as an equity research analyst, and prior to that as a mining engineer at Wardrop Engineering. Barry Dahl and Michael Doolin are both ex-Klondex as well. Barry Dahl is our CFO. He's also the ex-CFO of Argonaut Gold. And Mike Doolin was the former Chief Operating Officer of Klondex and also has other C-suite experience and is leading our technical charge here as well. So a lot of the team that has done this before is doing this again and has done this again at Karora. With respect to ESG, if you were listening to our conference call Monday morning, we did announce that we've been taking ESG very seriously. And in fact, we're going to be updating the market with our inaugural ESG report by the end of this quarter, which is a huge milestone for Karora and something that we're very proud to have accomplished. It's been about 18 months of hard work to get that to the place where it is today. A lot of discussions and work with stakeholders as well as external experts in order to compile that document. It's a very substantial document that'll be updating the market on our entire ESG strategy. A very strong component, or important component of that, I should say, is our net zero initiative here, which is to lead the charge on decarbonization of the mining industry. We made a strong statement middle of last year via our partnership with the Net Zero Company, and then followed that up in the fall with a strategic investment into an Australian afforestation project. This is going to work hand in hand with an emissions reduction strategy, a medium and long-term strategy, which we are currently developing with the Net Zero Company, which will include evaluation of a number of different initiatives, including alternative power generation, the evaluation eventually at future fleet replacement cycle times of potential use of electric vehicles, biodiesels, a whole range of options that we have that may or may not be cost positive now. If they're not today, they will be a little bit later on. That'll be leading the charge on our emissions reduction strategy that works hand in hand with that investment I previously made. We're very happy to invest in the Mount Sandy Conservation Project. We all remember the bushfires of 2019. Those of you that have seen me on a call before have heard me say this before. We're proud to be part of reforestation and protection of biodiversity in Australia, especially when it's on Indigenous land and employing Indigenous people. So really congruent with our initiatives at Karora, and you'll get more updates on that in our ESG report. Stepping into the track record of production before we start looking forward into 2022 and really talking about exploration. Since we acquired the Higginsville mill in mid-2019 for $50 million from Westgold, we have delivered consistently on the operational front, both with respect to production at 25,000 ounces a quarter initially, now, of course, ramping up as we build into our growth plan, but also with respect to the reduction in our all-in sustaining costs. Initially, this company was around the $1,300 an ounce mark in all-in sustaining costs, and we stated in late 2019, early 2020, that we had a target of getting to that 1,000-ounce mark. Very happy to say that despite the continued ongoing challenges in Western Australia with COVID restrictions and the impact it's had on the entire sector, we have hit that target, and we reported this morning a 2021 all-in sustaining cost number of $1,012, despite those increased cost pressures, which was fantastic. On an ounce perspective, we met the top end of our guidance for 2021, just under 113,000 ounces, which we were very happy to achieve. Looking forward, we have this slogan called the Path to 200. We are building to a 200,000 ounce a year producer from our base of about 120,000 ounces, if you pick the midpoint, as I said today. But also you'll notice the decline or decrease in all-in sustaining costs as we get up to that 200,000 ounce a year mark. And that's going to come from several different areas. But what'll be good here is just to step into a couple of the numbers in some more detail with our production and cost guidance here. We did recalibrate our numbers for 2022 about a month ago. What we did was we widened the range and we lowered the top end of guidance by about 5,000 ounces. And we had a 12% increase in our all-in sustaining cost numbers and capital numbers. For those of you new to this story, this was a very prudent move that we made in order to capture the ongoing pressures, of course, of COVID-19 restrictions in Australia and supply chain impacts. And we went out and talked to our top vendors at Karora and tried to get quotes for them for this year and to get a sense of what inflationary pressures they were experiencing. The responses we got showed anywhere from about 7% through to 15% of impact on input costs. So we increased our numbers by about 12% for this year. All of this is, of course, within the original guided range. And we wanted to put numbers out to the market that really level set expectations in the reality of the current operating environment. And we're very comfortable with these numbers moving forward. Of course, when you make these moves within, I guess it's Murphy's Law, within a couple of days, things go the other way. So we're very happy to announce that as of March 3rd, the Western Australian state borders are open for the first time in 627 days. That number is real. And you no longer have to quarantine on either side of the border. So what we are expecting is some alleviation, particularly in the labor market. It's been a very tight labor market in Western Australia for talented and technical labor, as about 40% of the workforce that works in Australia in the mining industry comes from out of state. So as this border is opened up and is more realistic for people to fly back into work, remember that Kalgoorlie is a fly-in, fly-out, predominantly a fly-in, fly-out camp area. We expect some of those labor pressures to somewhat alleviate. Now, of course, it's not going to happen overnight. This will take time. And Australia, with respect to COVID-19, is, in particularly Western Australia, isn't a particularly challenged moment right now. But as we know with the rest of the world, they will get through that, and we'd expect some alleviation there. So stay tuned there. One other area I do want to highlight here is that for the first time ever under Karora, we included a nickel guidance this year. So we included guidance of about 450 to 550 payable nickel tons. And that's going to come predominantly from, or entirely, I should say, from remnant nickel mining at Beta Hunt. As we all know, or for those of you that are up to speed on the story, there's some very exciting new nickel potential, which I'll talk about in a few slides here at Beta Hunt. But very importantly, this was done at our budgeted cost, which in today's nickel environment looks very conservative, of $16,000 per ton. So there's significant movement or room for additional byproduct credits as we step into mining those areas at higher metal prices, and then, of course, expanding nickel production in future years. Last bit on this slide here is we have not changed our 2023 and 2024 numbers. We're very comfortable with those. Hopefully we're not sitting here a year from now in the same COVID-19 constrained environment, but we're very comfortable with those. We have a healthy buffer built in, and we're on track to deliver. With respect to the growth plan itself, it's going to come from two areas, and this is for people that are new to the story. It's going to come from the addition of a second decline at Beta Hunt and the expansion of our mill to 2.5 million tons per annum from 1.6 million tons per annum today. That is going to be driving the growth almost entirely from Beta Hunt. So Beta Hunt is approximately 70 to 80,000 ounces per annum currently. That's going to increase to about 150,000 ounces per annum by 2024, with the remainder of that production profile to 200,000 ounces to be filled by Spargos and our Higginsville properties. With respect to Beta Hunt, let's step into it because it is the backbone of the operation. The expansion that we're going to be going through is going to be pushing Beta Hunt from 1 million tons per annum to 2 million tons per annum per year. That's a terrible two, I apologize. The mill is going to be expanded to 2.5 million tons per annum. So you're going to have approximately 80% of your tonnage coming from Beta Hunt and actually coincidentally about 80% of your ounces. So it really is the valuation backbone of the company for the foreseeable future. We have a substantial gold resource, and we also have a remnant nickel resource at Beta Hunt. We are going to be updating both of those resources this year. The first one will be the gold resource that we'll be updating around about the end of the quarter here on the gold side of things. Some very interesting new zones that will be included there. And the nickel resource will be updated by mid-year as well with the inclusion of a new zone we call the 50C, which I'll outline for you in a few slides here. With respect to the advantage that we have at Beta Hunt, so one of the key components of the low-cost operating environment of Beta Hunt is the fact that for 40 years prior to it being a gold operation, it was a nickel operation. How is that a benefit to us? It's a benefit to us because we have over 400 kilometers of existing development already in place at Beta Hunt that we get to leverage for mining of gold and now increased nickel. That is a huge advantage and saves us a tremendous amount of development costs, as well as the ground conditions we're operating in are superb. We're mining and our development is in a very competent basalt unit. What does that mean? It means our ground support requirements are minimal, and we in fact do not have any backfill requirements. For those of you that have looked at long hole stoping operations in North America, as I did for a significant amount of time as my analyst during my analyst career, the costs associated with backfill there were substantial. The costs associated with mining at Beta Hunt are substantially less, which means we enjoy significant margins even at that grade of 2.7 grams per ton. I should mention that the grade of 2.7 grams per ton does not allow any influence from coarse gold intercepts, which we do encounter at Beta Hunt. There's a lot of history there for those of you that remember the RNC days, but we make sure that doesn't influence resource grades or our mine plan. So we really do generate significant cash flows at the average grade. One other area I do want to highlight on this slide is the green block here, which we'll talk about in a couple slides, the Larkin Zone. The Larkin Zone is going to be included for the first time ever in our 2021 updated resource, just coming out in several weeks here, so stay tuned for that. We took it from inception through to resource category in record time. So as we grow into 200,000 ounces a year, where do we see the company moving? We just recently crossed the $1 billion market cap threshold. Very excited to announce also that we've been added to the GDXJ index, which is a huge step for Karora and its shareholders. That rebalance will be happening towards the end of this week. The announcement was made on Friday, so very excited about that. But there is a lot of room left to grow. When you look at the average market cap of the 200,000 ounce a year producer group, it's about $1.5 billion. It's a 50% upside to where we are today. And as we continue to execute on our plan, we would certainly expect to continue that rate, both on a NAV accretion basis, but also on a PNAV multiple expansion basis. Wrapping up here, just an overview of our shareholders and our analyst coverage. We did finish the year with a very strong $91 million. We updated the market on our financial performance in 2021 just this morning. Met all the targets for 2021, which was excellent. Very strong performance financially as well as operationally, despite all those challenges that we encountered last year. Those challenges continue into this year, which is one of the reasons why we did recalibrate that guidance. Shareholder base continues to grow, some very, very strong institutions, several of which who have been buying off the back of our strong ESG initiative. So hopefully that continues. We're very proud of that. Great analyst coverage. You'll notice a lot of their price targets now are below where the current share price is. That is predominantly due to price decks. We've seen a strong shift in the entire market, so I'd expect a lot of those targets to move as well. And up and to the right is the direction we've gone and the direction we intend to continue going. Been one of the best performance junior gold stocks out there, especially when it comes to the producer sphere. So we hope to continue that success.
Good day. It's a pleasure to speak with you all at the 6IX conference and get an opportunity to talk about my company, Cypress Development Corp., and our project, which is the Clayton Valley Lithium Project in Nevada. This opening slide is a view of our project site. We're standing about in the position of the center of an open pit, looking across to where our plant site will be on the ridge in the foreground. We are an advanced stage lithium project. We have a feasibility study underway. We're standing on this clay deposit, which we will talk about in the extraction of lithium and how that relates to resources within the state of Nevada. Next slide, please, and one after. Okay, our focus with our project is extracting lithium from clay. We do this through a unique chloride leaching process. This process also includes a component of direct lithium extraction where we use ion exchange to pull the lithium and recover it from solution. We pursued this route because we believe it will create a project for us that's sustainable, both in terms of materials and supplies coming to our site, and also generate a positive environmental aspect, ESG values for our project. Our project has a large lithium resource. It's multi-million ton, sufficient to support a 40-year project life. We have advanced technology in that we have this chloralkaline process combined with direct lithium extraction. We also have a pilot plant, which is in operation. So in the area of facilities, we're advanced in that we have a permitted facility where we're doing our research. We also acquired last year the water rights to conduct our leaching process. And if our water balance is correct, we should have sufficient water resources now to proceed with full production. Next slide. We are an advanced stage lithium project. We're in Nevada. We did a pre-feasibility study, which we amended in 2021. And we now have a feasibility study, which is underway. We kicked that off last week, announcing that Wood PLC would be our primary engineering contractor. We also are using global resource engineers as our resource modelers, and we'll continue to do that in the feasibility. The focus this year for the company is our feasibility study and permitting. The key to this is our pilot plant operations, which have been ongoing. We built a pilot plant last year, kicked it off in November, December, and so far we've completed stages of testing, 3-day, 7-day, and 14-day continuous operations where we were running 24 hours a day. We're planning to do additional sampling for our pilot plant operations, and this year we'll also be looking at some hydrogeologic work whereby we're going to adjust our point of discharge for the water that we're going to use in our pilot or in our full operations and do more work on our permitting. Next slide, please. Cypress is financially in excellent shape. We had $23 million as of the end of last year. We raised in a private placement in January, $18 million additional dollars. So our treasury is in the best shape the company's ever had. We have 134 million shares that are issued and outstanding, and another 150, or a total of 152 million shares that are fully diluted. We also had today coverage initiated on us by Alliance Global Partners. So that's another step forward. As you see on the chart, stock chart, lithium prices we've trended along with the rest of the companies in the sector downward. But I think our project is in excellent shape, both financially and where we're at technically in advancing forward. I think that we'll see a reversal in that in the coming months. Continue, next slide. Our project has a strong project-focused board, the company does, both in our board and management. Our board is led by Cassandra Joseph, who is a Reno-based attorney. She has an excellent background in environmental law. We're also aided by others on the board, which have long careers in project experience, bringing the project forward in development. Next slide. Our managed team also has a long track record in Nevada, led by myself and our CFO, Bram Jonker. All our people here have had experience with producing and developing assets in Nevada. Next slide. Nevada has a wealth of lithium in clay and clay stones. Here we see listed in the lower half of the slide the main projects in Nevada which have resources identified. If you were to add up the total of the resources in the ground for all of these, you'd have a total which would exceed 10 million tons of lithium carbonate equivalent, or lithium, in the ground. That would put Nevada as an entity behind the Bolivia and Argentina in total resources of lithium. The problem here is getting that lithium out of the ground and into a form that we can process it. And that's the focus of Cypress, is our testing program with our pilot plant. We are one of 3 companies here which have advanced to the pilot plant stage. Our project also adjoins brine resources of Albemarle, their Silver Peak operation, which has been producing for years and years. That's a key part of what our strategy is going forward in looking at a chloralkaline process and being able to come up with a process which is compatible with the environment around us and water resources of the valley. Next slide. Our project is well located, both physically in terms of the terrain and with respect to location and infrastructure. We have 6,500 acres in Clayton Valley. And as you see on the right part of the slide, it's adjoining Albemarle Silver Peak operation, lithium brine. Our project is about halfway between Reno and Las Vegas. Our pilot plant is situated 100 miles southeast of the project. Continue. This is a view of our pilot plant, the interior of it before we started operation. On the right-hand side, we have the pilot plant building down at Amargosa. It's a 12,000 square foot building, which we now have a long-term lease on. We're quite happy with this location that we came with a permitted site, good project management team already in place, and an existing 8-acre facility. Continue. Our project itself has no shortage of resources. We have 1.3 billion tons that were identified in our pre-feasibility study. That totals 6.3 million tons of lithium carbonate equivalent. But like many other clay projects, the key here is having the process to be able to convert that over into something in a mine plan and reserves. We've done this in the PFS. We're looking about the same situation in terms of reserves and scale as we go forward into the feasibility. We have 200 million tons in reserves at a grade of 0.12% lithium. Next slide. There are features of our deposit which are key for having a low-cost operation, being able to work which is relatively a low grade for lithium. However, what we're looking at in our project is being able to do something at a scale comparable to what you would have in porphyry coppers, where we work with lower grade but favorable characteristics of the deposit to generate that low operating cost. Here we see a typical profile of our deposit, and this is true both vertically and laterally across the property, is that we've got good continuity of lithium values in the clays. It's a soft material, which means that we need no drilling or blasting, minimal strip ratio, and what is key for us is it's got relatively low acid consumption. That low acid consumption means we generate less solids when we put that material into solution, and it's the overall lower operating cost because we are using less acid and less power. Next slide. These are results from our pre-feasibility study last year. I show these just for a reference point because we're using about the same basis as we go into feasibility. We're targeting a lithium grade around 80 to 90%. Or recovery. Our operating rate is stay the same, about 15,000 tons a day, targeting that 40-year mine life. One thing that's notable here is that the base price of lithium we used in the PFS at $9,500 a ton. That's significantly up these days. We're looking at lithium prices on the open market of around $60,000, $70,000 a ton. We're going to study that through a market study in the feasibility. Likely we use something in the $10,000 to $20,000 range. We will still try to target that 27,000 to 30,000 tons a year of lithium carbonate production and try to keep that operating cost low. Next slide. Our general arrangement will remain the same as we had in the PFS for the feasibility. Our pit extends for about 2 miles in length, about a half mile wide. We have a purchase agreement for an adjoining property, 160 acres at that northeast corner of the open pit. That will come into play as we work in the feasibility and see if we can add some additional higher grade early in the mine life. Our tailings facility will get relocated along the southeast edge of that pit, so thereby opening up potentially more material to the southwest as well. Again, we have low strip ratio on this, less than 0.3 to 1, and the ability, because it's a long, shallow pit, to use conveyor haulage as our means of getting the ore out of the ground. Next. And looking at our processing alternatives, we selected hydrochloric acid as an alternative over sulfuric acid, in that we're able to utilize the chloride brines that exist in Clayton Valley as our source for processed water. We found out both in the bench scale testing and in the actual pilot plant operations that this is a huge advantage for us. We get better filtration, better washing of those tailings. We're able to make a better filter cake both in our PIR section and also in our tailings. And it's a whole self-contained process, which means all we need to do is add a source of power, put that to our saline solution, and we're able to generate both the acid, the hydrochloric acid for the process, and our sodium hydroxide, which is our neutralizing agent, all at one step. So a completely self-sustaining process, potentially. Next slide. Here we see the layout of our pilot plant. Relatively simple. The solids come in at the top through the sample feed into a leach tank, into a primary thickener. From there, the solids then move to the left into a bank of 3 thickeners, which we use for countercurrent decantation and washing of those solids to produce the tailings. We replaced our vacuum belt filter in this slide with a plate and frame filter, which is giving us a much lower moisture on our filter cake for our tailings. The pregnant leach solution, the solution then moves into a primary and secondary impurity removal. This is much like conventional brines or hard rock lithium operations have, where we're treating that solution with a neutralizing agent, here sodium hydroxide. We're dropping out the iron, aluminum, and other impurities in that step and moving that filter cake off to a tailings product. And then we take that solution, which is purified, and move it into our Lionx lithium recovery, which is an ion exchange process. We produce a higher grade concentrate lithium solution, which we then treat offsite to make lithium hydroxide. Our solutions then move into tertiary impurity removal, where we drop out the remaining calcium and then recycle that, complete 100% recycle of the solution that we have in the plant. And that's a very positive feature environmentally and both in water balance for the project. We have a number of objectives which we're working on with our pilot plant. We completed our last run of 14 continuous days last month. We're still waiting on the last half of assays from that test work. But what we know so far is that we're getting good lithium extractions. The leaching's working well. We do produce a very good tailings product. I'm pleased with the way that's worked out. PIR section needs a bit of improvement on our performance there. We will have full assays out probably later this month and be able to report them as soon as possible. Again, more of the results, preliminary steps. We're pleased with where the direct lithium extraction areas has been performing. You see on the slide here 2 photos. The one on the left is our pregnant leach solution as it comes off of the leach tank. That's in thickener 1. And on the right, you see our filtered product, which is then coming off of the PIR section, and that runs into our ion exchange. Quite pleased with the impurity levels that we have, both in this section through the PIR and also when we're exiting the ion exchange and taking that solution into the tertiary section. A couple more photos of the plant site. On the right, you see bulk bags, 1-ton bulk bags, which is our sample. We feed a ton of clay a day to produce about a half gallon a minute of lithium solution, which is then fed to the ion exchange. On the left-hand side is a layout of the plant. On the left, you see the sample feed, the tritter, which breaks down the clay into the green jacketed tank, which is our primary leach tank, and then that bank of 4 thickeners, which does our countercurrent washing. We do have an on-site assay facility and an ICP. We've tested all our samples before they go off to an external lab for a final assay. What we see on the left-hand photo is our bank of thickeners, and on the right is that PIR, SIR section with thickeners and plate and frame filters. Okay, summarizing some things on our ESG values. A lot of our environmental approach to the project is embodied in the chloralkaline process combined with the DLE recovery. We see this as our opportunity to make a project which is sustainable and has a very nice, clean environmental footprint to it. We see definite advantages going forward into our permitting on that side. And lithium is a critical element for the United States. It's been identified as such by the Biden administration. And we are looking strongly at how we bring our project forward and are able to make a project which relies mostly on materials in the USA and is North American focused. So in summary, we've got an advanced stage lithium project. It's unique in its approach and leaching and recovery, and with positive ESG values. Our company has a strong treasury. We've got an additional $18 million, which we just brought in from a bought deal financing. So the company is very well financed. Our pilot plant program's underway, and we're gearing up for the next round of testing, which will support the feasibility study, which we now have in progress. Our permitting is advancing, and we're looking forward to kicking off an environmental impact statement sometime this year. So, and in terms of upcoming news, the whole focus is all on the pilot plant. We're looking at the results right now that we have. We have about 2/3 of the assays in hand. What's upcoming is release of those results and sitting down with our consultants, determining our next steps to move that feasibility study along and then get us into permitting. I just want to say thank everyone for listening to our talk today, and I appreciate the time.
Good day. This is Dave Christie, from CEO and President of Orford Mining. Thank you to SIX for holding this spring conference. I think it's a timely thing with metal prices currently flying. Orford Mining is a mining company focused on exploration in Quebec, primarily for gold, but also for nickel, and we'll go through those projects as we go through the presentation here. So I will be making some forward-looking statements, so I'll have you read those at your leisure. So a few key things to take away from this presentation at the end. First of all, we have a very strong balance sheet. We raised $1.92 million in August, another $4.4 million in December. Alamos Gold is a very supportive shareholder of ours at 23% and has been since 2019, and has participated in all our issues since then. And we have a widely held ownership basis with both strategic, institutional, and retail shareholder base. We have three key project areas. First of all, the Kegevik project. This is our key gold project, 390 square kilometers of land in the Cape Smith Belt. We believe we've discovered what is a new gold district here. We'll go through why we think that. In 2021, we spent about $3.8 million, principally concentrated on the IP Lake structural zone, where we have high-grade boulder trains and glacial dispersion train. And this year, we'll spend about $3.5 million, also concentrated mostly in that area, as well as the Interlake area, and principally on diamond drilling. We added four new projects to the company in 2020 and 2021. These are all situated in the Abitibi. They're all gold focused. They're in the Chatel region of Quebec. Four of them we've optioned, and one of them we've optioned. Four of them are wholly owned. We believe we are in an area that has not seen exploration since the mid 80s, when Agnico Eagle closed their mine in 1993. It sits right next door to that mine, the Eagle Tail Bell mine. So this is an exciting project for us. We're currently on a drill project there right now on the Chatel Eagle option. And lastly, but not least, is our West Raglan Nickel Copper PGM project. Wyloo Metals of Australia is currently earning into the project. We are the operator. They have to spend up to $25 million to earn 80% of the project. It's a 707 square kilometer piece of land in the Cape Smith Belt, just down the way from the Raglan nickel mine, which sits about 90 kilometers to the east of us, which is a world-class nickel mine, grading 2 to 3% nickel, percent copper, and 3 to 4 grams PGE. So very high-grade project they have there, world-class. We have very similar grades on our project, and with a good strike length already. And this year, Wyloo has agreed to spend $4.9 million on the project. So we have a lot of work to do there, mostly drilling. Last summer, we identified targets through geophysics. So we're going to go through all that. Just quickly on our management team, I'm an ex-geologist, spent about 15 years working as a geologist for a number of companies. After that, I was with the Scotia and TD Bank as a senior equity analyst. And then I managed money with the Dundee Group. I was also CEO of a company called Eagle Hill Exploration, which through a four-way merger created today's Osisko Mining. It was the asset that's in Eagle Hill, which is the key asset at Osisko. And I've been on a number of boards as well. Alger St. Jean and Michel Sorrentino are our two key geological people. Alger and Michel have many years of experience both in nickel and gold. Cindy Davis is our CFO. And then we have a very good experienced board. John McCluskey just joined our board. Or last year, he's the CEO of Alamos Gold. Ben Pollinger, ex-VP of Exploration of Exelon Silver, is on our board. And Monique Rabideau joined our board this past year as well. And she's a lawyer with the Thompson Group. Just quickly on our market cap and capital structure, you can see we have 149 million shares outstanding. At the end of September, we had $2.5 million in the bank. And of course, I mentioned we just raised some money at the end of December. And you can see how our shareholder base is widely distributed. Currently trading at 16 cents, I believe we're quite undervalued based on the projects I'm about to talk to you about. So just quickly, when you look at where we are, we're sitting up in the northern part of Quebec here. This is an area that has two nickel mines already. We've discovered what we believe is a brand new gold district at Kegavik. The West Raglan project is a lookalike to the Raglan mine and the Nunavik nickel mine, which sit to our east. And then sitting down in the Abitibi is the Chatel Eagle, McClure East, Chatel South, and Chatel Omega projects. And in addition, we own two royalties in Colombia. We got those by way of buying a private company. For the cash that it had on hand, it happened to hold a couple of royalties. Looking in the northern part of Quebec, we're about 60 kilometers from the coast, from the town of Saluet. So we use that as our strategic logistics point. So we ship material to Saluet and we bring it across land to the projects. We also bring people in from Ververnatuck to our strip, which is on our project here. We have a camp for 65 people, which we share between both the Kegavik and the West Raglan project. So that's our logistical situation. We're about 90 kilometers west of the Raglan road network. Raglan, of course, has a port up here at Deception Bay, which they ship their concentrates out from, as does Nunavik Nickel. So we're not far from those guys. So that's a logistical advantage to where we sit there. The Kegavik project is a high-grade project. We found gold across the project from end to end. This is the reason we got excited about this project. After our first year on the project, we did prospecting across the entire project and found high-grade showings from end to end, 40 kilometers east-west. And this excited us in a big way. So we've since then been mapping and prospecting and drilling across the entire project. You can see the grades here: 648 grams, 283 grams. These are unheard of and surface showings on one project. So we know there's a gold endowment here. We are the first people to explore this project for gold, for anything really. There was 2 holes drilled here for nickel by Falconbridge in the 90s, but that's really the only work that had been done on this project prior to us. So this past year, we did a lot of till sampling to try to understand the eastern central portion of the project, the IP Lake Shear Zone and parts to the east. We're still waiting on the majority of these till samples as we speak. About 500 of them still have yet to come in. The labs have been extraordinarily slow this year. But what we did in the summer was we rushed about 100 samples to get the cutoff we needed. This is the IP Lake Shear Zone. We wanted to see if we can get a cutoff for these high-grade till samples we had the year before, and we did. We got zeros basically just to the south. So we know that the ice moving from south to north here, that the IP Lake Shear Zone is likely the source of most of that gold and structures that cut through it. And that's sort of what we've really learned this past summer from our drilling and our sampling activities. These boulder trains that we see here, the Anik trend and the Eric trend and the Dumbbell Lake trend. Anik is about 3.7 kilometers long. We believe it is the source for a lot of the gold in the area. And we believe it's probably a structure that sits just beside that boulder train because it's very lenticular. It doesn't flame at all. And we believe, and the grades are very consistent from end to end. So plus 50 gram kind of material. So multi-ounce grades across the entire mineral terrain. So just a look at the drilling. We've drilled about 56 holes in the years we've been here since 2016. You can see the holes in white there are this year's holes. Almost all the holes across the entire project have had gold. In the western section of the property, we have gold with copper up to about 6.5 grams combined copper gold. And then as we move across, there's golden intrusions, golden shear zones at Interlake and IP Lake. Gold and iron formations up here at par 9601. So lots of different gold across the entire project. So we're just trying to really understand this, the geology here. There's actually not a lot of outcrops, so the till has been the most useful tool as we move across this project. So just looking a little more closely at the drilling we did this year, we drilled over a 2 kilometer strike length of drilling from hole number 8 here all the way over to hole number 1. And we got gold in a lot of these holes as we moved across the property. Nothing to write home about, no huge grades, but it indicates that there is gold endowment here. But what we're most excited about is this Anik trend, 648 grams, 50 grams, 90 grams, very consistent high-grade numbers across here. Remember, ice directions from south to north. And what we did, we hit in some of these holes that had quite a bit of gold in them, was these flat-lying north-south striking structures with veining. And we believe that's likely what the Anik trend is. So we believe it's transposed structure that sits pretty close to the Anik trend. And all our geophysical and geochemical surveys so far have been north-south flow or structured. So we're going to fly some stuff east-west this year to try to target areas like the Anik trend that we believe are the source for the gold that you see in that trend. You can see that again here in this sort of cartoon of the glacial till anomalies along with the boulder trains and the grades that go with it. So long 4.7 kilometer cutoff in the dispersion train, these 2 kilometer to 3.7 kilometer boulder trains, all sort of dying out just south of the IP Lake shear zone. So we're quite confident that there's something going on at the intersection of the shear zone and extending north from it. This is an example of the boulders where we get along the Anik trend, so quite large meter-sized boulders, very angular, so haven't moved very far, very rich in sulfides and silica, and grading 50 grams to 648 grams. We also will drill what we call the interlake trend. In 2019, we drilled this trend and we hit some pretty impressive intersections of gold, 0.72 grams per ton over 32 meters right here. So we'd like to get in and drill this area that's under the lake here. You can see these till sample and boulder samples just to the north here. So we believe there's a dispersion train coming from a potential target here. This is a conductor that sits right in the middle of the lake, and that the IP Lake shear zone cuts right through there. So moving south to our other gold project area, we're into the Abitibi, one of the most prolific greenstone belts in the world. You can see our 4 projects here: the Eagle West, the McClure East, the Chatel South, and the Chatel Omega property, all sitting within there. Our properties sit just to the south of what Agnico Eagle and Maple Gold have signed a JV, just to the north of us, a 50-50 JV. This is the Eagle West property, which is where we're concentrating our efforts right now. It was an option from Globex Mining International. You can see the old Eagle pit here and the old Tellbell mine that Agnico Eagle operated for many years and closed in 1993. No work has been done here since. So we're concentrating our efforts to start with on the South Gold Zone, which sits right in here. South Gold Zone actually saw quite a bit of drilling at one point in time, most of it shallow. Grades up to 6 grams per ton over a couple meters. And you can see that there's lots of open areas between these drill holes to test out here to see if there's continuity. So that's what we're going to do. The stars are where we're drilling right now, drills on site, and we will be drilling that in the coming weeks. Moving a little further north again, back up to the Cape Smith Belt. The Kegavic project sits just to the north of the Raglan project, West Raglan project. The Kegavic project sits just up to the north of West Raglan. So this is a project that we've already seen nickel discoveries on. The grades we find are very similar to what they get at the Raglan mine. You can see their reserves there on the map. So we have the same type of material, same kind of massive sulfides. We also have potential for what they get at the Nunavik nickel mine. Before we go forward, we signed an option agreement with an earn-in agreement with Wyloo Metals, where they can earn up to 80% in the project through stage earn-ins. They spent about $1.9 million last year, and they've committed to spend $4.9 million this year as they continue to earn in towards their 80%. We signed that agreement in January of 2021, which was a big deal for Orford to help share the risk on this very large 707 square kilometer piece of land. So this past year, we did moving loop EM with a squid sensor. This is a method they use at the Raglan mine, helped increase their discovery rate by 58%. We've never used it on this project. So we used it across the northern trend here, which is a very similar trend to what they have at the Raglan mine. And we also looked at it in the southern trend, and we did a lot of prospecting in the southern trend. Our targets, you can see, are the stars there. So those are the 10 to 15 holes we'll drill to start with on this project. We had, we're looking for this type of deposit here. These are like pearls on a string. So it's very potty at the Raglan mine, but very high grade, nickel to copper ratios of 3 to 1, massive sulfide pods. Whereas the Canadian Royalties or the Nunavik nickel mine is more massive 1 to 1 nickel to copper ratio. This is an example of one of the zones we have done a lot of drilling on is the frontier area. So we're getting those 3% nickel, 1% copper type grades in here with 3 to 4 grams PGEs. This is just looking at the same zone from surface. You can see about 2,500 meter strike length with these spectacular grades, 3.2% nickel, 1.3% copper, and 3 grams PGEs in there. So what did we do this year? We did a whole pile of geochemical sampling and mapping, but we also did 67 line kilometers of moving loop time domain EM with a squid sensor. As I mentioned, this is the kind of method that they use at Raglan with a much better discovery rate. And we did that at a number of our showings, as well as some areas that look more prospective between them. We had 435 EM responses, of which 72 seemed to be higher priority and more likely to be massive sulfides. So those are the ones we're going to drill. We're going to drill about 10 to 12 of the highest priority EM anomalies. And this year with about 3,000 meters of drilling. And we're also going to do some prospecting and sampling to the southern regions of the project. We have very good relationships with the First Nations in the area and in the Abitibi, and we continue to do that with the local communities. So just summing up the company, first of all, very good strategic shareholder support with Alamos Gold owning 23%. They really like our Kegavik project and what we're doing there. We have a massive land position in what we think is a new gold district at Kegavik, and we're building a big position in the Chatel region of Quebec. We have potential for what we think are multi-million ounce gold deposits. We have a very strong and financial and technical partner in Wyloo at West Raglan, a project that is one of the better nickel projects in the world. And we also, of course, are working in Quebec, which is one of the most safe and proven mining jurisdictions in the world. And we look at the company overall, we're going to spend about $9 million this year, including the West Raglan Wyloo earn-in money. That's a lot of cash for a $24 million company. So I think it's a company to have a look at because we're going to be doing a lot of work and getting a lot of results this year. And we're quite excited about the year. Thank you very much.
Thanks for joining us on day 2 of the 6th Virtual Spring Conference. Going forward over the next 2 days, the structure of the conference is changing. Speakers from the companies who have been presenting over the last 2 days will be available in breakout rooms for you to ask questions of them live. Be sure to check out the schedule on the conference page to find out more about which companies are in which breakout rooms and when. I hope you all have a good rest of your day and look forward to hearing from you throughout the rest of the week. Thank you.